hello. I do want to mention a couple of housekeeping items here. First of all, believe it or not, this is the 10th Innovation Summit that's been produced by Always On. Interestingly, when we launched the company, it was at the Innovation Summit in 2003, which was, I believe, June 2003. And the sad thing is that my previous brand Red Herring had not been affiliated with it for about a year or 2 years, but I had pulled the plug on the old Red Herring in March of 2003. They thought that life was over, only to learn that in June 2003, life began again with Always On. So I'm just deeply feeling very old right now that I've been doing this for 10 years, not to mention everything else. But I want to welcome you. I want you to know that our hashtag is SBIS12, okay? And that we will be running the tweets as they come in on these two screens. So this replaces, in the old days, including the first Stanford Summit, what we did is we webcast, but then we had chat on the screen, right? And that was very revolutionary in those times, to do a live webcast with chat coming in, getting all sorts of fun comments. Well, in the age of Twitter, we have modernized ourselves and now rely on tweeting, but we are committed to showing you what kind of buzz is coming in. If you want to take a photograph and get it posted, you can send it to alwayson@airba.com. Okay, because Airba is the one that's running our Twitter feed, and they're a great new technology that I highly recommend that you check out. Is Sanjay going to be here? Does anybody know of Airba? Sanjay coming this time? We don't know. But he's the CEO. It's a great company. Also, I want to mention that Splitcast, our friendly people in the back who are doing the webcast, are a great webcast company. They developed their own kind of back end that gives you much higher performance today. Thanks to Sony, who's our new partner, which they're making their presence here quite obvious. It has supplied us with a couple of cool handheld cameras that you'll see that are like super high resolution and almost professional video quality. So we thank all our partners. Now, people that have come to our events know that a part of our events, we do these things called CEO showcases. And one day I was on my little hike, and I realized that, you know, I've never done a CEO showcase. So while I'm warming you up, I'm going to tell you a little bit about where Always On is going. And I do, you know, I'm looking for some investors, and we're looking for our first time, we're looking for strategic partners and technology partners. So our whole mission in life, I think, boils down to the simple concept of accelerating the pace in which business is done. So by shaking hands early this morning next to someone you might not have known, our grand hope is that you walk away from our events in a way that you meet people that you can do business with that you could have not imagined until you got here. So how are we going to do that? Well, we have our world tour of events, but we're also launching a provocative new online network. But first of all, just to kind of reiterate the Always On market, which you're all represented by. Basically, we believe there's an ecosystem that now exists all over the planet of these kind of people, and what they're all trying to do is be a part of launching multi-billion-dollar brands ultimately that emerge out of their collective support and ride the success of those companies. So I don't think I need to go beyond that for you all to understand where you're at. Although I would say I've been covering this market since I was a little boy, and I believe while we do wonderfully have a global market, that's not really as tied together informationally as nearly as well as it could be. So our big play here, the reason that anybody would give us any money, is because we are going to very simply reinvent the media business by creating a platform that will bring the profit margins back to the business, okay? But to understand why it needs to be reinvented, this is a simple chart which points out that user time on social networks has blazed by user time on all other portals. So the media world, as we know it, is dying. Business Insider wrote a great article that demonstrated that the New York Times, in real dollar terms, their advertising revenues are equal to what they were in 1950. Okay, so goodbye, New York Times. So what are the characteristics? You know, if we were to do nothing, and I speak on behalf of media entrepreneurs, if we were to do nothing, and you looked at that previous chart, what that would mean is that we would all basically wake up in the morning, go to Facebook, go to Twitter, and if one of our friends said, oh yeah, read this New Yorker piece, then you pivot off to a New Yorker piece, so you know, New Yorker pieces will still do well, or good journalism will still do well, but the people producing that content won't be the primary place that people go, so they run the risk of just becoming shadows of themselves. So that is what the New York Times, what's happening in the New York Times, it's becoming a shadow of itself, its old self. So when you look at social networks, I believe that these are the 6 features, these are the 6 qualities that that new media brands, and by that, when I started Red Herring, okay, back in those days, what I was saying is, you got Business Week, you got Fortune, you got Forbes, but our world deserved its own business magazine. So I went in, created that magazine, had 300,000 paid subscribers, and owned that niche. So what I'm talking about is that can people create media brands and reclaim a niche that's being completely cannibalized by the social networks. And so what I would claim is that any media brand that wants to reclaim its position and can think of itself as a media network, okay, and take on all these characteristics. So this is just a glimpse of what we're working on, but basically, in a nutshell, you'll create your own custom newspaper to the global Silicon Valley based upon companies that you choose to track, based upon investors that you choose to track, and based upon people that you want to connect with, right? And then you'll have all sorts of analytic apps pointing you to additional people, additional companies, additional investors, and additional trending content that fit you, because we're going to build a black box that's going to follow you around and understand you, and it's going to make sure that we're giving you a highly personalized experience. And then obviously, once you have that marketplace of people together, and by the way, if you're a company or you're an investment firm, our editors will need to approve you to be part of this network. But we've already identified 12,000 companies, so you're probably on that list if you've received any venture capital. We have a strong belief that the mobile application will be just as important to develop alongside the web app. So we will be creating this ticker format, which will actually be your homepage when you go to the web version. Make it very easy for you to see it, but it'll be transferable over into a mobile app network. So what you're going to get in the end is crowdsourced and curated editorial. And by curated into your news feed, like Facebook is a news feed for your friends, into your news feed of companies that you care about, professionals that you care about, investment firms that you care about. We will also distribute, based upon what you've indicated your interest is, we will also distribute we work with 100+ industry bloggers, people like Fred Wilson, Bill Gurley, Mark Cuban. We will be adding content. We'll be doing a lot more video packages, particularly outtakes from our world tour of events. And so we will be adding in hand-curated content, but not to everybody's news feed. Only to the news feed of people who are indicated they have that particular interest. Another trend I think is really important for media brands to understand is that you don't have to invent everything, okay? So we're going to work with a bunch of partners. HP is going to be our cloud service. Spruce Media is going to be our self-service online advertising engine. Zora is going to manage our subscriptions. eTouches is our event platform. And most interestingly, Sugar CRM is going to power your My CRM system in the network. So you have the power of a kind of a slightly minimized CRM function to look at the companies, people, and investors that you're tracking. So you have a lot more power over those lists, okay? And you'll also automatically, we will track, what kind of collaboration that goes on between you and anybody in the system, and it'll show you as a matter of record. So mashups are really important. Professionals will like it because everything is personalized, but again, most interestingly, we will be introducing you people, companies, and ideas that you have never thought about, just like we've been doing at our events. And as one of I have two spiritual guides in this project. One is my design guy, which is Roger Black, who was the original art director at Rolling Stone magazine when he was 17 years old. He redesigned the last issue of Red Herring, and he is helping us understand how to deliver, analyze social data and how to deliver it back to the members so that they can see new things. Enterprises, we're going to sell, like LinkedIn, powerful corporate subscriptions on the back end. So you can look at talent, you can look at what companies are popping in the market. The whole thing into a game. Every person and every company will be ranked against each other based upon a sophisticated algorithm of activity that's going on in the network. We hope to disrupt all of old media, but your time away from checking out other, the sites themselves. I go to LinkedIn to look at people's resumes. I don't go to their company site anymore. Crunchbase has been kind of an unsocialized AOX for many years, but a lot of us go there. And I think my good friend David has picked up on the power of what we're doing. The model is very much like LinkedIn in that 60% of our revenue will come from selling data out the back end to hedge funds, VCs, anybody that bought VentureSource. We will have a talent package. The difference between us and LinkedIn is we're focused on the global Silicon Valley, and we're going to be ranking talent. And you'll know a lot more about the individuals because they'll be posting. You'll see who they're connected to. You'll see their score. With that, we are going to marry our network again on top of our world tour. We have some friends, for example, here from Sydney, Australia. We're looking to do Always On Sydney. So we're going to take our world tour into a truly world tour. So now that I have you all woken up, that's my CEO showcase. And now we're going to officially begin the show. A year ago, when we held the Innovation Summit at Santa Clara, we had a gentleman named Paul Denninger, who is a senior managing director of Evercore, which is kind of the elite investment banking for technology. And last year, he rightfully pointed out that IP portfolios were very much into play, and that if you're a technology company, in particular a bigger one, you need to be constantly looking at the market and seeing, how these portfolios can be managed and traded and bought. So he rightfully pointed out that trend because we saw several major transactions over the last year. So I thought I would begin the first session here with Paul coming back and just giving us a little update. So let's give it up for Paul Denninger.
Thanks, Matt. Good to see you. Okay, well, as Tony said, typically as we come to these events and talk a little bit about what I see as trends happening in the industry, and last year one of my primary trends that I spoke about was the trend to IP monetization, and what I then called the patent wars that were beginning to emerge. And what he asked me to do was come in today and sort of give an update on that rather than prognosticate future trends. So let me do that. Oh wow, okay, I didn't realize this was going to come up that fast, this slow. So last year, when I presented, I talked about the history of IP and the path through which monetization of IP had taken place, as opposed to IP being used to achieve business ends. And what I spoke about was that in the early 90s, the IBM organization was really believed to be best in class. Today, IBM generates probably about $1 billion a year in IP licensing. It's pure margin. It's one of the things that drives their P&L. Qualcomm has since eclipsed IBM as probably the premier IP economic monetization engine. If you look at the 2010 line, you'll see that Qualcomm's IP licensing revenue in 2010 was $3.7 billion. Their profit in that same year was $3.2 billion. So you can figure out how much money they make in the rest of their business. That would be zero. The other thing that you see when you look at some of these major events over the last decade or so is a dramatic increase in the number of and the amounts of settlements. Settlements of 600 million, 900 million, $1.5 billion for patent violation among these large companies. And secondly, the emergence of the acquisition of patents as being something that is starting to take place. And I ended, this conference took place right around this time last year, and only a few days before this conference, ICON had filed a 13D against Motorola, suggesting that they explore alternatives for the portfolio sale of its wireless patents as opposed to the sale of the entire company. And I had suggested maybe this is a new activist handle. Activists have become very involved in the stock market, trying to push companies around to drive to maximum shareholder value. So let's take a look at what's happened in the past year. Within a month of the ICANN stirring up the pot, Google acquired Motorola Mobility for $12.5 billion, widely reported, and you've probably read about it. What you may not have known is that they were the initial bidder on the Nortel patents, which sold for $4.5 billion. Their initial bid was $900 million. So those bids ran from $900 million to $4.5 billion, and they eventually ended up buying a handset company with tens of thousands of union employees in Schaumburg, Illinois, which will be interesting to see how Google integrates that. We recently sold AOL's patent portfolio to Microsoft for $1 billion. I'll come back to that in a minute. But one of the things you might remember is that AOL bought Netscape. AOL bought Advertising.com. And while one could argue those have been less than successful acquisitions, they certainly were extraordinary in early IP. So you think Netscape might have some pretty early patents on fundamental use of the internet? Maybe like even cursor strokes and things like that? The answer is they do. So it's a very interesting portfolio. We had multiple bidders. Microsoft was the winning bidder. One of the losing bidders was Facebook, who then subsequently, within a couple of weeks, went to Microsoft and said, how about we jointly own some of those patents? And so 650 of them were acquired from Microsoft for about half the purchase price. So Microsoft did a buyback, did a buy and sell kind of trade to drive there. So you can see an enormous amount of activity with a lot of dollars changing hands over intellectual property. A couple of more recent deals that we've done, which are the larger deals in the market. What I'm trying to do is just list the larger deals because there's a lot of deals, and I'll come to that in a second as well. But we just sold 1,700 wireless patents from InterDigital, which is Troll, that has tens of thousands of patents, for $375 million to Intel. And we recently worked with Samsung to acquire the wireless technology business, including a very substantial patent portfolio from Cambridge Silicon Radio in the UK, for over $300 million. So in just the last year, you can see a very significant amount of activity in and around patent portfolio. And finally, I would tell you that today, in the M&A market for patent portfolios, there are over 150 portfolios in the market that are being marketed. And so it's a very active market. By the way, not everything is going to get done. Not all portfolios have value, and not all patents have the same amount of value. What you typically find is that a small number, relatively speaking, a small percentage of the patents really drive the value in any portfolio. So let's just look at one case study, and I'm not going to bore you by reading through this entire list. I just want to point to the chart at the bottom right-hand corner, which is the dramatic increase in share price that resulted from the sale of the monetization of the patents from AOL to Microsoft. So a $1 billion uplift in equity value for that sale. So again, the way to think about this when you're thinking about patent portfolios is historically, patents are just a way of doing business. What we see in this case study is that where you have patents linked to businesses you're no longer as active in, you can increase shareholder value and or access additional capital by seeking alternative monetization strategies for that patent rather than simply a hold strategy. So what are some of the trends that we see in the market overall? Well, first of all, patent and patent litigation are becoming core strategic weapons among the major players in tech. The big, the lumbering giants in the industry are increasingly proactively managing patents, patent portfolios, and patent litigation. We've seen patent applications go up by 2.5x in volume over the last 5 years, so a dramatic increase in the number of patents being sought, some trivial, some meaningful, but the idea is it's starting to become a volume game. Secondly, we've seen litigation as measured by the value of patent settlements up 4x over the past 5 years. So if we look at the last 5 years versus the prior 5-year period, then the amount of patent litigation settlement dollars is up 4x. That's a very dramatic change in the marketplace. The second is that there's a vibrant patent-related M&A market. As I said earlier, over 150 portfolios in the market. And the average patent value, and by the way, a meaningless statistic, but it's just intended to give you some sense as to the size and scale and scope and change, is that the average patent value has increased from $100,000 to $600,000 in just the last 5 years. So again, a very dramatic uplift and shift in the marketplace. And finally, the trolls, which are what effectively are special purpose entities that accumulate patents and then seek to find ways to monetize them through litigation, licensing, whatever, remain healthy and active. There are several publicly traded companies. They're very well capitalized, and there's been a 100% increase over the past year in the number of litigations put forward by these NPEs. So this is something that you need to be worried about. I'm in the middle of another M&A transaction right now. It's not an IP transaction. And what's happening and the impact on M&A is the buyer, who is a major public company, one of the top 20 or maybe even 10, is seeking all kinds of IP protection from the small seller for the IP that they're acquiring. And it's not just that they're seeking to gain protection that the company owns its IP, that they're repping that they own their IP. They're also repping that the IP that they own and that they're buying doesn't step on somebody else's IP. That's a very hard thing to rep, and we're fighting it like crazy. But the reason that the big buyer is pushing the small company to deal with that issue for them is this. So it's one thing, you might say, well, geez, I'm not really worried about, tripping over an IP issue. I'm a dinky little company. Nobody's going to come after me. I've got no money. What are they going to do? A few $100,000? I don't have much more than that to give. If they win, what are they going to win? Well, the answer is, the reason you should be very diligent about that is because when you go to exit, The acquirer doesn't have small pockets. The acquirer that's going to buy you is going to have deeper pockets. And the potential litigant's going to look to them and say, you now own these guys, you now own that IP, you're now the one that's tripping over me, and I'm going to sue you, the buyer. Buyers aren't stupid, they figured that out, they're seeking that protection. So the lesson to you of all of this is there is not only opportunity in IP, there's also risk. And the risk is that you have to really effectively manage your IP and make sure that you're not tripping over somebody else's, because it will undoubtedly affect your exit, because the market has changed. So I'm going to leave you with, because I promised Tony I wouldn't take more than 10 or 12 minutes on this, and now if there's a question too, I'll be happy to answer it. I'm going to leave you with just one question. This is a map of, which is really hard to read, and the reason it's hard to read is because it's complex. The reason it's complex is there's so many things happening, is, ask the following question. This is the mobile patent lawsuit map of who's suing, settling with, licensing, etc. from who. And you can see it's incredibly complicated with some of the biggest names in the industry involved. And so the question, and the mobile wars have been going on for some time. And the question is, what's going to happen in the internet? Because, the internet market, when you start thinking about IP, think market cap. IP problems follow cap. If there's no market cap, no one cares. But once there's a lot of market cap, people start to really care. There's now an awful lot of market cap in IP, in internet. And so right now, when you look at the internet patent suits, there was only one so far. It's already been settled, which is the Facebook Yahoo litigation. And it may well be that what we saw in mobile is a one-off and will not be followed by what happens in other markets. My guess is that it's not the case. My guess is that the reason why these mobile suits have happened the way they have is that when a market reaches a certain level of maturity, people look for other ways to gain access to value, etc. And that the internet is at a level of maturity where people are not yet focused on these issues. They're, like, why do we sue each other for? There's so much market out there, we should just grow. And that's probably the case. It won't always be the case. And when it's no longer the case, I think those market dynamics will shift. So, that's an update on the market, and I'm happy to answer any questions on IP.
Okay, give it up for Paul. Just so that I'm clear, so we're a little startup. I was presenting our new media network and stuff like that. We're mashing up with a bunch of, SugarSart, CRM, ShareThis, a bunch of cool companies. But are you saying, like, what do I need to worry about?
You need to worry about whether any IP that you're using or have developed is clean.
Okay.
And by clean, I mean A, you really own it, or B, the guy that you're buying it from really owns it and is not tripping over somebody else. In the old days, people didn't really care about this because, it doesn't really matter. It really matters now because companies are not going to buy infected or corrupted or compromised, maybe it's a better polite term, IP.
Okay, but say, social media is invading the enterprise and blah, 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 and these functions that we grew up with Facebook and Twitter and LinkedIn and MySpace and, Friendster have been around for a while, and they're kind of natural. Some of these, people have developed the behavior to do certain things in social networking. How do you know that when you're building in a feature that you're not treading on somebody else's IP?
That is the million-dollar question. That's the million-dollar question, and you've got to do your best you can to investigate and dig. The point is, people tend to sort of look away and say, it's really hard to figure out, I'm not going to bother, I'm just going to keep going. You better figure it out. Let me give you a historical example. This is not new. Say 7 or 8 years ago, when open source first started to be, maybe even a decade ago, when open source started first really being used by companies building real products for real application, IBM would not, a decade ago, IBM would not acquire a company that had used any open source in their product. And the reason they would is because they couldn't figure out how to validate that all of the embedded IP was unencumbered, uncompromised, and didn't open IBM up to a lawsuit. In the time since, IBM has figured that out, as other buyers have, of how to manage through that process. And the open source market itself has matured enough where the concept of open versus licensed, et cetera, are all fully mature and embedded. But I assure you, it was true a decade ago that IBM would not buy a company that was in that state. And I think we're in a similar potential state of flux right now, where the proctology exam the buyer is pushing through related to IP is worse than at any time I've ever seen.
More money for the lawyers.
That's it.
All right, well, needless to say, Paul is opinionated enough that we asked him to stay on the next panel.
Thank you.
I can take this for you, so have a seat. I think a big event in our market was the whole Facebook IPO. And so I want to invite Bill Cleary and his team of gangsters to come on out. We thought it would be fun, and this is not, about looking at stock prices per se or whatever, but thought we would have a nice little session from an eclectic group of smart guys on the real, what's the value of Facebook. Now, William here, along with being one of my best friends, was the founder of CKS Partners back in the go-go 90 days, which was a public interactive ad agency, which was the first kind of ad agency to go around and say, hey, I think you ought to build a website for your company. So he's been on the forefront of the battleground since day one and is also known for his opinions. So with that and this other illustrious group, take it away, William.
Okay, good morning. Thank you, Tony. Let's start by introducing, I'm Michael Ball, my media left here. Let each of these gentlemen introduce themselves, tell you a little bit about what they do and a little bit about their companies. Michael?
Good morning. My name is Mike Moe. I am founder of GSV Asset Management, which has two funds. One, which GSV Capital is a publicly traded security on NASDAQ that invests in premier VC-backed private companies. So Facebook is one of the investments that we made, about 4% of the fund. Twitter is our largest investment. Dropbox, Palantir are all key holdings of ours.
I'm Ben Madden, VP of Strategic Partnerships at Spruce Media. We're a PMD, or Preferred Marketing Developer, on Facebook, and represent many of the large holding companies as far as advertising, as well as large direct clients to execute their marketing objectives across Facebook.
I'm Greg Roger. I'm the founder of SharesPost, an online platform for learning about and investing in private companies. We've traded something close to $1 billion worth of Facebook over the 12 months preceding the IPO.
And I'm Paul Denninger. What my title, I've been an investment banker in technology for 25 years, doing M&A and IPOs.
Okay, gentlemen, the title of the panel, is there a little bit of feedback here? Guys, a little bit high. The title of the panel is What's Facebook Really Worth? Of course, as Tony alluded to, we came out here warning with an expectation that this company would be worth $100 billion. And today I was just checking the stock ticker, and it's at about 60 billion and change. So there was a lot of disappointment. I'm sure, Mike, you were a little bit disappointed with the initial public offering in terms of the way it came out, a little bit high, and then it dropped precipitously. It's not the best market conditions. But let's start out by asking opinion. What is Facebook really worth?
Well, there's Facebook, the stock, and there's Facebook, the company. Facebook, the stock, I think is going to go through a period where it's going to be a little bit show-me, and there's definitely fundamental issues that if everybody was kind of looking at all the optimistic reasons to love Facebook, would sort of be given a pass on, but because the IPO was such a debacle, it's going to be a lot of things that are going to have to be shown to investors. What for sure you have is the most amazing network that's ever been built. It is what, in my view, is the future's communication and collaboration platform with 1 billion members. And so while part of the issues that they're going to have to overcome is its own success. So when you have 1 billion members, there's only 7 billion people on Earth. At some point, you kind of run into a ceiling there. You got 60% EBITDA margins. At some point, you can only be so profitable. But on the flip side, 85% of the revenue comes from advertising today. And so you look at the fact that you spend $500 billion globally in advertising, 13% of everybody's time today is spent on Facebook. You don't have to make much of a leap of faith just to see that avenue alone, where you can see substantial growth for as long as I can see. But then when you look at the other sources of revenue that are going to be driven off of this network, I think you see basically open-ended. I think it's going to, whether you're talking about social commerce, whether you're talking about search, whether you're talking about analytics and services. I mean, there's no way, in my view, with this network that you're going to see enormous growth, and ultimately the valuation will follow that growth.
Okay, I'm going to direct the next question to Dan, because when we look at the movement or the shift, when we talked back in New York at On Media, we asked the advertising boards and SNW people what their perception of Facebook was. And they have a lot of issues. They see it as a potential for brand building, but specifically what type of brand building can we do? It's an advertising platform as it deploys most of the activity to these little devices, smartphones. These are not necessarily optimized for advertising. And when you think about it, something like 1 in 2,000 ads deployed on Facebook actually get looked over. So if you look at it, so you deploy 1 million ads, you get 500 people to actually look at the ad. Well, you might be able to argue that men's room advertising, above the urinals is more cost effective. So if you're saying 85% of the revenue is generated by advertising, what's the fate of Facebook? Okay?
Well, I'm a little bit more bullish on the prospects. One of the stats is, I think it's pretty under-monetized, Google's monetization. It is in its infancy of the marketing. All the different ad units that are available, you mentioned mobile. Right now they're seeing a $10 CPM with over a 1% click-through rate, which is pretty strong when you're comparing to display, but not versus search. And that's kind of the problem that a lot of the both advertisers as well as advertising agencies have fallen into, is they're trying to put it into that bucket. They're trying to say it's like search because of this, but it falls short. And it's like display because of this, but it falls short. It is social media. It is word-of-mouth marketing. You're more apt to buy something that your friend recommends you than otherwise. So if you look at it from that perspective and look at the fact that it's changing the conversation or changing the way you have to do marketing, that's the way you have to approach Facebook marketing. So we're in the process of educating brands and educating advertisers and agencies on how to actually execute against those plans. Everyone says it's great brand building in that conversation, but there are examples of people that do really well from an ROI perspective. Zappos is probably the best example everybody knows. For every dollar they put into Google, they get $7 in revenue. In Facebook, for every dollar they put in, they get $3.50 out. So it's taken 18 months to get to that point, but it is possible and it can be very effective. But you have to embrace the social by design that Facebook has put out there, which is to build your audience, engage your audience, and then amplify that through the advertising push.
If we look at, if we talk to the marketing folks, the media planners and buyers and whatnot, one of the complaints is that Facebook seems to be driven by engineering-oriented folks as opposed to people that have some sensitivity to marketing. I think that's the understatement. And you'll hear or you'll see comments actually on the internet where people post things, say, hey, I'm not going to use it anymore. We know about the General Motors issue where they pulled their advertising, something like $10 million in advertising before the IPO. Mike pointed out this morning in our pre-discussion that, in fact, General Motors was back in the fold. So that's all good. But what is it about Facebook that has to change to help with this monetization process? I agree with you. I think we need to educate a whole new aggregation or grouping of creative people on how to best optimize and utilize Facebook. We need to create like an agency of the future that can exploit this and build brands and tell a friend programs. That's just a minor thing, but how do we build brand loyalty? How do we build brand preference or the predisposition to want to buy a specific product? How can we do that with Facebook? Any of our panelists want to handle that? How do we do that? How do we change the culture of Facebook so it's less technical?
Well, I mean, I don't, again, I think Facebook is gonna, because of this IPO that was embarrassment for them, it's gonna really kind of see what kind of company they really are. I mean, they've created this amazing growth business, and now everybody doesn't think they're so wonderful anymore. And so I think figuring out what that means to really have the kind of relevance going forward they've had in their short history is gonna be a trick. But I think you look at what problems create opportunities. Spruce Media, on my left, they've been fabulously successful, focused on this Facebook new dynamics. You talk about, it's tough to do advertising on a phone. Well, guess what? I mean, the future of media is on this device and on your phone. So the advertisers are going to have to figure that out, and Facebook's going to have to help show them. And I think that creates opportunity. Because the question is, where else going to go? No.
I'd just like to make a comment that I'm just, going back to what is Facebook really worth, I'm disappointed that people are disappointed. And I think that's because of expectation management, which was greed run amok. This company has a $60 billion market valuation, is trading for, ridiculous multiples of revenue and profit. And people are sitting around saying, geez, I guess it's not as good a company as you thought it was. You can love a company and hate a stock. And I personally love this company, and I personally hate this stock. And the reason I hate the stock is it's completely divorced from market reality. Its valuation is completely divorced from market reality. This company, this stock is dead for 2 years, and it will grow into its valuation. I believe it will, but it's a big bet. Our analyst, our stock analyst Ken Sena, has a $39 price target on this company, and his time frame for that is 18 months. But when you decompose the sum of the parts valuation, better than half of that valuation is successful monetization of the mobile strategy. Everyone who believes there's 100% certainty that Facebook is going to successfully successfully monetize their mobile strategy, raise their hand. 100%. So you're out there buying the stock today.
Bought it, yeah.
Okay, well, good for you. I am not in that category. It's not 100%. I believe it will happen. I don't know the time frame. And but to me, the issue, this is really a bummer to me, because if this company had gone out at a reasonable valuation, it would have traded up instead of down. We'd be talking about how wonderful this company is, and we'd be talking about positive issues as opposed to what happened, which is, as we discussed earlier, every actor in this play screwed up.
But is there any reason to believe that Zuckerberg, if he had to do it over again, and I'm not talking about the actual execution of the IPO, which everyone understands was horrible, but if he had it to do over again, do you think he would go public earlier? I mean, my view of what we see is the company's founders during this period of growth, again, the last thing they want to do is be public. So many sort of high-profile disasters of these, especially these kinds of companies, trying to make that transition. If anything, I think they're thinking we want to push it out further. And maybe the Jobs Act does that.
Well, I think that if that's a question, I'll answer it. I don't think, yeah, but I think he would not decide to go public earlier. But I would hope that he decides that his $100 million ego-driven number was less important than the success of the company. The one thing I want to ask is, what do you think it's going to be like to try to recruit people into Facebook over the next 2 years with stock options being priced where they are, the stock being where it is? How many employees do you think have options that are underwater right now? And how is that all gonna play out? And so I think that Mark Zuckerberg's not gonna know his answer for whether he would do anything differently until a couple of years from now when he learns the lessons of what this actually cost.
Yeah, do you think that's less Mark Zuckerberg or Sheryl Sandberg and more Morgan Stanley and more of the investors, and I'm not saying you, Mike, but tremendous pressure to go out there and set this incredible expectation and create sort of a Facebook bubble?
You think that public buyers wanted the higher valuation for Facebook?
No, I think some of the early on investors obviously benefited. Who benefited the most? You know, it's the investment banks, I know, having been around many companies that filed IPOs in the 90s. There was a predisposition on the part of the investment bank to maybe hype things a little bit, you know. Of course, led to a bubble. Tony wrote a book about the big bubble. And is that not here, the same problem here? I mean, wasn't there tremendous pressure?
Yeah, I think Paul and I agree on many, violently agree on many things. The difference might be what we think the value of Facebook is, where the day was supposed to be.
About 61 billion.
Which again, I think in the next 2 years, my view is that the value is going to be substantially greater than that. So, but I think as it relates to kind of what went on here, and what Paul said, you know, you couldn't have, it was every single actor screwed up their part. You know, I think the company screwed up its part, including, by the way, you know, by the time they filed, to the time they went public, they had rapidly decelerated revenue growth. And that's the company. The judgment of basically selling more stock, more insider stock, you know, as they're taking the price up, you know, and at the same time, their numbers are going down, but only shared with a select group of people. And I mean, there's a bunch of reasons. Now, most stocks are valued on futures. So back to my earlier point, they're going to be in the penalty box, and maybe it is a dead stock for 2 years. Ultimately, it's going to be fundamentals to drive valuation price. And back to the platform that I think Facebook's created here. It's incredible. I think a huge bet is what we've been talking about is the success on mobile, which heretofore, in terms of monetization, has not been great. And again, I think there's reasons for that. The bet that I'm making is that they're going to nail it. But that's the bet.
The last network of scale of this size that existed was the old AT&T. You made the point that, you know, this is an incredibly valuable company, it's an incredibly valuable network. You know, I'm old enough to remember the breakup of AT&T, which was the most valuable large network. It was the most valuable company around. It was the cornerstone brand of everything. And the AT&T that exists today is not the AT&T we're talking about. The AT&T that exists today is the old SBC, which is a mobile telephone company. My only point is that the value of assets rises and falls over time. And the idea is to monetize at the right time. And the public market's responsibility, or what the public market is good at, is investing in companies that have established economic models that are clear and that they can track. And the concern I have about the Facebook valuation and its IPO is that its business model is in transition to mobile. And there is significant uncertainty associated with that. And that's not something the public market is particularly good at thinking through. This starts to feel, it's almost like they waited both too long and not long enough. They waited too long to get the market valuation for the traditional online desktop business that Facebook represented, and they went too early to fully monetize the mobile strategy because it's not yet clear it's going to be successful. So what we now have is a $60 billion venture company that's public.
With a billion people on a network, and back to your point about AT&T, the revenue per user of AT&T was what at its peak?
Oh, a lot more than
Yeah, so we're $5 per user.
probably $50, $30 back then.
But if you look at
And
Yahoo,
that
What was the market cap of AT&T?
Oh, it was probably less than the IPO effect, probably $100 billion way back in the 80s. I would say 90 something. I should have looked. I'm sorry.
no, the revenue per user for Yahoo now is about $7, AOL $10. Facebook is $5 or $4.50. Do we really think that Facebook's not worth more than Yahoo and AOL?
60 times more?
No, double.
Was the PE ratio over 70? Facebook, the big thing, of course, is obviously the PE ratio. I mean, this is a big number. If you look at something like Apple's at 18, they're over 71, right? How do you deliver
Google
on
single
that?
digits.
Huh?
Google single digits.
And that's what would you reckon AT&T was at the height when it had
It was probably
market?
high single digits. But again, it was a different time.
But it was Apple.
High single digits.
But it's apples much. I mean, if you look at it traditionally, and again, we're in unusual times. You got 1.4% 10-year note, right? Which means that growth companies' future earnings should be valued at higher numbers.
Sure.
Right? And you got the best growth company in the world. Apple's selling at 12 times forward earnings.
$500 billion.
So, 500, yeah, more than $500 billion. But the point is, You know, it's ultimately the math should be about future growth today, and that's where if Facebook can make 70 cents next year and $1 in 2014, that's kind of consensus numbers. But and not compared against Apple, but compared against its growth and just doing math. You know, my math after shares of Facebook made up significantly over the next 18 months.
What's the biggest risks, beside maybe even government involvement? Because if Facebook actually becomes the tool that not only can spur the Arab Spring, but can create third and fourth parties in the United States, I mean, there's possible government regulation. What are some of the threats?
Can I point out?
Yeah.
AT&T was broken up by the government. IBM was broken up by the government. Microsoft was attacked by the government. Google has avoided it so far. We'll see if Facebook does. I mean, this is not an inconsequential risk.
Okay, so that's one of the challenges. What are the other challenges? Let's put the government issues aside, regulations aside. What other challenges Facebook threat to this incredible potential for this company?
Okay, the biggest risk, I mean, to me, it's the anthill risk, which is basically all the ants go up the hill, and when the honey's gone, they all leave, right? I think that's the problem you have with any network. And so you have tremendous network effects going on here. You have tremendous engagement, but for some reason they screw that up. And I don't think it's about being cool. I mean, my daughters are in college. They don't think Facebook's cool. I mean, I'm on Facebook. That means that Facebook's not cool, right? But it's a necessary communication. They do it because they need to. You look at the numbers, engagement's actually going up, not down, 28 times a month. So that to me is the key thing they got to nail. That all these features we talked about. It's complicated. That creates risk. Simplicity is a better thing. And then the mobile, they got to nail mobile. And then if they don't nail mobile, and I say I have 100% conviction, I
When
would
you say,
stop.
Mike, when you say nail mobile monetization, how?
Well, they've got to show how they can nail it from the standpoint of being able to be paid for the activity. They got a lot of people on mobile. Half the users are on mobile. It's not a great experience, by the way, because there's too much features. It's not, it's not simple. So they got to figure out how to make that experience work and still be.
Well, there has been companies that have been real successful with mobile in terms of advertising. And Facebook's not one. I'm sorry.
Well, but that was the point I was going to make. I think that the reason why my belief is not that 100% success, because there's two risks. There's the risk that mobile becomes a really effective ad medium, and then if it does, that Facebook is effective in capitalizing on it. So there's two risks. They could be very effective, and it could still not be a very good market. So I think that's the as an investor looking at an outside-in basis about whether you would buy this stock today, I think it's all about mobile.
But how do I deal with this? Okay, it's a simple question here. I studied anthropology for 9 years, and I'm asking a simple anthropological question. I have this mobile phone with maybe 70 apps. Most of you, how many have iPhones, by the way, by show of hands? Wow. Okay, so most of you guys have those 50, 60 apps. So I go to Gettysburg, where my son goes to college, and I have a battlefield app where I can go and see where General Lee stood just prior to Pickett's charge. That's entertainment value to me. I'm a weird guy, right? I've got gazillions of other apps like that. How do we compete with the excitement, with the emotion, that's emotion for me, but how do we compete with this stuff, and how do we break through the barriers to make something like advertising or to make Facebook meaningful? Because your point is well taken. I was at a car show yesterday in Saratoga, California, and a 75-year-old lady saying, "There's a car saying, let's get this on Facebook." The cool factor is going away. That happens. Because I look at my little 12-year-old now, and he's saying, Facebook, shit, I don't want that. So I'm wondering, does this become another MySpace? Does Justin Timberlake come in and buy this thing for $10 million? I mean, what happens next? And so those are the big threats to me. Those are the big challenges. So comments.
Yeah, so...
and I'm an optimist.
So we've been talking about all these risks and what you're talking about, but it comes down to education and execution. I mean, those are the two things. So we've been talking about all the different things, mobile, all the different ad units, but education is where it's going to kind of rubber's going to hit the road. That's going to be with the agencies, with the advertisers, and in turn with the users. They've timeline. What they've done is they've simplified the interface from a user looking at a company. You've got a big picture across the front, a little picture on the left, and then they have posts down below. So if
You're hitting on something here. We were talking actually in the pre-game show here. I really believe this. When we had 1995, we discovered Mosaic and said, wow, we can build websites now that are graphically engaging. This is advertising that's going to really go places, right? So we invented a whole new model for advertising, integrated marketing communication. Ex-Apple guys, it made a lot of sense to us. Everything was going digital, right? What I'm saying is that if I was Mark Zuckerberg, I'd be looking not at buying another widget company, but a creative company that could take brands from Procter & Gamble, make Irish Spring or whatever, Tide, really go through the roof by doing programs that build brand preference, brand loyalty, other aspects of the brand equity model. Forget this crap about advertising awareness, but engagement where people are actually doing a giant tell-a-friend program and they're spreading the word and stuff, and really exploit the advantages of social media. I don't see that happening. I don't see it happening on Madison Avenue. And I'm an optimist. If Mark Zuckerberg were to do the right things here, I would be an incredible optimist. I'd go out and buy the stock.
See, I've been on Gravity, and Gravity is basically, you go back 10 years ago, beyond 10 years ago, and one of the easiest plays was looking at where ad spending was and how people spent their time. At that time, people were increasingly spending time on the net, but 99% of the spending was still on other traditional forms of media. Over the last 10 years, you've seen that parity start to appear. It's still, you got 20% of your time on the internet, or a little bit more, and 20% of the spend on the internet. Mobile, just as now 10% of your time on mobile, 1% of spend. If you look at where this is all going, it's all about where people spend their time. 13% of the time on the net is spent on Facebook, 11% on Google when you add YouTube. Google has a 200, no, that's perfectly right. Google has a $200 billion market cap today, and you got Facebook with a $60 billion market cap today.
That's pretty good. Go ahead.
I agree with that point, but I would also say, I think one of the changes is, historically, people have felt that technology, when applied to markets, expands markets. We're seeing a lot of evidence that that's not the case. And the most obvious is the music industry, where, at the introduction of the iPod, recorded music was a $14 billion industry. It's now a $6.9 billion industry.
But iTunes and Apple, part of Apple's dominance in the market is because they created that.
No, I know.
Take the
And
60
all the market
billion
cap,
to Apple.
no, and all the market cap has gone from CBS and Sony and all those guys to Apple. Okay, so
It's
that's
expanded market. It's much larger than it was then.
how can you say $6 billion in revenue to be shared by artists is more than $14 billion?
That's not, you're saying just on the music side versus how it's actually impacted music sharing through.
I know, but I'm talking about the people who create the music. If I'm an artist, I don't care about the $14 billion. And the $14 billion is now 6.9. That's a smaller market for me as an artist.
But they're getting a higher percentage. The record labels aren't involved, which we're taking more than half of it.
I don't think that's exactly right, because if you talk to an artist management right now, they're making most of their money on tour because they can't make it on records anymore. And my only point is that the successful execution, a lot of the ad dollars are ineffective in traditional advertising.
I would counter that by saying, what is the most successful brand emanating from Silicon Valley today? It's Apple, correct?
Sure.
90% of their stuff's still going to radio because you're in the car in the morning, outdoor because you got to go buy one-on-one on the freeway. They're still doing it the traditional way. Very little social media going on there.
I'm worried the advertising market shrinks.
Sorry?
And I'm worried the advertising market shrinks.
All that's happening is you still aggregate a ton of people around Super Bowl time. And it just drives the prices up. So when the fish are biting, it costs more. The CPM is less cost effective than it was 20 years
So
ago.
the Apple has the best brand because it has the best product.
And that's another component, but why is it they use?
Ultimately, a brand reflects a promise of what's true.
But how come we're talking about CPMs 20 years ago? CPMs 20 years ago were based on this idea that somebody may sit in front of TV. They might be there. They could be there. The double-edged sword with digital media is the fact that you know exactly where that person is. You know exactly what they did.
When I was at Apple, we would make a media purchase for the Olympics, let's say for $12 million. If they didn't deliver, right, those rating points that we wanted, we had to make good
But
content.
how did you know what you delivered?
Because you had Nielsen doing
Sample size of 2
plus or minus 2 or 3%. It was pretty accurate. So let's say if you're off 10%, you get your points.
But you don't know that was the case. That's the point. And that's what
You do know that's the case. Plus or minus 2 or 3%.
You didn't though. You never could. It's not possible, it's fake. It's a religion.
No, it's not quite religion yet. Okay, we're gonna open it up to the crowd for Tony. Wow, okay, we really spent.
All right, so I got Dan up here from Spruce Media because Spruce Media has an add-on to the Facebook ad engine, right? And so, I mean, just how much, in your opinion? So, in other words, they're driving a bunch of revenue towards Facebook because they represent, what are some of your marquee clients, like Coke or? can you say?
Amazon, Coke, P&G.
Okay, so bottom line, how much under its current situation do you believe that they're at, is they're way under, under monetized in terms of availability of?
Well, we've hit on it a bunch of times. I think the education of the actual advertisers and the people executing their buys, the holding companies, on how to actually leverage the value of Facebook it's in the very beginning stages. It's in the
Okay,
first
so
inning.
that, I think that is where it all gets. Does anybody have anything you want to contribute to this conversation?
Or comment or questions, yeah.
Questions for the panels? Raise your hand and we'll get the questions. I'll cover this side.
Yeah, right here.
Okay.
Go ahead, Mike.
Please stand up.
I'm Maria Lorna Cunas from Davis, California, and my question is in connection with Facebook. I just got a LinkedIn update about Facebook's move to Walmart and how that will impact the new worth of Facebook, because Walmart now has moved into data.
Actually, this is a good case study because the company I'm in the advisory board with is Lively. And there's a big Walmart project underfoot because obviously, with their stores and whatnot, I mean, dialogue is really important to them. But I'd like to get some of the other reactions here. This is a big program, by the way. This is going to be great for Facebook.
I think one of the things that separates Facebook from other advertising mediums is they actually know exactly who that user is. In display, there's inferred the age, the gender, whether you're married. This is all guesses about what you have. Facebook's data, what they have on people is exactly what it is. You know exactly what you're getting. You can micro-target across the platform. Bringing in potential purchase data from Walmart about buying and that kind of thing, it brings the point of the ROI back into the question about really knowing exactly what you're driving. And everyone online, when they're doing their marketing campaigns, everything from a performance marketing perspective comes back to ROI. And even with Coke, they have with their agencies, they do value-based compensation. It's not on how many bottles they sell, but it's on whether they hit those metrics of brand that they've set up well before the campaign gets started. So there's a shift towards performance that's happened as digital's matured, and I think it's going to continue. And these kinds of relationships with large offline retailers is going to make a difference.
By the way, by SIC categories, some are more prone to benefiting tremendously from Facebook just by virtue of who they are. There are certain companies that are not going to benefit as readily, but Walmart is one that is obviously going to benefit tremendously from Facebook and that association. Yeah. Next question.
Okay, just one more because we got one over
Go
here.
ahead, Rick.
Rick Pearson, JT Global, Sunnyvale, California. I'd like to hear y'all's opinion on, is Facebook's challenge changing advertising? All the gentleman second over there, you talked about so much of the advertising is still on television, still on radio, but most everybody in there has a DVR, they're not watching ads. Yet 1% is going to mobile advertising. I think the challenge that they're facing is they have to change advertising. I want to see analytics, I want advertising that's important to me, and I will pay attention to it. But other than that, if it's just random, I'm not going to pay attention to it.
I would say that's right, that's the opportunity of the company. That's the challenge associated with the stock and its valuation. Again, going back to my first comment, which is I'm disappointed we're disappointed. With a company at 60 billion in market cap with 4 billion of revenue, where I grew up, that's a really high multiple. So that's as a company, executing, educating, etc., that's the opportunity. But it is the challenge for the stock, given where the valuation is today.
Any other comment on that? Tony, we still have 2 minutes here. 2 minutes.
No, we're running out. We're running out. We're all
Hold around.
I just have one more question, and that is, maybe for Michael Moe, but you know, in the age of the internet and viral distribution and everything, is it possible for companies to kind of get, you know, almost 100% market penetration really quickly, and then, you know, kind of lose some of the novelty? Because I would consider that possibly another risk for Facebook.
No, I kind of alluded to it earlier, which is you do run into the problem of success, right? So you already created this network that has 1/7 of the globe's population on it, using it 28 times a month, with 60% EBITDA margins, which are higher than Google's or Apple's. You know, I mean, it's just a remarkably successful business, and so your downside from that is, you know, what do you do for an encore? I mean, how do you continue to expand this and stay as relevant in the future as you become? And that is a risk. To me, though, it is like gravity to some degree. You've created this network that is the future. I mean, this is where the future is going to be. This is where the communication is going to be. It's where the collaboration is going to be. It's where the commerce is going to be. And guess what? You know, you're going to see a venture capitalist try to fund the person who's going to disrupt Facebook. Right? Facebook might have its challenges, but they've created the network here. So now it's their job to execute against that and monetize it. That's the bet.
And drive up the number of average dollars to the average user.
Right.
Okay, well, let's talk
Tony, one last thing, and
Okay.
again, Matt's point, I think the big challenge for Facebook, and I think, you know, where I would be really bullish on, is this educational challenge. Because, and getting back to this gentleman's question, we need to transform advertising. You need to change the parameters, the expectations, the way things are done. You need to re-educate people, media buyers, right on down to the creators, the guys that actually build stuff. That has to all change. And I think this model agency, if I was Mark Zuckerberg, I would buy or create the world's greatest entity. If you're an advertising, send Google to drive this forward, to show others, do this, emulate this, and you will be successful.
But it's the way it always happens, and that's like you said before, CKS was successful, and when TV came out, nobody knew how to use it, right? Look at how stupid the advertising was on television. Well, it evolved over time. The internet, when it started, it was, you know,
Well,
pop-up
actually,
ads
in
and
advertising, there was a seismic shift, and we went from the 50s with Dinah Shore, you know, Chevy would sponsor the whole show. You know, you had to craft there was one advertiser per show. That was transformed, and then we started selling day parts and whatnot, and it was transformed again with cable. So yes, the advertising industry is adaptive and capable, but nothing is really, they're lazy. They're not going to do it unless somebody drives them to do it.
that's the way it works, but that's what's that creates opportunity. Thank you.
Alrighty, well with that, let's give it up for this great panel. Appreciate that. All right, so speaking of, you know, one of the things that I'm a big believer in is Mark Zuckerberg, who I met back when he was still in his house in Palo Alto trying to decide whether he was going back to Harvard or not. And I think Sean Parker won that argument for everybody's benefit. But I think when Mark was wandering the halls of the Innovation Summit, he was still in his house. And so our next group is a bunch of we have a great tradition of doing CEO showcases to really hot, cool new companies. And so I'd just like to tell you about the Mark Zuckerberg was wandering the halls at one point, and no one knew who he was, and he's a shy guy, and I was having to introduce him to people. The same happened with Nicholas Zenstrom of Skype, who was at our 2005 show that the first public viewing of Skype video was ever made, because Nicholas beamed in to receive the Company of the Year award after a board meeting, and had Tim Draper sitting by his side from Estonia, and no one knew, you know, what Skype video would become after that. Needless to say, the billions of dollars that ended up in Nikos's pocket. So with that, that's a good, you know, kind of an introduction to this next session, which will happily be moderated by a dear friend and a member of the Always On World Tour, Ed Lambert, Senior Vice President, and Grand Poupon of Bridge Bank, who will take over as host. Welcome, Edouard.
You can do better than that. I traveled a long way to be here. So, bienvenue à la 10e Conférence d'Innovation. Welcome to the 10th Innovation Conference. Just out of curiosity, how many people in this room started out life in a different country than the U.S.? There's the magic of the valley right there. Now you're all, 100 people here have been longer than 4 years. Okay, well, in California, it's like being in a restaurant. If you've been here for the past 4 years, you're now a native of California, so congratulations. So we've got great companies for you today. We've got 4 to share their ideas with you. The first company is called ID Interact. ID Interact is passionate about helping enterprises make social media marketing more effective, efficient, and directly aligned with revenue and customer satisfaction. We're defining how enterprises can use social CRM, predictive analytics, and big data to identify customer demand signals based on real-time interests and activities. Using our platform, clients directly engage customers to convert those demand signals into revenue and customer satisfaction. We believe social media is about more than just listening. We believe social means business. So, to explain that mission statement and to give us more of an insight into the company, please welcome CEO Matt Standish for ID Interact.
Hi, good morning all. My name is Matthew Standish. I am the CEO of ID Interact. We all know that social analytics, mobile analytics, big data, it's all a big play. Spending about 13 years as an executive in the mobile and the telecom world has been definitely an interesting education. What we're trying to do, and what we believe we are doing, is it's less about pushing information to users. And it's not just passive listening, but it's really finding demand signals from the users that you're speaking with, the users that you're engaging with. Because ultimately, the consumer is king. Sorry about that. So it's about finding demand signals. And it's not just who has the most clout or who's the most popular, but it's about who's spending money. We're focused on business to consumer market. So we're helping our consumers find those people, not just who's tweeting the most, not just who's hashtagging their brand the most, but finding the users predictably that are demanding that user's product. So who up here is your most loyal user? Who spends the most money with you? What we do is something very, very differently. We just don't listen to tweets or Facebook posts, but specifically what we do is we create this thing called persona. And it's quite simply a 360-degree view of a user, so that if you're the head of marketing or you're the head of customer service, it's about understanding the context of your user. Who is that person? Are they loyal? What level of loyalty are they? What was their last purchase? And it's putting these analytics together, both from the mobile app world, from the social world, and even forms of integrated structured data. How do you engage your customers in real time and make it relevant, right? It's a little algorithms up here, as you can see, but it's the idea of using persona, using demand signals in the market, i.e. adjectives, adverbs, keywords, that really shows a user's intent or their intention. To be able for a brand such as Virgin Mobile or a Zappos or a Nikon, to be able to go back and understand who's researching the D5100 camera for Nikon. Are they also searching for a Canon version that's competitive? How do we find users through the research phase, as well as just before they're about to make a purchase? We find those demand signals, we engage them directly, and we help our brands convert that to revenue. Because at the end of the day, it's about revenue uplift for the brands that they're working with. It's not about how many Facebook friends you have, it's not how many followers, maybe it's about how many retweets, but what it's really about is how do we show brands revenue uplift that's directly linked to measurable results. As an ex-executive of telecom, I spent a lot of money from our customer service group, $50 million plus in social media. But when I went back to the board and to the exec team, it was, what is the ROI, Matt? Well, we have more followers, we have more friends, we have a lot of engagement. But what's the dollar value of that? We're helping our customers find the dollar value to be able to measure it, go back on a quarterly basis through an operational review, go to the board, and prove the revenue uplift that ID Interact is giving that brand. Just cycle through them. We were anticipating the internet connection problem. So what we have here effectively is a quick look at our interface. What you see here that's interesting, it's CRM-like, but what we're not doing is we're not just trying to segment and look at demographics of users. What we're again trying to do is find those demand signals. So here on the left-hand side, what we're able to do, we put in information like search interests. We're able to put in, for example, with Virgin, we did this for their post-iPhone launch back on June 29. And then what we're able to do is look at analytics. We're able to look at how many total personas are out there, talking about the iPhone, talking about Virgin Mobile, as it appears to this left-hand configuration. We look at unique persona. We're looking at their audience. We're looking at potential revenue uplift. Again, this is all about driving revenue for the brands that we're working with. And here to the right, we see the most unique personas. They're highlighted in red and green. Who do you need to engage with first? It might be in an automated way you engage with them, and it might be in an individual basis, especially for your most loyal users. We talk a lot about persona. How do we get the context of users, and then how do we segment them? How do we understand their behavior, and especially how do we get them to, when you're launching a thing like the iPhone for Virgin Mobile, how do you get new customers in the door? How do you drive demand? How do you find those demand signals and convert them into revenue? Here, very quickly, we show the persona detail that we can get on users. We look at their privacy settings, because privacy and data retention is very important on ID Interact. But we also understand things like their location, how many tweets, retweets, brand mentions, maybe when the last time they purchased from us, or the last time that they said they were going to purchase something or was researching something. And then we also find a way that we can directly send them a message, can send them a promotion or an offer. Here what we also do, because direct one-on-one marketing is just part of our solution, but it's also about being able to segment, understanding, rewarding your all-stars or your most loyal users. But then also being able to identify how many interactions, how many redemptions, and what type of revenue uplift that provided for your business or for your company and or brand. Also how to entice your users. Because it's also about virility, it's about being viral, it's about sharing information. Virgin Mobile uses BuzzFeed. They also have a number of free concerts that they put on in the summer. How do you entice people to come into your brand, right, by sharing free events that go on, to be able to contact groups directly. But it's also here about engaging with your customers. Being able to understand them, being able to understand their demand signals, and then being able to take advantage of those demand signals, and again, going back to revenue uplift. As we all know, no solution is a great solution without a lot of great analytics. So this is as much about interacting and engagement and understanding, not only that, but what we do is something very unique. We understand the user's propensity to buy. As a percentage, right, how do you understand the user that might be in grandma's basement with furry bunny slippers on, that doesn't have a propensity to buy, but they might have a high cloud score or high influence? But how do you find those users that do have a propensity to buy? Talking about a Nikon camera or a Virgin Mobile iPhone 4S. And what we do is we track, not only by market segmentation, down geographically to understand where the hotspots are, but also to understand geographically and from a macro as well as from a micro trend perspective, how things are trending. The idea here is also to find your most loyal customer and to be able to reach out to those most loyal customers to convert them to revenue and to continue to be a big part of your brand. So today we're deploying 2.5 of our product. We have very, very strong product traction and customer traction. Brands like Bravo, Nikon, Zappos, 6PM, and a few others. We're very, very excited to be here with you today. We think we're doing social and mobile analytics in a different way, not just by charting them, not just by moving analytics into a sandbox like Teradata or Greenplum or some of the more traditional suppliers do, but this is all about operational excellence and reaching out to your customers, converting them directly into revenue. We're seeking angel and VC investment. We're privately funded, and we're looking to accelerate and grow very, very quickly. We have a booth outside, and we look forward to speaking with you. Thank you all.
Our next CEO presenter is Martin Fried Nielsen from Sunar. Sunar's mission is to create a new way to do business faster from any location by connecting people, data, and devices. We provide the most secure cloud service for business. At Sunar, you can access and share files with your team from any device, anywhere. Teams can work together in real time on projects or offline with our sync technology. Our automatic versioning and backup ensures files are always protected. Our simple interfaces allow projects to be easily controlled and ensure only the right people have access to information. Sunar uses strong encryption and geo-redundant data centers to keep your files secure at all times. Please join me in welcoming Martin Fried Nielsen.
Good morning, everyone. Getting my iPad connected here because I can. There we go. So, Sunar is fundamentally about three core concepts. The first one is business productivity. And when we talk about business productivity, we're talking about the fact that 80% of all companies in the US today are buying iPads for the employees. And when they get these iPads, they typically come with email and browsing, and that's it. What we're doing is we're enabling, particularly the mobile sales forces, to be more productive in the field by, for instance, having access to all their sales collateral that's being developed by the marketing group back in the company. In addition to that, we also enable this mobile workforce to be able to do work in the field. So as they have access to all the sales collateral and other key information from the company, they can also edit these things in the field, they can make changes, they can present it, etc. as they're interacting with clients. As we look at all this, control is obviously also important. So the other aspect of Sunar that's key is really around control. So the concept here is that while we provide productivity, it's controlled productivity. The IT group or the managers back at the company, they have strong control capabilities over who has access to what and what they can do with it. The last key aspect of Sunar is really around freedom of choice. And while the tablet space and mobile is very hot right now, we are seeing that a lot of the big players are building their own stacks. What we believe businesses need is freedom of choice. You want to be able to mix and match the best of the best technologies out there. So for instance, if you're looking at editing documents, yeah, you may want to do that from an Android device. You don't just want to be tied to a Windows device. Same thing in terms of editing documents using things like Google Docs or Apple iWorks. We basically let you do that from any mobile device. We also integrate with other content creating applications such as the Adobe Suite. On the back end, we also recognize that for a lot of companies, there's a lot of content residing in back-end systems such as CRM. So again, we integrate, we allow companies to basically take that content that are residing in these systems and make it available for the mobile workforce. So at Sunar, what we've been creating is what we call mobile content management. And the way that you can think of this is that this is a super intelligent file system in the cloud, okay? And this is something we've been working on since 2005. So if I go back to one of the things we heard earlier, we have been developing a lot of IP in this area here. And the idea is that with this intelligent file system in the cloud, that we can store all this content, and this content can be made available for anybody inside the company and also people you work with on the outside. For instance, your clients, it can be your partners or consultants. And all this is optimized for mobile. So we work across, all the various devices that are out there today. Sooner is based around a concept called sync, right? So the idea is that, like here today, we're not always connected, and I'm actually giving you this presentation while I'm in offline mode. The content that I need access to, in this case my presentation, has been synced down on my device. And so I have it here. So with Sooner, you can basically sync across devices, various types and form factor. Today, we're obviously doing a lot of work with smartphones and tablets, but we continue to see new devices coming out in new and interesting form factors. For instance, the sort of whiteboard style screens are becoming popular. They're also becoming internet connected. So you can also get access to your content on those devices. Printers and scanners are other examples of devices that are also becoming cloud connected. And with Sooner, you can basically access those devices. Sooner is team-based from the ground up. So unlike a lot of the consumer-grade offerings in the space, we sell directly to companies. And the model here is that as a company, you buy seats. So we typically sell into the CIO of the company or line of business managers. And what they buy is seats. And they buy seats for their internal users, and they can also buy seats for the people on the outside. And as you can see at the bottom here, we actually don't believe all data belongs on Facebook, in spite of the high market valuation. We believe that for companies, there's a lot of content, a lot of information that you actually want to keep private, that you don't want to share. And the day when your employees leave the company, you want to be able to retain that information and not have it show up out on Facebook. Initially, I was talking about mobile productivity, and when we talk about mobile productivity, we're talking about mobile productivity in an integrated experience. So, for instance, what you're looking at here is that with Sooner, you install one app on your device, and once you have that app installed on your device, you can get access to all your information, and you can do a number of things with it. For instance, you can edit the documents on the device. Another example of what you can do with Sooner is annotation, right? So I am here showing you my little PowerPoint here, and if I want to, highlight something in this, I can come in here and I can just mark it up like that. If I want to, maybe call attention to something, I can draw a little line here, and maybe I want to have an arrow here, right? The kind of things that you can do with Sooner. You can annotate, you can edit, you can forward, you can share, you can show. That's part of what the Sooner platform does today. At this point in time, we have about 125,000 businesses around the world that are using the Sooner service. A lot of these customers, I should say, are customers that have come to us through partners. As a company, we have partnered with a number of telcos around the world and companies like Cisco and Samsung. These companies provide Sooner as a white label service under their brand. And for us as a company, it hasn't been easy sort of getting to that point. To get to a point where a large telco want to launch a service, it takes a lot of work on the back-end side. Having geo-redundant data centers, becoming HIPAA compliant, etc., etc. There's a lot of things you need to do to gain the confidence of these large brands. We have a great time working with today's innovative companies that are interested in using mobile to a new level. And here are some examples of customers. For instance, I think a lot of people around here are familiar with Coldwell Banker, the realtor company. And what they're dealing with is that they're dealing with a market in the Bay Area that's becoming increasingly harder. Houses get on the market, they get sold very quickly. So the real estate agents out there are now equipped with iPads and iPhones and so forth, and what they need a way where they can quickly work with their clients. They can quickly upload documents in the cloud, videos, pictures, etc., that their clients can get to, so they can make the offers and so forth. So that's kind of what we're doing there. Sirona is a large European dental company. So at that company, the situation is that they went out and they bought iPads for the entire sales force, and all this dental equipment they're selling here, You know, there's a lot of collateral around that. There's a lot of pictures, data sheets, and all that, right? And before, they were using email to communicate that to the mobile sales force. But sooner, they can have it all in one place. They can all have it centrally stored, and everybody can have access to it. Finally, with IBM here, IBM is using Sooner along the lines of what I just showed you here with that notation. They needed a way where they could have a diverse team spread around different locations where people could sort of do document markup in the field. Our latest edition is Sooner Enterprise. So I mentioned earlier that we have about 125,000 businesses using and paying for our service. And what we have seen is that increasingly these companies are becoming bigger and bigger. About a year ago, companies started coming to us and saying, we have 1,000 people. We have 1,000 people that all got iPads. Can you help us? And so we have worked with companies like Ciena on developing an enterprise-grade product that sort of caters to the need of the IT department in those large companies. And what we are hearing from IT is that they want a way where they can manage their mobile workforce and the content that the mobile workforce has access to the same way they manage their internal network, right? I mean, the IT guys own the network and they see content access as an extension of that. So that's what we've been doing there. Some of the key features that our enterprise offering offers is Active Directory integration. Obviously, large companies have that. They want to integrate Sooner with that. They want to be able to organize users in groups. They're also very interested in reporting. So large companies want to know what is the mobile workforce doing? Where are they when they access the content? What content are they accessing? And more importantly, which pieces of content and sales collateral that they have access to leads to closed business. And this is one of the things where we think that tablets and so forth can really provide tangible ROI for today's large companies. We also have introduced our APIs as part of the Enterprise Edition. These are being used for integration with enterprise systems like Salesforce and other CRM systems that may be used out there. So that's really what we're doing as a company. We would love to show you guys what we're doing. We would love to show you how we can make a difference for your business. We believe most of you guys here are among the 8% of companies that are deploying tablets and other mobile devices. So please come and see us out in the back here when we have the break. Thanks a lot.
Thanks, Martin. Our next CEO is Henry Vogel from Raved. You have places you like. This is the mission statement. You have places you like. Your friends know cool places too. Raved makes it easy to discover, save, and share great places with people you know and trust. Restaurants, nightclubs, plumbers, nail salons, dentists, or auto mechanics, any business can be raved and shared, so you and your friends always know the best places to eat, drink, shop, and get things done wherever you are. So please join me in welcoming Henry Vogel, CEO of Raved.
That's great, thanks. Thank you very much, Ed. So let me just start off by asking a question. How many people in the audience use Yelp to look at reviews for places? How many people get recommendations from their friends for places they want to go out to, either when they're traveling or when they're looking for a new specific type of place? So what Raved is all about is helping friends discover, save, and share great places more easily with their friends. And one way to think about it is like Yelp, but with recommendations just from your friends, as an augmentation, a personalization of the kind of information that you can get. The problem as we see it, in terms of what you're using today, is that we'll get to the demo in a second. The problem we see that exists today is that it actually requires a fair amount of work to start over. It actually requires a fair amount of work to use Yelp to actually, or other online reviews. Yelp is a fantastic source of reviews, but oftentimes users that are using those online reviews have to actually read through various comments. They have to understand how many reviews were written. They have to understand what those different
users were, so that actually requires some effort. In addition, if you look at the new Foursquare that's just been launched, that's actually relying on check-ins in large part for the Explore part of the program, which indeed is also giving users recommendations, but in our mind, check-ins are just part of the story. That's a lot about what check-ins are, is where you are today. It's trying to broadcast in the moment where you actually are, and yet to actually try and look at history of check-ins, to try and understand that as an input, if you will, a signal for the kind of reviews that you can get, that also takes a bit of work. And third, surprisingly to us, Facebook, which is a fantastic platform for sharing where people can very easily like places, is actually not that easy to find the likes and recommendations that your friends have actually left. You actually have to go about 4 links deep to find places that friends have actually recommended. You have to go to a friend's page, you have to go to their likes, you have to scroll down past all the music and movies and politics that they've liked to a link that says other likes. And then when you get that, you actually get a whole stack of likes that might include articles that they've read or pictures that they've posted from their friends to actually read through and find the places that they may have liked. And then if you think about the fundamental way that a lot of users actually get recommendations from their friends, it's oftentimes via text or email or just asking them and having to jot down notes when you're in passing. And we think that process is pretty fragmented and pretty difficult for users to remember the places that they like or the recommendations that they've got from their friends. And so Rave is built on top of a lot of that existing data. It's built on top of Facebook and Foursquare and Yelp and aggregates that information, but it creates a layer that makes it incredibly easy to also share and recommend places from your friends. So we're great partners with Yelp and with Facebook and Foursquare, aggregating the information that you get from those networks, and then building on top of it the recommendations that your friends provide. So let me actually just give you a quick demo of the app. It's now available in the App Store for iPhone and iPod Touch, and it will be available shortly for Android. So perhaps if you can just... Could be connected now. How's that? But there'd be technical difficulties with the actual demo, not with connecting it. Still not getting it? Oh, there we go. So what I'm showing you here, Yelp, is basically, this is the discovery feed. This is the home page for Yelp. And what I've done when I've loaded up the app is it actually is looking at my location. It knows that I'm here in Mountain View, and it's pulling in various places that my friends have actually recommended. So those little icons in the bottom right are basically the number of recommendations that various friends have given. And you see that there's a mix of different types of places. There's restaurants, there's the Shoreline Aquatic Center, there's the Mountain View Farmers Market, there's food stores, and the like. And if you go into a place, you get a detailed view, and what you initially see are just very easily the recommendations that your friends have made. So this includes recommendations that I as a user have made, as well as those that my friends have recommended. And it's a mix of folks who can be both on the app and people that are just part of my friend network, part of my social graph that we're pulling in. So as an example, Don Stoyle is our head of product. He's been using the app, obviously, and he's raved the Shoreline Aquatic Center on June 18th. Now Max Mancini, another good friend of mine, is actually not yet on the app, but Max is in my social graph, and via Facebook, back a year ago, he actually liked the Shoreline Aquatic Center. So we've converted the likes that existed in the social graph on Facebook into recommendations. We've also included check-ins that people do multiple times to an existing place, or to one place, and we've converted those into raves as well, and we'll share that information, show how many check-ins, when their last check-in was, and the like. The other thing that we've done is made it very simple. In this case, I've actually been to this restaurant, or this place, but if I go to a place that I'm just exploring that I haven't been to, I can very easily rave it myself by just tapping that rave icon. I can write a tip about it if I want, I can share it to Facebook, or I can keep it basically just within the app and post it. And then once I've done that, that rave is now being shared with my friends. Now let's say I may find a place that I actually haven't gone to yet. In this case, I've been to the Tide Microbrewery. But let's say, for example, that I haven't been to this place, but it looks interesting, and I may actually want to go there and consider raving it. Well, instead of raving it, I can just hit the bookmark tab and basically keep it for myself. That's a way to sort of automatically add it to a to-do list, not share it publicly with my friends, but actually have it in my own directory. And that's actually the other key function of Rave. The first is around discovering great new places that your friends recommend and sharing those with your friends. The other is actually helping save places, save favorites that you like, so that you can actually get at that information, connect with those places, find them easily wherever you are. And so what I've done is by flipping over to the other part of the navigation, I've actually come to my friends and my own kind of places. This first list is just the places I've actually saved or bookmarked or raved about. So I've got about 317 places. Now I started with only about 30 or 40 from my social graph when we pulled those in, but I've obviously been beta testing and using the app for the last couple months. And just with those easy actions of raving or saving a place, I've added these different places. And if we go, for example, to that Tide House Brewery that we were just at, and we try and find it, it will actually be added to my list of favorite places. And there it is. So by virtue of exploring and discovering my friends' recommendations, I've actually now also built my own little personal directory, my own little black book, if you will, of places that I actually like that eventually I may want to go try and then rave and share with my friends. The other benefit of being added to this personal directory, in terms of the ease of actually accessing those different places, is that we actually pull in lots of other useful information about them. So take the Willow Street Wood-Fired Pizza Place. It's a place we probably order from every 4 to 6 weeks. And the kids love it, and it's one of the places that we've actually kind of raved about. Now, that place not only should have the raves, which are coming in, it looks like a little bit slowly, but we're also pulling in all the contact information about that place, just the basic things that you'd expect, the address and the phone number and being able to get maps and directions. But we've also pulled in useful links. So with one click, you can go to the Facebook page, or you can go to a menu and basically pull in the menu that you actually wanted to actually order from, get that pulled up and be able to just very easily call them on the phone, kind of make that order, and basically get that information. The other thing that we do is we pull in the news feed. So all of the different posts that that establishment may be actually doing to Facebook and eventually to Twitter and to other news kind of aggregations, this becomes essentially the RSS feed for that place. So I don't have to actually go find it on Facebook or remember where it was when they last did a post about some new menu item or about an offer. I actually have it all kind of in one repository within the app. And the same thing that we're doing from those is that we're pulling out actually deals. So we actually have an advertising, a mobile advertising kind of network and a server that pulls in the different relevant deals and related deals. In this case, the Facebook offers that Woodside kind of Fired Pizza does, and we pull it into one place. So we have this aggregation of all the information that you want to actually connect with right in one place. And the last thing I'll do before I conclude is just share that this is my directory, but I actually also can go just as easily and see my friends' directories. So I've pulled in my Facebook friends and my Foursquare friends into the app, and by virtue of doing that, I can actually pull in their places. We've aggregated that information. In this case, it could be friends who are on Raved, and I've got their content. It could be also the content from the social graph, from Facebook and from Foursquare. And if those of you who are interested in seeing this, it looks like we have a little slow connectivity, so I'd be happy to share it with you guys afterwards, or you can download it directly from the App Store. But basically, this is just, again, another interface to let me explore and browse and filter the various recommendations from my friends. So in closing, I know that we got to move on. The last thing I would just say is that we're excited to launch Rave. We're excited for those of you in the audience to try and download it, give us a whirl. let us know what you think. We've got some great lists in there as well, some places that have been seeded, recommended by Tony and Sajid and Ed and others from the Always On family. And we're looking for partners, whether that be content partners, advertising partners, establishments, places, or aggregators or local places that could help us.
Okay, our last CEO presenter is Yo Yoshida from Appalicious. So Appalicious' mission statement is bullet points. So I'm just going to give you all the bullet points because they're very cool. So, focus, enterprise, commerce development, management platform, providing government and business the ability to manage their own mobile suite of apps, including iPhone, Droid, and Web Mobile for one platform. Real-time ability to create and manage financial modules for business transactions, communication, and social engagement tools. First of its kind, multi-tenant, multi-vendor, multi-location administrative controls, and robust CMS to manage ticketing, reservations, content, advertising, sponsorship, messaging, event, and location-based information. So here to prove to us that this can all be explained in 8 minutes, please welcome Yo Yoshida. Come on.
Thank you very much. Sorry, I've never been in a crowd like this. So yes, we've created one of the first real robust mobile commerce platforms. We are about to launch with the City of San Francisco. We've been working with the State of California and a number of other government agencies. So we've also been working with some of the private sector businesses. We took a holistic approach to mobile commerce and what it meant to cities, governments, and big business, and how they can roll this out without having to go to an agency and drop $1 million on a back end, and then have an entire team managing it, and be able to provide mobile apps that were relevant to the citizens. We are also looking at it from the perspective that we didn't want to have the tremendous overhead costs of conversions. So our approach was to approach from the top down, looking at big government. They already have their customers, which are the citizens and visitors to cities like San Francisco. Also looking at businesses like franchises, Coffee Bean and Tea Leaf, etc., which have proven models for mobile sales, and taking their customers, giving them the ability to release their own apps with a simple management system, which is hierarchical. So from the top down, San Francisco Rentman Park. Perfect example, this is one we're launching in about 3 weeks. They have multiple departments within there. They have reservations and permitting, they have a business development that does ticketing, and then they have multiple other vendors and managers for each type of facility. So you're talking about the museums, the De Young, California Academy of Science, all the way down to ticketed events at the park. What they've been looking for the last 2 years was a solution to this problem, is how do we have one administration panel that can handle that? So we built this multi-tenant hierarchical structure with multi-vendor administration, so each person from the top down can manage each of its own controls and business functionalities for each department. So you have financial modules on the back end where you can literally go in and click and add a ticketing function for an event. Let's just say it's a one-time event, or if there's multiple events going on in the same venue, you have the capability of adding those business functions in. Our revenue model basically is a 1 to 3% convenience fee for each of the mobile transactions moving forward. We're also creating web widgets because we discovered a lot of businesses and governments still haven't rolled over and have the capacity to own web. Excuse me. So we looked at it from that approach, and then we looked at what citizens want. They don't want just a simple transaction interface. They want the information that the government or businesses can provide, i.e. from a Coffee Bean module where you have the ability to actually place orders. So we built a POS system into the back system where you can have someone as like a 21-year-old girl going in, ordering her half-calf, decaf latte with all the variables, having that being able to manage from the back end, and on the front end with a nice UI and simple interface for the customers. We also looked at it from the city's perspective is they own 1,200 facilities in San Francisco. So how do we provide that information layered into map in a respectful and reasonable way for each neighborhood, et cetera. So we have some interesting technology that goes into our layering of our maps, the ability to showcase not only location-based, but event-based layered over it, because many of the facilities have multiple events going on. So you should be able to find both using geolocation, events and locations. Essentially, we've been working for the last year with the city. We have 3 departments that are going to be rolling out using our platform. The mobile app really is a customer-facing side. The CMS system, we built it with the sense that they can't hire more developers, they can't hire more staff. So essentially what we're doing is giving them the opportunity through such a robust and well thought out system on the back end that they can easily manage it all the way down to an intern, all of their content in real time, each of the managers of each of the vendors being able to upload their own menus and manage their own transactions. Essentially, that's basically what we built, and if anyone has any questions, please feel free to contact me.
Thank you.
Thank you so much.
So we, in the finest, always on tradition, we've inserted something a little extra before we get to our networking break. We're going to have a fireside chat with Tony Perkins and Craig Batson, the CEO of Easy Ask. So please give it up for Tony and Craig. And again, let's give it up for these CEOs who came up here and pitched their products for us.
Thank you. So if I could bring Craig up with Easy Ask. He gets stage fright, so he said, hey, maybe I'll feel better if Tony's up there next to me. And I'm gonna say, but dude, I'm famous, and you should be even more nervous. No, I'm just kidding.
Thanks, Tony. Thank you very much.
Okay, where do you want to sit? I want you to feel really comfortable.
Really?
Take a couple of deep breaths. I'm just teasing. He is not stage fright. Okay, Craig, my man. Okay, so.
You're gonna wire this up?
Were you going to wire his iPhone? We will do that. So, let's talk about, while they're going to do that for you, Easy Ask. What is the vision for the company?
We actually have a really strong vision, Tony. And we're starting with actually a very rich, deep architecture. The idea behind Easy Ask is a paradigm shift in usability, certainly in mobile. But really, it's a similar vision that Apple had, and that is transforming the user experience, right? Transforming the user interface, something that's intuitive. Apple was very successful, not necessarily by providing new functionality, but a user interface that everybody really understood. It took them 20, 30 years to convey that message. But Easy Ask is doing the same thing in providing access to corporate applications. So, couple of comparisons. So one is IBM Watson. Right? IBM created natural language engine, Watson, a whole new concept, whole new paradigm shift. Easy Ask does the exact same thing, except it's optimized for corporate data. So capitalizing on that, Apple launched Siri about 8 months ago. And Easy Ask took a look at that model and said, we can do this, and we can do this for business. We can do this for corporate data. We give the ability on your iPhone or on your smartphone to hit a button, voice recognition, natural language connection to your CRM system, your BI solution, your database information. Hit one button, voice recognition, we provide the answer.
So how many people use Siri regularly? Raise your hand. Not a lot.
Right.
Not a lot, which is really interesting. I went swimming with my iPhone and they say that you got to give it 2 days to dry up. So I went in and I got the new 4S or whatever it's called.
Yeah.
And I think it might save my life, because now when I text when I'm driving down the freeway, I can now speak into my phone, and it actually works. So I'm a Siri believer. It probably will give me about 10 years more of life. Do you want to run your little video now? Is it time? Or
Yeah, we can run that. The idea behind this, again, is that we believe it's a series of paradigm shift in usability. And that is the idea of hitting a button, asking a question, there's an understanding of the content and the intent, and then we provide actually the answer you're looking for. Now, the reason Siri hasn't been adopted yet, first of all, it's in beta.
It looks like we got a, are we ready?
No idea.
Oh, there's no audio. I think we're getting it loaded here. Or, are we gonna have,
started?
can we reboot that and with audio? Someone please look at me and smile and go, yes. Thank you. Okay.
Get restarted.
Basically, it's
Here we
the
go.
assistant you always need, but never have. Let me show you what I mean. Let's say you're the VP of sales, and you're in a meeting with the CEO who asks you, how'd your team do last year? Now, maybe in the past, you would have had to be vague or ask for time to get that information. Not anymore. With Query, wherever you are, the answers are at the tip of your finger, as well as the tip of your tongue. Show sales by sales rep for 2011. And here you go. Answers that used to take minutes or hours or days now take seconds, and not very many of them.
This scares the shit out of my sales team.
Let's go again, only this time you're the CEO and you want to see how the first quarter went. Show win-loss ratio last quarter. It couldn't get any simpler. The secret is the natural language engine. That's what differs Query from other voice recognition apps. Natural language goes beyond the limits of keyword, and with Query, your data is converted from SQL coding to plain English, using all the lingo and jargon your company already uses. So you can ask questions pertaining to your business that you could never ask before. Show number of accounts by region or industry. Show accounts with no calls in the last 90 days. Show deals in the pipeline over $50,000. Questions dealing with accounts, campaigns, lead sources, opportunities, sales, it doesn't matter. If it affects your business, Query can handle it. It's powered by EasyAsk, the leader in natural language semantic technology. Hundreds of companies worldwide rely on EasyAsk to drive their CRM, ERP, and e-commerce initiatives. Admit it, after seeing what I can do, aren't you just a little bit curious? To find out more, check our website at www.easyask.com or call 781-402-5635, and we'll be happy to set up a demonstration.
Yay!
So who thinks that was cool? That's what I was.
That's okay. So let's talk about your work with IBM's Big Data Group.
Yeah.
And also eBay Magento. Magenta.
Fastest growing e-commerce platform in the world.
So how are those two deals working?
Really cool. So a couple things. One is, again, IBM created Watson, and everybody see the Watson Jeopardy challenge thing with the computer? Get the Jeopardy champion. Everybody heard about it? It was pretty big. IBM spent $2 billion developing this application and probably another $1 billion marketing it. But they created Watson, which was a natural language solution that could play Jeopardy. EasyAsk is a natural language solution optimized for business data. So we were engaged with IBM Big Data Group, and we showed them what we could do, and they said, that's interesting, can you connect the two up? It took us about 10 days, we got EasyAsk working with it. So we're now in their partner program, but I went back to IBM and I said, guys, why don't you just use Watson? You own it. And they just laughed. They said, Craig, do you have any idea how big Watson is? So we understood that. So, but what they got was really what you're seeing here, and that's the concept that we have a deep understanding of the content of the data, but more importantly, the intent of your question. If you type a question in English, if you speak it in English, we understand it. You map it to that corporate data, and we provide the result set. So the big data opportunity is enormous. On the Magento side, Magento is an e-commerce platform. It's the fastest growing e-commerce platform on the planet. eBay acquired them last summer. We're partnered with them. And EasyAsk has a very rich e-commerce solution. And my phone back, we get it, Marty? I don't think so. If we get it back, okay, how's your having? Yeah.
I guess you have to stand up here.
Okay.
It's plugged in, so be my guest.
Let's see if this works. Okay, so Land's End's one of our customers. Okay.
Very good.
Land's End is one of the customers that use Easy Ask for e-commerce, and it's a different e-commerce shopping experience. It's one that allows you to ask for exactly what you want, which is diametrically opposed to what Google taught you to do. Google taught you how to search generally for what you want, and then you filter. But with Easy Ask, you can search for exactly what you want. And let's see if this will work. The microphone. Men's dress shirts under $35. How about that? If it works. How about that? Yeah. World's shortest demo. So the beauty of that is that that's how you find things with Easy Ask in the e-commerce world. Can we show you?
Yeah, you were saying there, here, just trying to make you feel comfortable.
Thank you.
Okay, good.
Very comfortable. So in the e-commerce world, that's how you find products, and e-commerce vendors measure the success by something they call customer conversion. That's converting shoppers to buyers. And everybody had click fatigue sometime or other trying to find something. With Easy Ask, it's on the first page.
So is there a competitor to you in the e-commerce space?
There was a major competitor in the e-commerce space, a company called Endeca. Everybody heard of them? Big company. Oracle acquired them for
Right.
$1.1 billion in October, and we don't see them anymore. So
Interesting.
we're happy.
And then you have big deals cooking with Intel, SAP, and Salesforce.
We have opportunities, right?
Okay.
So we can talk about that a little bit. So with Intel Corporation and also with Gartner, this is indicative of where we're headed, and I think what I'm showing you is what the future of mobile interface is going to look like. The idea of hitting that button, asking questions, and get an answer, instead of trying to navigate your way through an app or typing all this data into a 3-inch by 2-inch screen, which is really, really painful. Intel's a good example of a company that wants to provide voice recognition into their CRM systems for the field sales force. And there's nothing different about Intel than any other Global 2000 company. They're going to all want to do the same thing. And right now, if anybody's used a mobile CRM solution, they're really pretty painful. The field sales force generally doesn't want to do it. So what Intel's looking to do is to deploy voice recognition, and truthfully, without Easy Ask, you really can't do it. We're the only solution that combines voice rec, natural language to understand the intent of the content.
So would you want to partner also with emerging private companies that make the always-on Global 250?
Oh, absolutely.
And would it be any enterprise app, do you think, would be something, or?
Well, again, we can connect to any data, right? So in a BI solution, we sit side by side with the business objects of the world, right? We sit side by side with the Cognises or the Oracles of the world. We access the same data, we just give you a different interface, right? Hit a button, ask a question, we give the answer, which, by the way, was what gave us the Gartner Cool Vendor Award for 2012, which we're quite excited about.
Yeah, I would say editorially, we're very passionate about the idea that if you're building an app that will have a lot of people using them, they would use it a lot on a mobile device, that you immediately develop for a mobile device while you're developing your web-based app. You are exclusively for the mobile device?
No, it's not exclusive. It actually builds on top. There's actually two solutions. There's Easy Ask e-commerce and Easy Ask for Business. Query, which you just saw, is an extension of Easy Ask for Business. So we provide the smartphone experience with voice recognition, but it's really built on top of our business solution.
So basically, if you're a company, even in the enterprise area, they should be talking, and you could envision Easy Ask's interface to enable your app. They should be talking like immediately.
Oh, absolutely. Well, if you want to go mobile, and everyone's talking about going mobile, you have to have the right user experience. We don't think we're going to replace, by the way, let's say Sugar CRM, one of our partners. We're not going to replace their the mobile version of the product. We'll enhance it. We're going to have their dashboards already built in. We'll help them.
Yeah, more food for thought in terms of our editorial opinion. You're going to see Tony Fidel tomorrow. If you stay around to the end, he's our closing fireside chat with moi. And one of the things he invented, or was the team leader for the iPod and ultimately the iPhone at Apple, one of the many unsung heroes that you don't hear about at Apple, but was really the one that led those initiatives. And he will tell you stories, hopefully, because he's told them to me and friends, about how Steve Jobs would have their team come back every night after dinner, like 3 nights a week, to fight over originally the iPod interface, with the idea that, you know, because it's hooked to the Mac, there's a bunch of functions that you will say, hey, that will work. You know, that's how they'll manage their music list or whatever on the Mac, where you have to do industrial strength functions. But what is it that people will want to use on the mobile app? And just keep it, you know, keep it as simple as possible, and don't try to, you know, deliver your entire app on the iPhone. Is that, do you share that view? Did that fit into your overall strategy?
In a sense we do, but the other side of that is that most companies are dumbing down their apps so that they'll run on a smartphone. You don't need to. I don't think a smartphone is a smartphone. I think it's a pocket computer that allows you to make phone calls. It's an incredibly powerful little box in your pocket. We're actually making those applications smarter. So, again, CRM companies, BI companies dumb down the app so it'll fit on the smartphone. We're actually making it smarter. We have additional functionality where you can go interactive and ask any question and get the answer for it. But it still fits on a 3" by 2" screen. And we think that's really the ultimate UI. I think that's cool.
So you all were just named Gartner Cool Vendor of 2012.
Yeah.
Now, that's good external applause. What was their reasoning behind your winning that?
They saw a user interface and a user experience and functionality they've never seen before. So one of the things with Gartner, I mean, it was really huge for us. We're pretty excited about it. We were at the Gartner BI conference, and by the way, I left there the second day to come to your Always On Demand conference, so I missed the little bit, but certainly worthwhile. The Gartner recognized something, and they recognized the future of mobile interfaces. They saw it with us, and so they were smart enough to give us the award. We're happy about that. What's really interesting was doing a deep dive with Gartner. We said, okay, who else is working on it? The old adage in technology is if you have an idea, 10 other people have it too. Right? There's not too much new in the world. And they came back with nobody, which, by the way, is incorrect. And you guys may know that Siri was developed not at Apple, but at SRI International, then spun off. SRI's got a new project called Lola, and Lola's going to be an enhanced Siri experience for banks. So they'll be connecting to corporate data, right, providing a vertical market solution for banking. And so they're entering our space, which is nothing but good. Right?
You know that whatever Lola wants, Lola gets. Glad you guys are awake. So what, we like presenting companies like EasyAsk because we think they're cool companies. You spend the time to come here. What kind of deals do you want to get done when you're here at the Silicon Valley Innovation Center?
So we got an interesting, maybe a little bit of a different origin, and that is that I discovered EasyAsk languishing in the bowels of Progress Software. I knew the VP of Business Development there, and they had this little project. It really wasn't going anywhere. I said, what are you doing with that? And he said, we don't even know. And I said, I know what to do with it. So I bought it, spun it back off, took the core team. And by the way, the core customer base that came with that, which were a number of the e-commerce customers, we have over 300, by the way, and a very lucrative OEM relationship with Infor Corporation, partnerships with NetSuite and with Sugar CRM. We're talking to SAP. We're going to tackle Sanjay's here.
Yes, Sanjay will be here.
That one on the way out and make that happen. But we've been able to achieve all of this without a nickel of outside investment. And part of that is that I acquired a $25 million asset when I spun this company back off. But now it's time to ramp it. So we've got to put feet on the street. We've got the marketing budget in place. So we've got to bring a CMO on board. We don't have a pure marketing mind in the company, and I respect that we need that. And it's time to hockey stick this thing because the window is wide open. The window for mobile is wide open. The window for e-commerce is wide open. We live in both worlds. So we're going to bring some money in and go execute for about 18 months, 2 years.
Money and then any app that would like to use you guys as an interface.
Love to chat with you. Absolutely.
Okay. With that, is there any other things? Because you're going to be out in the lobby making yourself available. Is there anything else we missed?
I think I covered all the checklists in my brain.
Okay, well with that, I think we're over. So now we're going to go to a break. We're going to have a half an hour or so of, we can demo a lot of these CEO showcases that you met, including Easy Ask. Great, congratulations, and best of luck going forward. Appreciate you being here. All righty, back in business. Here we go. Okay, I just want to remind everybody that for all you tweeters, our hashtag is SVIS12. You will see that they will appear on our little screens here, based on Airba. We also encourage you to take photographs. Right? And if you take photographs and you send it to, how does it go? Always on at airba.com. So Airba is it's up here. Always on airba.com. You can see that. Someone looks like on the front row. Thank you for taking that photograph. Looks like it was on an iPad, which is all good. Okay, I know that we have the Always On World Tour, and one of our most famous, one of our coolest guys that comes with us is Sanjay Poonen. He's one of our most popular speakers. Within the last year, he has been made the head of SAP's mobile group. So I know there's lots of aspiring enterprise mobile app companies out there. And Sanjay's name has already come up maybe 3 times so far. So I know you're all just shivering in your seats right now to see what Sanjay has to say. But again, Sanjay is a very good friend of ours. And I think when I look at all the big companies, and I say this as an editor, I get really worried about a lot of the big companies making this next transition. Obviously, mobile is one of the big transitions that big companies have to make. So I think they got the right guy at the top at SAP, and we've been very impressed to follow Sanjay and his efforts to evangelize SAP's mobile group. They bought Sybase, a couple years ago now, which has been central technology for them. And then Sanjay's going to stay on and join a panel of CEOs of cool AO250 companies in the mobile space. So without further ado, let's all give it up for Sanjay Poonen.
Thanks, Tony. Wait, all right. So it's a pleasure to be here, and I want to say, Tony, when you use that descriptor in the program, moguls of mobile, I thought that was kind of, I got to have one of those hats that, the Rajas of India had for a mogul. And maybe our marketing team is going to call us next the Sultans of Software or something. But nonetheless, it's a pleasure to be here, and it's good to see a vibrant audience. I'm told it's like 600-700 people, so it's exciting. This is a topic that's certainly very much, kind of near and dear to what's happening, not just in the consumer world, in the enterprise world. Tony, how much time do I have? It says 0, so. All right, okay, I just want to make sure I don't run over time with the rest of the agenda. Okay, good. Let me give you a little bit of a sense as to why this is a big opportunity and what we're trying to get done, okay? And frame it not necessarily with just an SAP point of view, with what I would be doing if I was an entrepreneur, if I was a venture person, and so on. The mobile market in general is a $50 billion market plus. And if you divide that into consumer and enterprise, the bulk of the attention has been on consumer mobility, where the likes of, RIM first and then increasingly Apple, Google, Microsoft are going to play in various different incantations, whether it's on a device smartphone, a tablet, the convergence of a laptop and tablet, and that's pretty well documented. You just have to look at the surge of devices today, where the world will have more devices, already has more devices than the population of the world. And increasingly, a number of these folks are bringing those devices into the enterprise. The point that's interesting to us is that we think that there's going to also spur, just like the consumer economy around mobility, there's going to be an enterprise economy around mobility. And we were one of the first to really look at that as an opportunity. Tony talked about disruptive innovation, and you can look at disruptive innovation in two ways. One is it's coming at you and it's going to be like a freight train that takes you down. Or you can take advantage of that momentum and transform your own business. And we think that great big companies take advantage of disruptive innovation and allow it to almost disrupt themselves. And when you think about, I do this often, I'm not going to do this because you've got too many people in the room, but in a smaller audience, I ask people, when you think of SAP, what comes to mind? Okay? And people who are nice will say, you know, enterprise, whatever, the nice sort of adjectives. And people who are brutally honest will say, hey, listen, expensive, hard to use, difficult to do business with, whatever have you. And in essence, a big part of the ease of use of enterprise software can be transformed significantly to mobility. One of the things I do as a part of my time is I spend some time with Stanford University teaching and helping one of the classes there in software design with a professor named Jay Borenstein. And I remember going to one of the classes where we were helping sponsor one of the enterprise. After a guest lecture, I asked the students there, when you think of enterprise software, you know, what comes to mind? And one of them said, you know, why does enterprise software have to be so inhumane? And I thought to myself, that's the common perception that these 20-year-olds, whether they're right out of college, undergrad, or grad, have, because they use Facebook or Google or whatever have you in terms of consumer software, and then they come into enterprise software and say, you're kidding me, is this what you expect me to use? And in some senses, we are guilty in enterprise software of having created a ton of functionality. And as you know, in any space, functionality becomes the enemy over time of ease of use. So we have started to embrace mobility as a significant way in which, and you're going to see that in a second, as I show you some examples of that, as to how it could make a user experience delightful. And we have some principles to the way in which we build our applications, which are mobility first and consumer-grade user experiences to all of our apps going forward. We began to embrace this around the 2009-2010 timeframe, and you'll see a lot of our design principles kind of flow with that goal now, consumer-grade, mobile first. That means that whether the application comes from an SAP backend or a non-SAP system, that's the experience a customer seeks to have, whether it's an HR application or an expense approval, or a customer-facing application, or something that's at the retail storefront, or in a banking consumer type of application. What we began to then ask ourselves is, what are the necessary ingredients of an enterprise mobile portfolio? And we decided to focus our attention in four strategic areas. Number one was the entire aspect of mobile security, and ensuring that as these devices either are handed out to the folks who come out inside a company, or bring your own device as they're brought in, we're able to ensure that those devices are secure as one more endpoint. They're protected from all the types of things that could happen, whether it's jailbreak or if they're lost in an airport. But they could also become a place where you could secure the applications, the documents, and eventually be inside not just a phone, but also devices, a la the Internet of Things, which I'll come back to in a second. So that was our first area of focus. The second was a building of a mobile app platform. And actually, by the way, the first part, you could think of that as the equivalent of what Symantec and McAfee and a number of other companies did to the laptop and to the device that was a laptop, now extending in much bigger ways to devices. The second was a mobile app platform that allowed you to build applications very quickly in a matter of days and weeks. And you could think of that as the analog of a WebLogic or a WebSphere or SAP's own NetWeaver platform, built not just for the web, but now for the mobile web, whether it was the native experience that you wanted or an HTML5. And the goal of that mobile app platform is to insulate you from two aspects. One is the back-end heterogeneity of data sources that you set, whether it's an SAP or an Oracle or Salesforce or whatever. And the front-end diversity in devices, whether it's iOS or Android or Windows or bring your own device, HTML, whatever it is, right? And as long as there's heterogeneity on both ends of that, the back-end data sources and the front-end devices, a platform provides you an ability to not have to write things native every single time or write custom adapters to every single time. That's really the benefit of a web application platform 17 years ago. If you build a website, let's just say, in 1995, or 1993, 94, you're really excited when you got, a bunch of HTML code, maybe some CGI scripts, and in 1995 you got your first Hello World sitting on a Netscape browser or an Internet Explorer browser. And then 10 people came to your website, 100 people came to your website, 1,000 people came. Ultimately your scripting and all that stuff on the back end keeled over and you said, I need an app server. Okay? It's much the same way today that we see the mobile world developing. As apps start developing, you need a mobile app platform. That's the second pillar. The third was a focus on mobile applications built on top of that platform. Either applications that were enterprise focused, B2E, business to employee, inside your firewalls, or consumer focused applications, which were B2C. In other words, allowing someone who is your customer's customer, a consumer, to be able to get information served out for you. So mobile banking, a number of our customers today look at a mobile banking application that allows you to transact or check your balances, maybe even submit a check through your phone using the camera capability of it. But the same thing could exist in utilities. If your phone line or your electricity line goes down, why not allow the ability for a consumer to report that problem, check what's happening on their mobile device, maybe even submit a picture of a place where that telephone line is down to the customer service department of the PG&E. And in fact, we start getting the citizens to help many of these companies become better and better service-oriented industries by focusing on the consumer. So that was the third area of focus. And the fourth area of focus for us was a messaging infrastructure that today handles a lot of the world's SMS messages. When we acquired Sybase, Sybase had acquired a company in Mobile 365 that handles a significant part of the world's SMS messages. Now on surface you might say, listen, text messaging and SMS messaging is kind of passé. But let me give you an example as to how what may feel like a mundane messaging business becomes very strategic in the context of a business like ours. When you go to significant parts of the world that are unbanked, in Bangladesh, take for example, one of our large customers in Bangladesh, Bank of Bangladesh, has about almost 1 million, 500,000 consumers that are on their mobile banking solution that we've helped them build. Their head of that initiative basically told us that he sees an opportunity for half of the population of Bangladesh, which is 80 million people. The population of Bangladesh is 160 million, and pretty soon may actually surpass the population of the US. Half of that population, 80 million people, have never seen a bank ATM card. They don't know what that ATM card looks like. They don't know what a bank looks like, but they all have a phone. Okay? And as you know, because Bangladesh won the Nobel, I don't know if it was the Peace Prize, the Economics Prize last year for microfinance. Many of these folks now, through a phone and secure SMS, will be able to get a message that allows them to get a microfinance, small authorized loan payment to buy their appropriate agricultural purchases for the day. It might be a few rupees or whatever that you need for the appropriate daily purchases. And that could cover half the population, maybe all the population of the unbanked. And if you look at the world's largest, fastest growing populations, Bangladesh, Indonesia, Philippines, Pakistan, Nigeria, these are 4 or 5 countries that are going to be growing the fastest over the course of the next 20 years. And by the way, the next 20 years, population is going to look very different. The population of China is going to start decreasing over the next 20 years. These countries have a significant opportunity to get to the actual consumer through a phone and through things like SMS messaging where the bandwidth may not be at the 3G or 4G levels as yet. Okay? So those are the types of use cases that we are looking at that allow us to be able to build that out. So in essence, that's really what we began to focus on. We are today rated by Gartner and Yankee Group and so on as the leader in the enterprise mobility space for the breadth of our vision and the extent of our platform. And I tell you that a key part to our success is helping many of you who are smaller companies hopefully build your applications on top of our platform. For example, we decided to partner with 2 companies that I think are visible in the list that was on here, help augment our platform with a framework. One was Accelerator and the other was Sencha. We also did a similar partnership with Adobe PhoneGap. And we are very, very comfortable with the notion of maybe 30–40% of what we can achieve will be serviced by SAP, and maybe a good 60 or 70% will come from the ecosystem. It could be bigger companies, it could be smaller companies. We certainly partner with the bigger ones like Apple and Google and Microsoft and RIM or whoever have you, and we follow their market share in the way in which the device landscape plays out. But I expect that many of you, whether you're a venture capitalist or a smaller company in this room, there's an opportunity to build on our platform. And what you get then is an access to our 200,000 plus customers, our partner ecosystem, and we're able to hopefully innovate together to solve some joint customer problems. Okay? So with that, what I'd like to do is just give you some examples in illustrative fashion as to what these applications could look like. So if you think about, I'll give you some very, very simple applications. The simplest one is one that I would call sort of a workflow application. It's going to look mundane to you, but for everybody who has an ERP, this is built by the way for the form factor of a phone. But let me just blow it up so you can see it a little better. Who has an ERP application, you get a number of these annoying workflows. And the workflows ought to be one where, rather than going back to your laptop and your email system to approve it, you have a simple list that you can pick, you choose, and typically you're doing one of 3 things with a workflow. You're approving them, you're rejecting them, or you're forwarding them. If you're forwarding them, you get a list of your address book. Maybe before you approve them, you add some text. This is my very eloquent text. And you approve, and you can see that that particular item went off my work list. This simple process that often is annoying to a lot of folks who have business processes takes them minutes and minutes. Maybe they've got to get back to the laptop, log into VPN. It can be done in a matter of a few seconds in the comfort of an airport lounge, sitting waiting for a plane. Okay? Nothing sexy and sizzling about that, but it shows you a very simple app that when you've created a simple mobile workflow for, and by the way, that could be an expense approval. I showed you just a way in which you're getting access to systems. It could be expense approval. It could be anything in a business process platform like SAP or Oracle's that needs to be mobilized. Let's take another example in HR. Okay? Imagine a future where you look at your entire HR organization through business cards, where you can navigate up and down a hierarchy. You can look at the various different attributes of a particular organization. Potentially, for example, here I want to look at attrition rate. I want to look at attrition rate driven by the employee. Why are people leaving my company? Okay? So that's attrition rate driven by the employee as opposed to by the employer, involuntary attrition. I could look at this by organization chart. I could look at this by region. Okay? And it just gives me a view of whether it's Google or Apple Maps fed right in here, and I can drill into that. Let's go back to the org chart by, I hit the wrong button, give me a second. Go to the org chart by employee, and this card type of view. Let me drill in. Okay? And you notice how simple that gesture motion was in a interface like this. Okay? And with the notion of sort of pinch and zoom and gestures, if you take that same principle and the principles I talked about, which was mobile first, consumer grade user experience, you rethink so much of the enterprise. Okay? Quite frankly, when I put my iPad for the first time in front of my 2-year-old twins, it took them 30 seconds to figure out the gesture motion to browse their photographs. And I thought, to myself, when this 2-year-old boy, one of those two, or both of them, become 6 or 8 and I put them in front of a laptop, they're going to expect that screen to move in just the same way, right? So when you think about the user experience that's gesture mode driven, you can rethink so much of the enterprise. That's one example. But let's get back to the storyline. I'm looking at attrition that's high, and I notice here, for example, that this guy, William Allen, has got a high attrition and a low employee satisfaction. So what do you suggest we do with this guy? Well, we could fire him or delete him from the org, or we could just have a conversation with him with all the appropriate metrics that are right there coming out of the system, and evolve this organization so that I'm continuing to build a high-performance, low-attrition organization. Now, this application is no tethering at all to SAP. It could be sitting on top of PeopleSoft. But I could make the training of this application so easy to use that how to use this app is also embedded like a built-in video inside the app. Okay? So for example, I want to know how to sort those business cards. It tells me just double-click on the app itself. And let's go back, drill in here, and it says if I double-click on this, it will sort it. Okay, I just learned that from following the video tutorial on the application itself. Now, this is the way we think mobile apps are going to be built. You're not going to, we think the future, for example, you go into an IKEA to build your dining table set. In the past, you got a big manual with like 10 pages. The future of building a dining set is watching a video on YouTube. Okay? So let's make enterprise apps also so self-navigable that the training to do that app is inside the app itself. You don't have to send people to training classes. That's how we think about sort of mobile first with a consumer-grade user experience. Let me show you one or two final examples. Let's take now, that's more sort of inside the employee force, but let's now take an example of a retailer. Imagine, if you would, that you could provide a store clerk in a Nordstrom or something like this, a very simple way by which they could navigate all of the items that are on their catalog. This could be a live view inside the retail store, and just to be cool, we actually even made this such that it's sort of navigable through the accelerometer of the iPad. So if I was on Apple TV, you could see me dance around with this and spin around, you'll get the entire view of the room. But let's actually go inside the room and try out some crazy outfits. So where's Tony? Tony, what do you like? Some pink pants? All right, there we go. I think Tony would look good in that type of outfit. He's not quite an extra small, so let's make him a medium. But you get the idea, right? We want to make these mobile applications systems of engagement. They got to be engaging. Now this is obviously intended to be in the hands of the store clerk in the Nordstroms or whatever, but it could also be the face to a consumer website where we're building simple retail applications. I'll give you some examples of that. You could imagine the floor plan of you're going to Best Buy or to Home Depot and you want to design your own room, okay? So you go in here and you pick the appropriate room. You may actually submit a photograph and you may want to pick the background color of let's go back. Design your own room, and let's just say you want to pick your various different walls and floors, and you want to test this particular color on that floor and this particular color on that based on paints that are available. And by the way, that paint could be tying into your inventory system, and you could actually position items right on the floor itself. Okay, so let's basically put there and give this person a bed and rotate it so it's sort of fitting in there. Okay. You want to give this person a dresser, okay, and move that down here. Okay, I've got the back to the vine, but you get my idea. Let's put a TV on there, okay, and rotate that some. And now you can kind of see this person's he's watching TV, okay, you get the idea. But I've now simulated what the room's kind of looking like based on a picture that the customer takes, and now I've made this so much richer of a shopping experience, okay? So these are the types of things in which you take a simple idea of how a customer wants to be able to use the fact that on this device are a couple of things that a computer never had for years. A camera, okay? the ability to simulate through a catalog, and so on. So I could go on, but in the interest of time, let me pause there and tell you that the future of possibilities as you bring together consumer and the enterprise is huge. I'll give you one example that just I faced today. Okay? One of the blessings or curses of my job as a global company working with a lot of my teams and so on in Europe is there are often calls set up at 5 or 6 o'clock in the morning. Okay? And, you know, that's the nature of doing business with Europe. Well, every now and then, we'll set up the call at 5 or 6 o'clock. I'll wake up at 4:45 so I can take the call from my home office. And some morons decided overnight to cancel that call. Okay? So I wake up and at 4:45 I realize that meeting was canceled. Well, wouldn't it be nice if the calendar of my system could communicate to my alarm clock, hopefully both are on the internet, and push my alarm clock back by an hour? Okay? That's possible today. It's called the Internet of Things, a machine to machine. As long as it's on the internet, all of these devices can connect. And maybe if it's on the East Coast and it's a cold day and the trains are late, you know, push back my day another 15 minutes. I do my day, I come back, and as I'm walking back home, right by the store that I'm in, my phone's alerted that my refrigerator is low on milk, because my refrigerator is on the internet. Okay? And just because I happen to go into the store that has this milk available, it also has a cross promotion for the yogurt that I like. And it guides me right to the aisle where that yogurt's available. Okay? Those are the types of things that we think the future of mobility will bring to consumers, and the marriage of both the enterprise and consumer. Very, very exciting, and I look forward to helping each of you building great, great businesses in this new economy. All right? Thank you.
How many entrepreneurs out there want to do with Sanjay? Well, do a deal with Sanjay. Raise your hand. Everybody? We've got a couple guys over here. Okay, we're going to have to, you do, Petra, I knew that. Does anybody have, well, we have room for like maybe one question right now, but Sanjay will stay on to the next session. Does anybody have a question that you want to ask in front of 350 people? Okay, I think we're in good shape so far. Okay, so with that, have a seat. And we will bring out, Sanjay, of course, as I've already said, we're a big fan of Sanjay and feel like for a big company, he's one of the entrepreneurs leading his company into the mobile space. But we have a great group that we put together called the New Moguls in Media. Our illustrious host will be Aaron Daniel of AT&T, and so he's going to join us now with his team of moguls. Welcome, Aaron.
Thanks, Doug. All right. Good morning, everyone. My name is Aaron McDaniel. I'm in business development strategy for AT&T, little company. And here we have 5 great individuals, entrepreneurs, executives within the mobile space. And we wanted to talk in particular about different trends going on from that perspective, get their unique thoughts on things. We'll talk about a variety of trends, everything from Sanjay, what you had mentioned around consumerization of IT and things along those lines. But to start out with, we can go one by one, have everyone introduce themselves, and to get to know each other. If you could share what your favorite mobile technology is, I think that would be a good way to start.
I think I did, so I'll give the other folks a chance to.
Okay, go ahead.
So my name is Mark Fried-Mills, and I'm the founder and CEO of Sonar. And what we do is we provide a platform for what's known as mobile content management, which typically means that it's about enabling the mobile sales force to have all the relevant information available on their mobile devices. And when you're an entrepreneur, you tend to spend a lot of time on your own app. So yeah, I have to say that I love my own app, our own app. And what I love about it is that it's so exciting to be out there and see what businesses are doing with mobile devices. There's just so much innovation going on. People are finding so many interesting use cases in terms of how they have mobile devices help them do more business. You know, we, for instance, are working with a company that's in the business of cutting trees. You know, they're now using iPads there, taking pictures of the trees, and sending that back to the back office to get a quote for what that job should cost. So just a little example.
And Laura.
Hi, my name is Laura Yeses. I'm the CEO of SugarSync. SugarSync is a premium cloud service that lets you access any data from any device. So you can sync your data from your computer or from your mobile device up to the cloud and then access it from that other mobile device, and which also makes it very easy to share and always stay connected and collaborate.
I'm Katie McMahon with SoundHound Inc., which is a company positioned to shapeshift how we interact with sounds around us. Most well known for very fast music recognition and also some interesting sing-hum recognition technology and also some voice search technology. My background in mobile started off in Tokyo, so back in 2000 when I saw people interacting with devices, it's the way we see them now today in cafes, heads down, even though a bunch of girls aren't on the table, they're meant to be having a moment together, but they're actually interacting with friends that are on the Shinkansen driving or coming in to meet them. It's interesting to watch now technology in the West having caught up, if not surpassed, those innovations we saw in 2000, 2001, coming out of the likes of Japan and Korea. So by parlaying that into what I think my most favorite mobile application is, I have a high bar in terms of futuristic use of it. But I do think watching the trend of how an individual would interact with a device through gesture and through the air in the lungs will be the phenomena that we'll witness perhaps the next 10 years. That will become a hallmark of user behavior.
That's good.
My name is Ty Allen. I'm a founder and president of Monkey Mobility. Monkey Mobility is a platform that allows for the deployment of single-purpose devices. So we have customers using iPads and Android devices in retail settings and hospitality settings, gyms, all kinds of places that typically wouldn't have seen that kind of computing device. And they're deploying hundreds or thousands or sometimes even tens of thousands of devices. And they need to manage the device level as well as the apps, and then the app settings on those devices. So I have a lot of favorite deployments, but maybe one that I would just point out is some customers who have retail stores that have more than 50,000 SKUs available in the retail store, and there's no way they can carry that much inventory in a given location. So they're using an iPad or an Android device to allow their customers to self-serve into all those products. If they're unavailable in the location, they get it shipped to them. So they've extended their ability to distribute their SKUs to their customers with a really inexpensive and easily managed device.
Great. So let's start with the foundational question. We'll start with you, Sanjay. So where do you see the mobile industry right now in terms of life cycle? Still in growth, or has it reached that maturity yet?
Oh no, far from maturity. I think we're in the consumer side of it, in its really growth, and as a result, probably the enterprise side behind that. Just sort of a couple of stats. There obviously are now catching up as many mobile devices as there are people in the world, but not all of them have brought those devices into the enterprise. So even among our largest enterprise deployments, there's still a fraction of the number of employees. And if we look, for example, in our base, we have 200,000 customers. We estimate those 200,000 customers have 500 million employees collectively. This is very far from 500 million devices inside, but there should be very soon. So it's very, very early stage, but it's probably one of the most exciting high growth spurts that we will see.
Yeah, I think that's right. I think there are plenty of ways to go here. I think that if you look at other industries like or other times in the history of computing, right? When you look at software and the PC, right? There was a time where there was a lot of apps out there. Now there's not so many apps, right, on people's PCs. I think with mobile, we're at this point right now where there's been a lot of apps coming out. You see devices that continue to evolve. I think now it's sort of getting into the next step, which is about consolidating, providing integration, and providing real ROI, right? There's a lot of businesses, as a matter of fact, 80% of all businesses in the US today are buying, tablets for their workforce. So what is the ROI on that? You know, what does people do? What is the promise of mobile productivity? What does it deliver? And I think that's really what the future is about here. And I think the kind of things that SAP is doing and we're doing, others doing for business, I think is a big part of what the future holds. I think for consumers, it's also very exciting. I mean, I speak to my parents on FaceTime in Europe every weekend. I think that's very exciting. I do that for free. So I think there's a lot of exciting times coming up.
Yeah, I mean, classically, you look at this type of question by saying, you know, what percent penetration do we have and things like that. And by that classic definition, if there's 1 billion or so smartphones, we're not at the very beginning. We're certainly further up the curve. But if you think about how people use them, which I think is a little bit of what Martin was getting at, I think there's just so much more to come. And one of the things that we're envisioning is that there's really nothing that you can't do from a mobile situation. You don't have to use your computer and be in the office for anything. Now, there may be things that are easier to do in the computer, but there is nothing that you can't do in a mobile situation. And we're really focusing on trying to provide that experience alongside some of the complementary applications.
I guess one of the most exciting areas for mobile growth in the future and trends will be the hyper-localization of user behavior, contextualization, and relevance. So as we see an explosion of the creativity that's been brought onto these core platforms, something will have to shake out where ultimately it still comes back to segmentation of real relevance and passion points. So that's an area that I think we'll see exciting things from.
So maybe I have a bit of a unique view on this in that obviously everyone in this room probably has some sort of smart device. And most of our customers are that same way, and then they're buying a whole bunch of devices that don't belong to their employees. And they're putting those in place and having hopes that 50 or 100 or more people a day will interact with each of those devices to drive their business. So that, in that sense, we're seeing devices get used in a non-personal way, but giving people a personal interaction with a product or a service of some sort.
So, and Katie, your answer kind of morphed into what my next question was going to be for the general group is, where are the most exciting areas of growth? Where do you see it really taking off, whether it's enabling other mobile technology or if it's strictly just the smartphone, tablet? Where do you guys see that growth happening? Start with the time.
Well, I hope that the evolution continues into all kinds of form factors. You know, right now we talk about phones and iPods and tablets, but more interesting is seeing purpose-built devices. So we've had customers come to us and say, hey, we're not going to put a tablet in place, we're getting a custom-built system that has its own set of inputs, and the display is different than what it would be on a tablet, and we need to manage that remotely, and we are going to put some apps on there. So non-traditional form factors, I think, are an evolutionary step we're going to see.
Maybe to watch how the form factor, but the backend specs have to be so much quicker updated, real-time updates. So if you look into the car, we know that as a mobile device, just start thinking of the automotive industry as maybe the largest mobile network on the planet has a potential. And the relationship between the hardware side, having the guts built in, yet that industry, I think we're seeing a very quick iteration cycle suddenly, when it used to take 3 years for something to come to market. They will have to, on a competitive level, be able to push an update and be up to speed.
I'm kind of torn on this topic with this question of special purpose built, because the cost advantage and the flexibility that people gain from more general purpose devices like a general, iOS or Android tablet is pretty compelling. So if you think about the places where there were purpose-built devices, such as special education or healthcare, they're actually going towards the general device and then just using the apps, which ends up being much cheaper and more efficient. So it seems like you have to have a really compelling use case for why something has to be a different form factor, because if someone already has the general device, that's essentially almost free.
So I think what I'll add to this is that I think that the word mobility today means a lot of things. I look around here
And the amount of people here that I see that has 3 devices is pretty high, right? I mean, you bring your smartphone, you bring your tablet, and you bring your laptop. And so I think that one of the first things that I think is a big opportunity here is to cut down on that. And by the way, don't also bring your portable hard drive and your portable printer and whatever you can find, right? I mean, I think today's mobile life is not easy.
And the cables.
And the cables, right? I mean, all that stuff we're carrying around. So I think the big opportunity is let's cut down on the crap, okay? Let's get some more space out of the overhead projectors and the planes. Amen. I love that. On that note, I think that a lot of the opportunity is really around the tablets. I think the tablets, they provide something that we haven't seen before. I mean, a lot of us were sort of working with smartphones before, trying to get people to do things on their little Nokia phones and so forth. Did not work. What's happening with the tablets is really that they represent a tremendous opportunity to do business in a new way, for us to come up with new applications that are unlike anything we've seen before. So to me, it's about the tablets. That's the form factor. There's going to be a bunch of different factors there. We see the iPad start with 10 inches. We see the 7 inches. There's going to be some other variations around that. But I think building those and building apps and services around that, that's where it's all going to go.
I think just very briefly, whether the number of devices, is 2, 3, 1, we're certainly seeing a lot of interest in managing that complexity, because the diversity and the security and the risk of them does create a challenge. And in the past, if it was just a laptop, now that's multiplied by a factor of 4. So the whole notion of mobile security, managing devices, on average, those devices have 40 apps, hundreds of documents, and could be left in the airport. So that's a problem. We're certainly seeing a lot of interest in. And then I think as it relates to apps, any of the apps that could take significant amount of the pain away from employees who have paper to fill, business processes to fill, that just could be significantly more productive through a couple of things that I illustrated that a phone or a tablet have. Like, for example, location awareness, like a camera, like gesture-based ways. You rethink them and become radically simplified, and all of a sudden you're empowering your people with productivity that's significantly better. I think it's not just going to be the employees. If you look at these big suitcases that the pilots drag into the plane, it's just a bunch of paper that now many of the airlines are now replacing with iPads that are the flight and landing instructions for the various different airports. There's no reason why that can't be digitized. And guess what? It's not just easier, it actually saves some fuel to have a little less baggage on the plane. To every single thing, I mean, paying your check over a mobile banking app. Those are the types of ways, when you think that way, you start asking yourself, why do I need to do this in a more manual, automated process? By the way, this is what ERP did, 30, 40 years ago for paper-bound processes that were spreadsheets and so on driven. I think the same thing's going to radically change a lot of what we see with the mobile first user experience.
Great. Thank you. So, Laura, let me ask you, when you look at mobile, I almost feel like when you bring cloud into the conversation, it's almost like peanut butter and jelly. They go together really well.
Mm-hmm.
And so, how are you seeing them enable each other, or maybe even hinder each other in some respects?
That's a good way of putting it. The way I think about it is that mobile is driving cloud. So there were cloud applications that predated SugarSync, such as, let's say, online backup, but those weren't driven by mobile, and they haven't grown as quickly. So frankly, I think the motivation for people to use cloud is to have access to the data now. In the case of our application, you also are backed up, you also can collaborate, but I think the driver and the reason why people really want to use the cloud is because of mobile, because they want to have cloud is the best way to have access to your data from your device. And we had a lot of customers, or I had people tell me, once they saw their first tablet, they kind of get it why they need cloud, because the tablet, thank you Steve Jobs for not putting a USB port on there. It's not very easy to get your data on there except from using the cloud. It's really the
Any other thoughts from the rest of the panel?
I think it also enables a very interesting opportunity for competitive differentiation on the platform agnostic moment. So if I'm in love with this one particular device that I had used for 3 years, and I had a history built up on it, and bloop, I've dropped it into the puddle. I was kind of interested in this new device that's shiny exciting and it happens to be a different platform, the sensation that my stuff is up there and portable across platform is very, very good to the mass market on a very basic message level. So I think that's something that if you're playing in either of those spaces or conjointly, to be very aware of how that gets messaged and sent out to the end user.
The thing I wanted to add about cloud and tablets and mobile, right, is I think that whether we like it or not, we are going to have multiple devices, and nobody works alone. We're going to be working with a bunch of people around us, internal and external. The ability to share and have access across devices is going to be very key. And I believe that the cloud represents sort of a method paradigm for having all your stuff in one place, right? For instance, Sonar, we often talk about what we do as the file system in the cloud, your company file system in the cloud that is accessible across all these devices. And I think in this world where we all use different devices and so forth, and the devices come and go, as Sanjay said, we lose them, etc. I think the cloud is a choke point. The cloud is a place where you can send out poison pills to kill the content when it gets in the wrong hands. It's a place you can make sure that whenever your employees leave your company, that the company doesn't get in the wrong hands and all that. That is what the cloud does. And I believe that the world is moving towards a time where it is really on device. So there is going to be a variety of devices of different brands and manufacturers out there. And the cloud is the thing that ties all this together.
So Ty, let me ask you in relation to some of the tablet and other things Mark was talking about. I mean, where does, obviously the cloud plays in quite a bit into your guys' solutions, things along those lines, but any comments along those lines?
Every one of our customers has their data somewhere. They all now call it in the cloud. And whether it really is or not doesn't matter. It's something they need to get to the devices in a way that allows their customers to use that data. And some of them are better than others. It's interesting to see how the integrations often go. But there's a lot of new emerging technologies that help that data get out in a replicated way to those devices, even in a non-personal way. So we started our business because we thought there was this interesting connection between mobile and cloud happening. And frankly, we looked for lots of different points where that was happening and just happened to find this niche. I think there's tons of them that have not even been explored yet that are going to evolve over the next few years.
I would just add very briefly, sort of corollary to my statement that said you build with a mobile first. And it may seem antithetical for SAP that's sort of been the biggest and largest on-premise software. I would build, if every one of you, I would advise you to build a cloud-first infrastructure. If you can build it on Amazon today, it's one of the most cheapest, reliable, and so it doesn't have to be that, but you look at the way in which you can use sort of compute power, whether it's them or Rackspace or other, that pricing curve is just going to be so much more economical for you, and many of you are already doing that. So I think that, today, if I was a startup, I'd build it with a cloud-first infrastructure in mind from the get-go, as opposed to design it on-premise and then cloud later.
So when I look at mobile, the biggest theme I see is reinvention. And so it's, existing companies needing to reinvent themselves, reprove themselves in a mobile environment, as well as some of these core things that we interact with on a daily basis having to change for a mobile environment. So Katie, let me ask you in relation to things like search, discovery, around SoundHound and other thoughts on that. Where does that come in, where you have to reinvent the way people are doing things so that they work better on a tablet or a...
Sure, and it's almost the cutest scenario of reinventing how people used to note a song, right? You hear a song from the radio, or maybe you're passionate on Saturday morning to watch the top 10 countdown, and you would note it down, or you push a record button, right? Very old school pen and paper. So the leapfrog on that has been the concept of music recognition. Really, Shazam being the first to have taken that to a global scale. SoundHound with its own proprietary, extraordinarily fast sound capture, right? So that's shape-shifting a user behavior. We knew mobile devices in 2000, we just spoke into it. Then you saw someone go click, click. You thought, whoa, that was interesting. Back in 2001, 2002, the devices that shipped without the camera. And maybe in 2004 and 5, you might have seen someone do this with their mobile device, and you might have thought they were crackers. Like, what are they doing? And today we see them doing that. Oh, they're just capturing some sound, and they're finding out what it is. So it's taking what we've always had intrinsically, how do you search for something, be it in the library to going like that for a Google search. These devices will inherently be your go-to for taking any stimulus around you, be it an input from your brain, transfer from your fingertip, from your voice, or visually snapped, telling you something. So how do we transfer all the inputs around us into something that's contextualized, utility, and relevance, and instantly actionable off the back of it?
But any other thoughts about this idea of reinvention, whether it's for your own businesses or other things you're seeing out in the market?
Yeah, I would say, I mean, to me, I mean, mobile is really redefining work, or it's enabling a redefinition of work, right? Where, you know, I mean, my parents' generation were totally 9 to 5. You know, working at home was unheard of. Working on the train was unheard of. You know, we heard about your twins. I can't imagine how they're going to be when they get to work. I mean, what are they going to expect? Working on the beach, etc. I mean, work is really changing, and it can be done in new ways. It can be done anywhere, and I think that's really what I think is exciting. And I think there's a strong link between sort of culture and mobile behaviors. You know, we heard about Japan earlier. You know, I've sort of been in the area of mobile on the business side, and when I started soon in 2005, I went to Japan because that was sort of the homeland of mobility, I thought, right? And it is, and it was. And I went out there and I learned that mobility in the workplace there means nothing because you work all the time. And when you don't work, you go out and drink. And while that can be business too, business applications have never really taken off in Japan, right? What's taken off in Japan are things like mobile TV, you know, karaoke, you know, applications and things like that. You know, I have a thing I call the Starbucks Index. And the Starbucks Index is how many devices are CPUs that are given to Starbucks around the world. And I'll tell you, when you walk into a Starbucks in Japan, that index is very low. You don't see many mobile devices. Whereas if you walk around here down the road to the closest Starbucks here, you're going to see dozens and dozens of devices, mobile devices that being used. And so there's a strong link there between sort of, you know, culture and how people use these devices.
So Martin, let's talk about that a little bit more. So in terms of advice that you have for entrepreneurs, the emerging mobile, so to speak, when you look at global, is it something that we should be designing our products and thinking with global in mind first, or local first? What are your thoughts?
I think that there's always two models. I think either you can be really smart and you come up with something based on some insight you have, right? Maybe you worked in some vertical and you understand there's some workflow in that vertical and you build a solution based around solving that need, right? The other way of approaching startups is kind of what we did, which is when you're not so smart, you just say, I think there's something in this area. And what you do instead is you move your feet fast. You try different things, you try different use cases. Like when we started Sonar, we were a little bit more consumer focused, and we thought it was a lot about getting access to pictures and things like that. But the market told us it was a business. There was businesses that would pay for this, that would adopt it and so forth. So that's the other way, is to move your feet quickly, you know, build intelligence into your mobile solution so you know what people are doing, you know what works, which devices they use, etc.
You know, I've been involved in this, you know, global first or global later decision for quite a while. I ran the international products group at Netscape 10 years ago, 12 years ago. And at that time we used to, you know, see adoption of technology in Europe, you know, a couple of years after the US. That's not true anymore. I mean, SugarSync, more than half of our users are overseas, 50% in Japan alone. The fact that we do have versions of our product in about a half a dozen local languages, and it's great to have localized versions, but we have plenty of users that are using, you know, our product without a localized version, much more so than in the past. So if you decide to wait, someone else is going to go into those local markets.
Yeah, I think mobile has the epiphany that the world is flat, and you just accelerated that concept. The world is flat. The fact that a new app phenomena can be launched on one day globally and take off and be a hit around the world. It wasn't so long ago where major corporations had to strategize on their global rollout, right? If eBay was going to move markets as a plan, same with any large company, but today it's instantaneously. So it just goes without speaking that to approach it as a global mindset should really be a no-brainer. Thereafter, it's how you analyze in your data sets on particular features. For example, if Twitter is flying high in Indonesia, that's an interesting angle perhaps for you to look at. Absolutely.
I think that if you were, I represent one of the bigger companies that does play in all the attractive countries in the world as an $18 billion business. But I think if I was advising one of you as a smaller company, well, one, every one of you should go and watch Mary Beaker's presentation that talked about kind of the trends in the internet, and there's some beautiful and insightful data there, because you can see some correlation of the way in which the international world is accepting mobility correlated to population growth and fast bandwidth and so on and so forth, that you should certainly have a perspective as to how China, India, Brazil, at least those three countries, view mobility. Because, for example, the dynamics in those markets are very, very different. There isn't a lot of iOS penetration in India, lots of Android phones, 2G, 3G. So knowing that data is very helpful as you think about that, and with the world being flat, we will get. It's also important to understand where the population growths of the world are going to be the fastest in the next 20 years. And I mentioned some of those countries. It's not the traditional. China's population is going to decline in the next 20, 25 years. Because you think about every one of these countries now that are going to all have mobile phones, the way in which you get to that person won't be through a tablet. It'll be through a phone interface that will be very different. So if you mask your perspective by everybody having an iPad, that may not be the reality initially, at least. Now, as these sort of, these tablets get smaller, and there's big debate as to what the next version of iPad is going to really be in terms of form factor. How big does the tablet become as it sort of converges with the laptop? I think it's going to be fascinating to decide how every one of you build applications for that new form factor. And that, to me, is the next wave of great innovation that will hopefully untap everyone here to build applications in a way that we never thought of.
So we've obviously had a lot of talk about tablets and smartphones, but one thing, if we could take a step to the side and talk about the concept of things, just proliferation of connected devices, a lot of which are going to be in a mobile environment. So, Ty, I'll start with you in terms of where you see your company going, where obviously we need to be able to manage those devices, and then how that's going to affect the way that innovation is brought out within the mobile environment.
So, kind of along the lines of an earlier answer I gave about companies coming to us and saying, hey, we're producing a device that's non-standard, yet we still want to apply some apps to that may exist, and we need your platform to help us manage those. That's an area that I don't know where that's going to go. In fact, along to what Martin said, we didn't know where we were going when we started our business. We just knew there was something interesting here. We tried a few things, and we found some feedback from customers that then helped us evolve a product strategy. So the Internet of Things, to me, is something that's just going to expand. Form factors, right now we're talking about 7 inches and 10 inches and phones and those kind of things. But we've had companies come to us and say, hey, we're building a system that manages the rope on your ski boat. And it's going to be, they want it managed and controlled, and they want to be able to have that supported. So all kinds of variations are I believe, are going to show up that we can build apps for, we can support with a service level that enables those consumers to not have to get into the details of it, but yet get advantage from those devices.
Well, to your point, a lot of these won't even have screens, right? So it's just a totally different interaction. Any other thoughts around?
I think if you think about, no longer as when I was going to be one of our customers that's, building tractors, I was amazed that this thing that you think is sort of a dumb device is like a Airbus A340. It streams data back to John Deere of all the statistics of where that tractor is, what it's doing. The vending machine, I was talking to one of the CPG companies. They're going to put enough into that. You're already starting to see smart vending machines that can actually act as a glorified phone. It has an operating system on it. It provisions software on it that lets you know when it's going to be a hot day that potentially you should stock more of particular kinds, and it can also pay back the inventory, the replenishment system. So I think that day is not, there was I think a Wall Street Journal, New York Times article this past weekend called The Customer's Guide that sort of said this is going to happen by 2022, 10 years from now. I think it's going to happen in the next 2 to 5 years, where many of these become smarter devices, become sort of almost bigger versions of what you think your phone is. And they now need to be secure, they need to be managed, they could stream data back, they could help you in managing your life better.
So I'll open myself up a little bit from where I come from with this question. But what do you see being the biggest bottleneck when it comes to the mobile industry?
That's a self-serving.
Good answer. What do you think?
My perspective very quickly is obviously the more that consumers are able to consume this, rationalize whether, some of the people said whether it's 2 or 3 devices they have. And then 2, the fast-growing countries in population bandwidth.
Well, I think as an entrepreneur, I think one of the biggest challenges you have in mobile is getting the word out. Right? I mean, you're sitting there in your garage, you're developing your app, but the world at large doesn't know about it. Yeah, there's growth in various places and so forth, but how do we get to these audiences? So I think that with mobile, I think that you got to look at shortcuts. You got to look at how can you get some unfair advantages in the market. And I think, for instance, that you guys as a telco, AT&T, right? You obviously own a lot of customers. You sell a lot of devices. So I think for companies that are able to work with you, that you could get some really good shortcuts to the market, right? I mean, for us, we've gone that way, and we work with many large telcos and so forth around the world, and what we're seeing is an ability to, for instance, create bundles, right, where you can have a mobile app or service, and it's bundled with a data plan or device. That is alone worth a lot of money in marketing, because getting the word out in an app store where there is millions of apps is not easy.
I think it's pretty classic because we're using these devices so much more, so many more apps that we want them to be even more available. So cost, I mean, smartphones are still quite expensive, especially if they're not subsidized. But if there's no carrier subsidy, and even then you're still paying. Battery life, we hear from our customers, if they're afraid to depend on the mobile device, for that reason. Security, and I think these are all areas where we're making progress, and Moore's Law will help us. Maybe it doesn't seem to work battery life. Technology will advance, but I think there's still barriers.
So I think that's speaking to the bottlenecks of infrastructure. So if we flip over and look at the bottlenecks of consumer bandwidth in their own brain, I think that's something where there isn't an infinite appetite for any more apps. It actually is 7. You have 7 on your phone that you actually really use. Maybe you're an outlier and you have 12 or 3. But realistically, for experiences and services that become part and parcel of your daily life, there are very few, and therein lies where it's only going to get more challenging to break through and grab that end user bandwidth in their mentality. So you're going to have to really differentiate. You're going to have to know how to go to market and get the inflection point of the user base. And then what you do thereafter is a very interesting thing as well, because the data will still say right now, do one thing. If it says what it does well on the tin, you have a success story. And I think that has been the mantra of the last 4.5, 5 years. If you create one thing, a user knows what you do with it. And it's something that we look at very deeply at SoundHound, because we have 85 million users on mobile specific. That's just on iOS and Android, right? And we look at the data. They do this a whole lot because they know they can grab a song off of a radio and find out what it is and buy it instantly or share it or see the video. They can also lean forward and sing or hum into it and make an iPad game out of it at 5 o'clock on a Friday after you've had a beer. Laura, SoundHound didn't recognize it. Oh, you must be rubbish at singing. Not so bad. It becomes a fun, interactive, immersive experience, which actually, as a segue, tells you the difference between a tablet and a mobile handheld device, looking at just that little micro user behavior difference. But we look at how do we have someone open up SoundHound all the more often, not just reactive, I'm hearing something, but I want to go in. And there's challenges to that, because we're at that moment where users still think of a unidimensional user experience. But I think we're going to a place in the world where, because I only have 7 things on my precious curated home screen, the deeper the utility can be is more valuable to me, and how you have that guidance and stewardship for them is really a challenge if you're looking at that across your company, and how you migrate the user up or increase phase views, increase time spent in app, etc. Be mindful there.
I would just echo the bandwidth. I like that description of for personal bandwidth, what can you really deal with as far as apps? I agree, it's 7. I have 50 apps on my device, but I only ever use 7. But our customers who can't get reliable high bandwidth connections can't do what they really want to do. Just continuous message back, well, we'd like to do that, but we can't deploy it in these 10 locations because the bandwidth connectivity isn't good enough.
I'd love a place where, I mean, I think I expressed one of the annoyances of early morning calls, but imagine a world, especially those of you who are selling, where you don't have to go on a sales call anymore. And of course, the first part of that is inside selling, where you can do this over the phone. But you love FaceTime. Well, what if the telepresence experience started mapping onto your iPad at every single customer? And your future was stay at home and you could have this conversation enriched by high definition mobility powered video conferencing that looks like FaceTime but has all that requires bandwidth. So those are the types of things that will make our life significantly more productive, and we'll also have a good family life along the way.
Let's talk real quick about business models. So you obviously have the classic advertising-based model, see the emergence of freemium or collection of data to turn around and sell that somehow. But when it comes to mobile in the future, what do you think the types of business models are going to emerge? Which ones are going to be the ones that are most successful to let companies?
I think you have to have especially if you're the business leader, then the CEO, you do sales, business development, complete open-mindedness to throw traditional models out the window and at least be willing to accept. For example, I talked about on-premise to cloud, freemium as a way of starting things off, maybe even free for a long period of time, monetizing other things. And from that, at the end of the day, if you're getting traction from the standpoint of not just eyeballs, but engagement, the model will evolve itself. And you're seeing that. I mean, companies, you look at the sort of the debate that's going on right now about how Twitter and Facebook are going to adapt to the mobile world, where Twitter was made for 140 characters. So in some senses, kind of viewed the mobile world as from its inception. Facebook was built with the desktop as the starting point, and now it's trying to morph into the mobile world. I think you ought to be thinking about that up front, and then whether what comes out of it is a subscription, a perpetual license, a freemium leading, or advertising. There's plenty of good innovation that you'll be able to replicate on it. I think the companies that get themselves in trouble stick to and I've said it again, sort of SAP, we've got to constantly challenge ourselves because we've built the world's biggest company in perpetual application licensed software. But you almost have to turn that on its head to think about new innovation models, or else you'll get disrupted.
Yeah, I think that's a good point. I think that for a lot of this stuff, right, it's still relatively early on. I believe that there is a big divider line between sort of consumer on one side and business on the other side, where I think a lot of people are beginning to realize the cost of free, that things do cost money. Storage in the cloud is not free. You may give 50 gigs away for free, but that's real cost. And I think what we're finding, being on the business side, is that businesses value that. Businesses value their privacy. So what we have found is a big willingness to sort of pay for things and adopt things sort of at the company level, because what companies find is that they need control, right? It's their data. They can't have that when people leave, that the data walks out the door with employees. So I think that there is a lot there. I think the other thing is that we talked a little bit about the network and so forth, right? And I think the combined creativity around the block here is so high that we can easily use all your bandwidth, right? That's not going to be a problem here. But so I think there's going to be a lot of opportunities around sort of how data plans are being sold and how data gets to the consumer, where I think what we'll see is a lot more variety in how that's being sold. That you don't just buy one plan and that's it, or like in Sprint's case, all you can eat. All you can eat does not work. That will not work. So I think there's going to be a lot of things there, and I think you guys as mobile operators, you have an amazing opportunity here to really create additional stickiness and new revenue streams and so forth to your customers through these kind of things we're talking about. And then in terms of the other thing, in terms of the ecosystem, there's a lot of the hardware people that are struggling, right? I mean, hardware is becoming commoditized, so people like us here that provide value-added application or services on top of the hardware, I think is really going to help these guys differentiate. And I think there's going to be a lot of business models around that as well.
So, I do agree that enterprises are different from the consumer and small business market. So I'll speak for that latter case. There are many products that can be supported with advertising. In the case of a cloud service where people are storing large quantities of data in the cloud is in SugarSync, I don't think it's likely to work. But one of the things that we think a lot about is that we want the interests of the customer and us to be aligned. And actually, oftentimes in advertising, that's not the case. You're sort of making trade-offs between the customer experience and the profitability of the business for the advertiser. When I was at Yahoo Mail, we struggled with that, finding that balance. It was really one of trade-offs. Whereas with us, if customers like the product and they use it more, we make more money. And we're not ever disincented for the customer to use our service. So I always thought to myself, I don't want to have the kind of business like a health club where I want to sell memberships but then have people not come, because that's sort of their business model. I want to sell subscriptions and have them use them, like them, and then want to buy even more. And I think it just makes for, frankly, a better experience for customers and a more predictable business model for the company.
Top line revenue diversification is key. And I can say that because we sit on in-house proprietary technology. So because of that, there's nothing more valuable to be able to innovate and leapfrog the technologies, so long as you can then productize it, create an ecosystem of value to onward partners for direct business relationships. And that said, our most well-known area is B2C, and it is free. And it was freemium to begin with a cap usage. And we did a very bold thing and said, do you know what, that cap usage just makes me want to put it in my pocket because I only have one IT left, and oh, it's only the middle of the month, and I won't get my 5 until next month. We just boldly said, unleash free and let the user use to their end delight. And to go beyond that, I believe actually we will find users who had paid for the premium version, which is no banner ad. The vision is that they will actually look at their friend who downloaded SoundHound a little more recently and see the most engaging experience that was funded by an advertiser, but so well aligned with user experience that they will opt for the free version. So one day you would actually, ironically, pay for the free version. That is the pinnacle moment for when advertising hits a home run inside the mobile experience.
So we got to close things out. We came to the end of time. If you could, just in 1 or 2 sentences, offer what you consider to be your advice for any emerging mobile entrepreneur, mobile executives on how to be successful in the market as it is today. Ty.
Just look for opportunities that you see a gap in, or that your customers are continuously asking. I mean, we don't. I subscribe to the concept that you can't be too smart. You're never gonna solve the problem by sitting around and thinking about it. You're gonna solve it by working with real customers, solving real problems.
It sounds like it was Sanjay's theme, and your question is asking advice for a mobile executive to scrap away the adjective. It's just to any executive, you have to think design-driven in mobile world first and foremost. Forget thinking in a big screen.
I think if your app is synergistic with the trends that are happening in society, people being more mobile, people combining their home and work life, people collaborating across boundaries, I think that way, rising tide lifts all boats.
My advice would be to start simple and find a very, very simple use case. Stop to that. And I think in mobile, if you look historically, I think one of the things that's been consistent is that the things that take off are surprising to people. Case in point, text messaging. When Nokia was experimenting with that many years ago, that was sort of an internal pilot. They didn't think much of it. We're all doing it today. So start simple, go from there.
How many in this room are in their 20s? That's the group we need to watch, okay? And I'd say just watch your kids. Because how they use a mobile device, how that generation builds and thinks of applications is very different from those of us who even grew up post-client server, the internet generation. And I would encourage you to hire those type of people with the way in which you think about building apps. And you'll find it will throw out all your conventional ideas.
Great. Thank you all very much. Any questions from the audience? Okay, I guess we answered it all. Thank you all very much for your time.
Hello, everybody. It works every time. We learn that in kindergarten, and it's fantastic. I'm Kelly Porter, and I am sort of the master of ceremonies for the next hour or two here. We've got some extraordinary executives that we're going to hear from. First in three, men with a microphone and a spotlight. And then we're going to do a panel with the group right after that, which I'll be moderating. First up is Tyler Sloat, who's the CFO of Zuora. He's going to be talking to us about the only 3 metrics that matter for a SaaS company. He is well equipped to talk about this. He's been at Zuora for 2 years. Prior to that, he was the CFO of OboPay. He is a fundraising expert, having raised more than $100 million. And before OboPay, he was at Network Appliance, where he was controller of the Emerging Products Group. He has an MBA from Stanford and a BA from Boston College. Would you please join me in welcoming Tyler Sloat.
Caught everybody after the food coma, obviously. Thanks for being here, everyone. Zuora, I don't know if everybody knows us, we are a 4-year-old company that was really founded on the premise that we were seeing this big shift. And this shift was a shift in the way that consumers were demanding to consume their products, and a shift in the way that companies were thinking about selling their products. We call this shift the shift from the product economy to the subscription economy. A couple of years ago, we would go out and do speaking engagements. We have to spend half of our presentation kind of evangelizing about, that this shift is happening and why this shift is happening. And I've literally been cut off now because everybody gets it. Everybody understands why the business models are different, and that why a company would be in a subscription framework thinking about a customer at the middle of their ecosystem as opposed to a product. And as consumers, everybody is now getting it in the way that they actually consume. Us as people, the way that we consume our everyday products, and then us as executives, the way we think about what is best for our companies and the way we want them to be run in the most economical fashion with the access to the best types of technologies and services. These are just some examples of how we would think about this shift, and some of them we don't even think about every day, but the reality is they're happening all the time. The complexity and the reason our company was founded is that this shift is happening, but the underlying changes to the business models are significant. They're significant in the way we have everyday commerce with our customers, the way we need to bill them and onboard them and actually have a relationship with them over time. And the change is significant in the way we actually think about our business and the success of that business. That last one is what we're going to spend a little bit of time talking about today. The first two, what we consider commerce and kind of billing, are very significant and difficult. But the finance one, me as a CFO, it's core to what I kind of like. But it's also really imperative that we understand it as SaaS businesses, because if we don't actually think about it correctly, you'll see changes in the way businesses are being run that are contrary to the way they should be run, only because of the way the metrics that are driven, that are driving those businesses. So if you think about it, the basic SaaS model, right? We say ARR, you've seen MRR as monthly recurring revenue, or QRR. The basic model is that you have a starting point, which is kind of what you have in a bank. You might churn some of that out, which is why I say churn. You might add new bookings, which is that stands for annual contract value, which equals your exiting ARR. And this could be for any given period. We look at monthly, quarterly, annually, or whatnot. The problem exists in that GAAP financial statements and historical financial statements and the way historically companies have been valued is completely different to this. It's all about your income statement. It might be all about your balance sheet. But it's all historical and backwards looking, as opposed to thinking about your business going forward and understanding that you have a customer base that is going to provide you some revenue and cash in the future, and what should you be planning based on that? If you think about what you have going into the future, you actually, instead of having an income that you produced last year, you actually have annual recurring revenue going into this coming up year. Instead of thinking about what you would spend based off of revenue, you should start thinking about what you should spend based on your annual recurring revenue. We argue that there's really only 3 SaaS metrics that matter. There's actually a fourth. The fourth is ARR, right? ARR is the most important in our mind, but the 3 that matter is how you drive that ARR. You see here, you start with annual recurring revenue, you have some churn, you have a net ARR number, then you actually have what it costs you to service your ARR base. In this case, this cost comes in COGS and G&A and R&D. At the bottom, you have recurring profit margin. So you say, well, where's sales and marketing? Sales and marketing is really what is driving additions to ARR. It's not a driving, it's what actually requires you to maintain your ARR. And that is one of the premises that we will hold. The other thing that's not up here is PS, just as a side note. A lot of businesses that we run have professional services components to them. You have to decide as a business how you're going to treat that professional service component. Is it going to be incremental from a margin perspective, or are you going to make choices to actually make investments in there? I'm going to go pretty fast because we only have 10 minutes to go through this. The 3 metrics that matter, if you look at this P&L, which is obviously not a GAAP P&L, but we would call it a SaaS P&L. One is your retention rate. What is your capability to actually keep your ARR going into any year, given your organic churns or whatnot? The second is your recurring profit margin. We talk about recurring profit margin because everything is off of your entering ARR base. Anecdotally, this is the way that we run our company. When I go into a board meeting, which we did at the beginning of this year, I did not present an operating plan based on a GAAP financial income statement. I actually presented an operating plan based off of entering ARR. We talked about our growth efficiency, which is what we were going to spend to acquire new ARR. And we talked about what our recurring profit margin was and what it should be. When you think about your business this way, it allows you to do a couple of things strategically. Once you get to a point of scale, you can decide how to run your business. You can decide whether you actually want to optimize for margins, or you can decide whether you actually want to optimize for growth. If you do it correctly, you understand that the cash actually precedes the, if you're selling in different ways, the cash could precede the actual ARR, so you can still have a healthy cash flow while never bringing operating profit to the bottom line. Right? And that's why a lot of these companies were being misvalued in the business, and now I would argue the market is actually punishing you if you're bringing operating profit to the bottom line, because they're arguing that you cannot actually efficiently grow your ARR in a manner that you could in the past. And they're looking at that as a sign that your business is slowing down. I know, it's contrary. Somebody in doing our planning, we took about 15 different companies that were recently public, and looked at their sprint. We call this sprint from 20 to 100 million because there's a lot of stuff that happens in that time frame in terms of scalability, in terms of investments that companies need to make. We feel 20 million in ARR pretty quickly by kind of band-aiding things together, but when you are actually going to scale and grow, you actually have to make investments in the right places. What we came to is that a company with, this is just a model, but a company with a 1-to-1 growth efficiency index, meaning that they're spending $1 of ARR for every dollar that they're acquiring. A company with, 90% retention, a company with 40% on the recurring profit margin, you can actually grow at 43%. You can actually make some decisions though. You can decide you want to have 0 growth and have a net income of 30. This is the beauty of the business model, right? You actually have the flexibility instead of having to reproduce everything you did the past year, being able to actually make decisions going into the year and what you want to have as your goal. So when we took those 15 companies and we decided what would best practice be, when I go back to going into the board and saying, what do we want to invest in? How do we want to actually spend our dollars in certain areas? It had to be all based on a goal that we had in mind for what we wanted to get to. And we centered on these 3 different metrics. Obviously, growth in ARR being the top level one, but under that being our growth efficiency index, being our recurring profit margin, and our retention rate. For us, and I think different companies are going to have different best practices, for us, the metric is 1-to-1. If we can grow efficiently at a 1-to-1, which seems possible, then we should be very, very comfortable continuing to invest. You can use this as a barometer for whether you go faster or you have to actually put on the brakes based on how often you measure it, and then knowing as you expand whether you're getting too far in front of your skis. Renewals, 90% retention rate. This one's a little bit more difficult to look at. If you look at a bunch of different benchmarks, there are companies who would add in upsell against the renewal number. There are companies who would only consider it new logos as new growth, but everything sold into old logos they put into here. We have a very rigid perspective on renewal. We obviously run all the numbers on everything else, but it is, what is the entering ARR base coming in of that existing ARR base coming in, how much of it is renewing? 90% is very healthy. There's going to be organic churn in any business that you would expect, but upsell, you can place in other areas. By the way, the way you treat upsell from a cost perspective should also be considered. If you are comping your people on it, it's not, it's not just a natural renewal that has a very low cost to you, then you should think about putting that in your growth efficiency index. And then your recurring profit margin of 50%. 50% to us seems like a very achievable number. When we went in to look for investments for this year, every investment that we made that were not at our best practice model, and we actually have this profit broken down in G&A, R&D, COGS, that investment had to be articulated in a way that how it's going to get us to our best practice model, whether it's next year or the year after that. So everything was an investment in scale. Okay? The other thing to note here, if you look at, say, NetSuite, Salesforce, and SuccessFactors, the reason that I said every company has to come up with their own, you could track these companies year over year, and you would see differences in the way that they were selling, differences in the way they're investing, but fundamental things just start to pop out. SuccessFactors, in that stretch, they're really servicing a lot of enterprise customers. They had a much higher cost of acquisition, as you can see there, but a much higher retention rate, so they can actually play these things off of each other, as opposed to Salesforce, which was actually servicing a lot more SMB customers, so they're actually churning out a lot more, but they could acquire them at a lot more efficient rate. So these things do play off of each other. 30 seconds left, so that's perfect timing. For us as a company, we really focus on three things. It's really making sure that our companies, that our customers, we give them the information that they need to grow their business so that they can actually have a flow of commerce, billing, and finance from one to the end. The third one, which is what I focused on here, is really know and understand their business, whether it is being able to truly provide them an MRR number, an ARR, a QR number, or whether we can tell them the difference in each new order, how it actually translates, and how the delta MR would be affected, or calculating your churn rates and things like that. We think these things are fundamental to driving a successful SaaS business. Thank you.
Thank you, Tyler. Great job, great presentation. Next up, we're going to hear from Larry Ogston, who is going to speak about open source meets SaaS. So Larry is the CEO of Sugar CRM. He's grown it into a juggernaut, raised more than $75 million, forged partnerships with some of the greatest companies in technology. Larry previously was founder of VA Linux. He took it public. He's a prolific private investor, investing in .NET Nuke Accelerator, among others. He has both a PhD and a master's degree in electrical engineering from Stanford and a BS in electrical engineering from Notre Dame. Larry.
Thank you, Kelly. Thank you. Tony called me up a while back and said, Larry, I want you to come to the Innovation Summit, and I'd like you to speak about open source meets SaaS. And some of you may know, I was one of the people who was lucky enough to be there at the sort of coining of the term of open source, where we sat down and looked at the software industry and said, we really need to change how we talk and think about software. And my first reaction was, open source SaaS? Where's the connection? But that's one of the reasons we look up to Tony. He's the visionary there. And I thought about it a little bit, and I looked at the connection, and it probably goes a lot deeper than you think. So I'm going to flip over here to, am I on? No, I'm not. Okay, well, we'll see if we can get Yep. Ah, there we go. Okay, great. So I looked and said, okay, I wanted to try and answer the obvious question. What's the key element that SaaS and open source business models share? I started thinking about this, and I went back to the founding of open source and some of the reasons I got into open source and we started creating this. For me, it was fundamentally about creating better software. It's about a model that really changed the way we thought and created about software. And if you go back now 15 to 20 years, in the way we created software 15 or 20 years ago, and the way we bought and sold software, it's very different than today. 15 to 20 years ago, we were creating software as essentially a black box. A thing that was bought and sold, the way you bought and sold property, the way you bought and sold a house or a piece of equipment, right? It was essentially built and delivered and bought and sold that way. Now, that made sense in a model of the world where software was a long life cycle creation thing. You had to invest a lot of resources, you created this thing, it took a lot of time, and the practice was, literally development efforts took years. You created something, and it was very cleanly wrapped up when you were done. But what happened? The world of software development and creation began to change. And the business models didn't change with it. Instead of being a thing that you created, built, like a house, like a building, like a box, right? Software became something that was all about ongoing maintenance, ongoing support, ongoing creation. Part of what changed is the technologies and way in which we build software. So this wasn't a case where 15 to 20 years ago, the model of buying software as like an asset was wrong. No, it was the right model for them. But what happened is the world advanced, technology changed, and how we create software changed. It became iterative. We now all talk about agile methods. Software became something that the value came in the continuing development and maintenance of. So some of you may remember when Rick Sherlund was at Goldman Sachs, he created this model where he compared the cost of new license revenue from software to the amount that software companies spent on sales and marketing. Now, the argument for buying licenses up front was that software was a big R&D effort, and that I put all this investment into the R&D, like building my building. Then I needed to recoup that in the sale of this product, just like selling a building. Well, in fact, if you looked at the actual financials of the industry over time, Rick used to measure that new price versus the cost of sales and marketing. And what happened was, we reached this point 15 years ago, which was the last time he did the index, where the percentage of sales, if you took and compared the new license revenue to sales and marketing costs, 82% of new license revenue was going to sales and marketing. So it wasn't going to the creation. In fact, the creation was now being funded in maintenance. And it was the maintenance model that was driving the continued development and support. So what had happened is the industry had shifted from a model of it was expensive, big building buildings to it was ongoing, repetitive value creation over the lifetime of ownership of the software. And as a result, the industry needed to change. Open source and SaaS are both elements of that industry changing. Why? Well, think about it. In open source, it's not the value of the code. In SaaS, it's not the value of the code. In either case, you're buying software. It's not about the software in either case. What is it about? It's about the ongoing service and development of that. And we realized that the software in itself, having that source code, actually not a huge amount of value in that code without the ongoing maintenance and support. So the open source subscription model, we heard about Tyler, about the subscription economy. The open source model is a subscription model in the same concept. You're not buying that building. What you're buying is the ongoing development, maintenance, support, and continued evolution of that product. The same way in SaaS. You're buying the ongoing continued development and evolution of that product. And that's where these elements intersect. It's about the change that's happened in the software landscape from the value being in the software to being in the service. How many of you remember the days when the software was this golden asset that we had to protect, and anybody getting access to the source code was this, magic thing, right? And we put all these things in place around it. We used to have those escrow agreements, that companies would enter into, because what happens if the company goes out of business? I can't have access to this black box software. To tell you the truth, how many of you today, if you had access to Zora's code, would actually find that valuable? Or Salesforce's code? It's not about that code anymore, right? It's about the service that's delivered. So what do we have to remember here? In either case, customers get a subscription economy pricing. They're buying the long-term relationship with the vendor, where we have to continue, as a vendor, to deliver value over time. That value comes in the consistent maintenance, update, and support of that product, not so much in the one-time delivery of code. So it's about that long-term relationship. In either case, customers don't really get software. What they get is that ongoing maintenance, support, and service. What does this do? It creates alignment with the customer. So in the old model, when you delivered that black box, what happened? We reached the world where people could deliver that black box and go away. Well, we saw what that did to the software industry in the late 90s, early 2000s. We built a software industry that was all about creating that black box, throwing it over the wall, and going away. And what did we have? We had massive amounts of shelfware in place. We had people buying software that they never deployed, that they never did anything with. It was like buying that house you never moved into, because there was no alignment with the way customers worked or what they needed. So we've then created now with the open source worlds and the SaaS worlds, it's a subscription model. We create alignment with the customer. It's about adding ongoing value. And by the way, if we don't add ongoing value, you as a customer can churn. You can go elsewhere. You can move on. You can stop paying, right? And the economics should work that if we don't do that, we don't continue to get your business as a customer. So we create that alignment and that balance. I credit open source with really helping to return that balance of control and interaction between the vendor and the customer. I think it's something we lost in the software industry. I think it's very important for that ongoing engagement. So, I leave you with a few things to remember here. It's about the service, not the software. It's about a long-term relationship where you create alignment and continued value, and you get paid for that continued delivery of new value. And finally, this may be a little controversial in the SaaS world, but separate that value from the delivery model. We talk a lot in the SaaS world about multi-tenant, or data centers, or hosting, and all of that stuff. To me, that's an underlying business choice. What you have to look at is value to the business, ROI to the business. And if that means your delivery model allows you to put the software in a data center that the customer controls, but you're still delivering ongoing value in a repeatable, aligned way with the customer, in a subscription, where you as a vendor, your business is aligned with the customers, that's fine. It's not about the delivery model. The thing I would encourage you to think about SaaS is don't get religious about one delivery model as the way you implement this value for the customer. Good? I'll leave you with those thoughts. Thank you.
Thanks, Larry. Come on up, Tom. Great. Thank you. It's about the service, not the software. That was great. Pleasure to introduce Tom Kelly, who's going to speak with us about leveraging social networking in the enterprise. He is CEO of one of the great social networking, social software companies for the enterprise, Moxie Software, 300 employees strong. Yes?
Getting close to that.
Getting close to that. We'll round up. He's a serial CEO. I think he's been a CEO since kindergarten. Seriously.
We felt it was a few years ago.
That's right. He was, before this, he was CEO of Epicor, a public company, Monta Vista Software, Blue Star Solutions, and Blaze Software. All three of those were acquired. It was terrific. And COO of Cirrus Logic, Executive Vice President of Frame Technology. That brings us up to high school. CFO of Cates Design Systems, and he has a Bachelor of Science from Santa Clara University, and he is on the Board of Regents at Santa Clara. Tom, take it away.
Okay, great. Thanks very much. We don't have a lot of time here, so let's set the stage. Social, we believe the social world is a multi-channel world. Let's start right there. We don't believe that all social is new social. As I explained to my children sometimes at dinner when we were actually talking, I say we're not tweeting, we're not doing status updates, but we are indeed having a social event here. And our customers absolutely know that. Our customers understand that there's a lot of different ways by which they communicate with us and how they come to this enterprise. And if we are selling, if we're supporting, if we're doing business, we had better have that deeply ingrained in our psyche. So that's the starting premise for, in fact, this company, Moxie Software. So what do? We connect multi-channel communication with internal collaboration. We believe that collaboration disconnected from the underlying value creation inside an enterprise is doomed to die. That collaboration must be connected to underlying value, that which creates shareholder value, enterprise value, and accomplishes something. And what we have decided it's all about, in our view, for us at Moxie, it's about the customer. So what do our customers do? They engage their customers via the communication channel of their choice, at their choosing, at their time, to do whatever it is they're trying to do, typically selling or supporting. They connect their employees internally with collaboration technology. And a real core piece here, they're all about delivering the right answer, not an answer, the right answer to their customers. We got a lot of customers. Some of them are paying us an awful lot of money. We are growing at about 40% because when we come in and we talk about solving fundamental problems that their enterprises need to do. They need to support their customers, they need to sell to their customers, and they need to source the answers that their customers give them all day long. Question, question, question. If I answer them enough correctly, I either sell them a product or I keep them as a customer. It's that simple. It's a question and answer world in most of our customers. Now, in fact, what do we deliver? We deliver a broad array of communication and collaboration products. We deliver collaboration for internal uses, for sourcing products. We deliver email, traditional email, still there, email response systems. We deliver chat, both reactive and proactive sales chat. We have community, we have listeners, and it is all in an integrated desktop, which is designed to power a contact center. Now, before we go any further, let's make something very clear. The contact center is not that old call center, distributed and disconnected from the enterprise around the world. It is embedded inside the enterprise such that when you walk from office to office, as we do with our customers, I am walking through a sales organization. In fact, this one in particular, the name we won't get into, but the sales organization, which is the largest chat sales organization in the world. And they are in fact conducting a selling operation using predominantly chat, selling, hitting their numbers. Okay, this is important kind of activity. It's sticky, it is hard, and that's also why our customers, whether they get it through an on-demand model or an on-prem model, stick with us for a long time. What does it look like? Well, we're a big believer in exceptional user experience. We believe that products need to look good, be easy to use, and quite frankly, we don't have enough time to go into the bits and bytes of how we design it, but we've partnered with some great design firms in order to help us think about how the user experience makes the use of that software important. What makes the fingers stick to the, the keyboard, in order to get their work done. We think that's incredibly important. One thing in the new, what we call the next generation social enterprise, is that we believe that we have a converging market that's going on. If you go back, in fact, if you think right now, we can go to certain analyst firms, and you will see them split markets in a variety of different ways. A very traditional way is that what does the external communication market look like, and what companies compete in that space? We will run into people like RightNow in that space. We'll run into people who have point solutions like LivePerson in that space. We'll see people in knowledge that might be somebody like an Inquira in that space, a very point solution in that area. We believe our holistic product in that area, our integrated product, does an extraordinarily good job, and that's why we are closing business and growing so successfully in that space. If you go into the collaborative world, internal collaboration, we will see a wide range of different solutions for connecting a distributed organization. You'll see everything from a Yammer, you'll see Chatter, you'll see Jive. But our belief is that what makes the world tick for us and for our customers is the continuous flow of information. Collaboration, our view, is about sourcing knowledge. It is about sharing knowledge internally. It's getting together in the conference room, in a virtual conference room, and knowing what the heck it is you're doing there and what you're trying to get done. Imagine all going to the conference room for a meeting and somebody says, well, what are we here for? Well, it's probably happened to us, actually, all of us. But anyway, what are we here for? We're here to solve X. And X typically is the exchange of knowledge between us all in that room to solve a problem. The collaborative world, we believe, is in fact the social knowledge base. How do you connect the enterprise, the source of knowledge, create a broader number of knowledge experts inside the enterprise to populate that incredibly important knowledge base, which is a core part of our offering. Knowledge base, not a document store, not a metadata file, but a knowledge base. A repository of corporate intelligence that is gathered and then represented based on the question you asked, the information you need, your ID, whoever it happens to be, back out through one of the multiple channels that you have to communicate with your customers for the purpose of selling or supporting a continuous flow of knowledge in and knowledge out. It's pretty simple. You start with a customer inquiry, could be service, could be sales, they get an answer from their first point of contact, could be a wide variety, they don't get an answer. Ah, great. So well, the old way is you send out emails, you kick it into a ticketing system, you go into this. Well, we believe the proper approach is to escalate that into the collaborative world, connecting it to a specific expert or into a group that is designed to solve the problem, and then to publish that answer, click to publish that answer outside into the knowledge base for distribution via one of the various channels to communicate with customers. It's an integrated flow of data answers, not just community swarming to give opinions. Our customers do not want simply opinions. They want answers, and they want correct answers. They do not want someone to get an answer, they want their customers to get the correct answer. What's our stack look like? The yellow at the top is in fact our communication platform. It has all the wide variety of communication. It's integrated into a very easy to use agent desktop with all the methodologies for measuring content, doing the analytics, and looking at the analysis there. The green part at the bottom is our collaboration platform. It's the newest part of our product line. People do in fact use that platform for what I call just specific collaboration, things from video game development at a large entertainment company, sourcing news stories around the world at a large enterprise news gathering agency and reporting agency, using the ideation platform that's built into that. We do all kinds of general purpose collaboration, but mostly what it's all about is connecting the collaborative environment with sourcing knowledge to shove it out through the communication channels at the top. Where are we going? We think we've got a good story going forward. We've got a lot of stuff. I was told not to spend a lot of time on this slide. They weren't going to let me put it in there, but it is kind of similar like what some of our expansion and some of our product activities. Well, we're pretty excited about some of the dialogues and other things we got going on. We think it will allow us to continue doing an awful lot of great expanding in both the revenue and our customer base. So why do we think we got a pretty good story right now? Why, the steps in the halls are pretty swift. We're growing. It's a fun place to be. It's there because we think we got a great understanding of what this new enterprise collaborative world looks like. We think it is a multi-channel world. It still involves telephony. We still actually have to integrate into telephony systems. It does involve email and chat, but it also involves listeners. It involves the collaborative experience for connecting a virtual organization together. How is it that an enterprise communicates internally and communicates externally for the purpose of delivering answers? We think we got a good idea on that. Secondly, we think these markets are moving forward. This new market space is a cool space. It's converging new markets, traditional markets. We got great customers, and we think we got a great story going forward. Thanks very much.
Guys. Good job. Yeah, no, I'm going to sit over here.
What do you want me? There's numbers. Tell us the numbers. Tyler, Larry, Tom. Larry?
Great job, guys. Thanks very much. So, seeing that our panel is just 20 minutes long, I'd like you to limit your answers to 2 words. And we'll see what we can get out of it.
Which 2 words?
Yeah, your choice. Your choice. It'll work. So this is really interesting. You guys are all leaders in late-stage private companies, which is a unique kind of company. We have a lot of entrepreneurs in the audience, and venture capitalists, and others from around the innovation ecosystem. I want to talk a little bit about the uniqueness of where you are. And you've all raised significant amounts of capital. You've all succeeded in your markets despite myriad challenges, including competitive challenges. All of you guys have competitors, but you've managed to emerge out of that. And could you spend just 60 seconds talking about what it is about your company's offering that resonated and enabled you to come up from the fray and really distinguish yourself?
Go ahead. Sure, I can start. Anecdotally, I could go back to the story when we were raising our Series C. I was talking to venture capitalists that we had in, and they're really questioning the size of the market and wondering how this shift is happening, how quickly it was happening. And we didn't end up going with them, but about 6 months later, the same partner pinged me and said, "Hey, can we go to lunch?" I said, "Sure." And he said, "Look, since then we've done a lot of business, or we've done a lot of research, and we really would think about it differently now if we were going to engage again." And we asked about what resonates with our customers and whatnot, and I think that also is what resonates with the investment community on why we are a valuable company. Is that he said we see there's a difference between the SaaS companies out there that are getting these very large multiples and our ability to grow. That we're giving, they're getting an 8 to 10x revenue multiple out there, and the difference between the really good companies, but they're getting a 4 to 5, and it really is their ability to have these accelerated growth rates. When we started doing research on what allows a company to have an accelerated growth rate, we really thought that it's the enablers that allow them to run their businesses a lot better. And there's very few plays that actually allow companies to do that. And so that's why he said we would have thought about it differently. That is fundamentally the way we think about our business. I talked about the grow, flow, no, but it really is about how companies, as they get through these shifts, from 10 million to 20 million, 20 to 50, 50 to 100, how do they do things in a lot more scalable manner and make it easier? Larry?
Yeah, I think some of what you said, Tyler, there's a big part of this is about defining, I think, how you sit in a market that is going through a shift and you make it a big growth market. In our case, we're in the CRM market, customer relationship management. That's a market that is very, very large. That's one of the benefits we have. And as an investor, Kelly, you mentioned I do a lot of angel investing. As an investor, that's one of my criteria. There's a lot more room in very big markets. CRM is a market that, according to IDC, will have $18 billion in spend this year. It's a very large market. If you take the top 3 companies in that space, they're about a third of that market. So it's very large, very fragmented. There are about 15 to 20 million seats of CRM that are sold and installed today. And that's where we sort of had a fundamental change in Sugar CRM. We looked at that and said, who should be the users of our product? Who are we enabling? Our vision is to enable anyone in a customer-facing role that needs to communicate with a prospect or customer externally in your business. Well, if you define that by sales, maybe that's 15 to 20 million seats, although I think it should be much larger than that. If you define that by anyone, and today, social networks and mobile and various communications media are opening up the ability to communicate. You look at collaboration tools, right? The ability for anyone inside a company to now be in a position where you have to talk and communicate with a customer. Well, our mission, our vision is to make that easy for them, to help those people do that job. So anyone who's customer facing. Well, you define the market that way, and it's not 15 to 20 million seats that we have today. It's 350 to 400 million seats. So how are we growing? Last year we grew 67%. Our goal is to maintain those 60+% growth rates. How do we do that? We define the market very large, but with a very simple vision of who we serve there and how we help them do their job, how we help them make their life easier, and ultimately help the customer who talks to them have a better experience with their business. So I like this. Think big, think expansive, think about very large markets, and I think that's how you solve some of that, and you keep growing.
Tom?
We'll just pile on. I agree. We also think you got to solve something very fundamental for a company. So when you're walking, your salespeople call. Imagine yourself the back carrier, always imagine yourself the back carrier, walking in, closing a deal. I am solving something specific for you that you must solve, that you have to solve, and that's the part I love about where we are at. Our customers don't really have a choice whether to do this or not. They only have a choice of how they're going to do it. And so we love that. And we love the fact that the product is it works. That's always important, quite frankly. And I don't mean that tongue-in-cheek. I mean it seriously. By working, works in a scalable way so that people will spend millions with you and they'll keep spending millions with you because what you do is important to them. And then lastly, this is the obvious, you want to have a bunch of folks around, a lot of people that are really good at what they do, like blocking them together, understand where you're going, and are excited about it. Are excited about coming in on the day when it looks pretty crummy outside, and maybe even crummy inside, because they have a vision and they believe that this thing actually could be meaningful. And I think that's everything here combined maybe ends up putting you in the right spot.
I like the line, you don't have a choice whether you're going to do it, you just have a choice how. I'm going to use that in my next pitch with prospective customers. You can choose me or my partner sitting next to me, so that'll work. So let's talk about SaaS. We in Silicon Valley, SaaS has been around for a lot of years. We've been thinking about it, we've been executing on it. It seems very obvious. In thinking about a worldwide market and the technology needs of companies all over the world, I'm curious, in your experience, how far into the SaaS revolution are we?
I think we're just getting underway. And so I might as well admit I feel like I'm in one of those meetings where I'm going to disclose I got a problem. The fact is I still deliver on-prem software. My name's Tom Kelly. I still deliver on-prem software. Okay? The fact is I've got customers that require big ones. big financial institutions that quite frankly I wouldn't close them, and I wouldn't close those deals if I didn't have it, and they pay me an awful lot of maintenance revenue, which looks an awful lot in the P&L, like a SaaS revenue stream, an awful lot, okay? But I do in fact believe the SaaS model is great. I believe in continuing revenue. I think it's a much more valuable revenue stream. We are growing that. It's the biggest part of our revenue right now, and that will grow. But I still believe that until two things dissipate, security issues that people have concerns about, which is, I think, rapidly disappearing, but there's also firms that have invested heavily in their own private clouds internally, their own, where they have infrastructure, and they're saying, give me the solution internally and I'll distribute it back out. Now, we believe that we can do both for those, and we can migrate somebody from their on-prem solution into our SaaS solution very rapidly, but I still think, I don't know if we're midway into it, a third of the way into it, but I don't even think we're halfway into the SaaS evolution. Maybe it's a third, a quarter, or something.
Larry, can you talk to that from a slightly different perspective? And that is, so if you agree that we're only partway into it, what is it that holds back the adoption?
So I agree that we're only partway into it, okay? But also, I will say I'm not a person who believes the whole world is just SaaS. What I think is, and I too still deliver on-premise software, and I'm very proud of that fact.
So am I.
Okay? About a third of our customers go on-premise. And it's what you have to do, I firmly believe this, you have to separate the value that you're delivering from the underlying delivery model that gets us there. And the great thing about SaaS is we're aligning with the customer. We're delivering value continuously over time. We get paid to deliver that value continuously over time. And we're solving a set of business problems with SaaS. Easy adoption. You know, the fact that updates are not these big forklift things, right? We are able, because of that, we're able to bring consumer technologies into the software more quickly. We're able to innovate more quickly. So there's all these great things that come there. What I would challenge you to think about, and I'm sorry I'm turning your question on the head here a little bit, but is does that require a specific implementation or delivery model to get there, right? I think, look, a delivery model through the cloud makes a lot of sense here, and a huge part of our business is driven that way. But our business is 100% subscription. Even though we deliver software on premise, we don't do that in a perpetual license model. We do that in a subscription model where we're tied to continue on continuous delivery of value, right? Now, where that and how that is delivered, that will change over time. As people get more comfortable with various cloud delivery options, it'll move. But I also believe that very large companies are building their own clouds. We've seen that. Those clouds are going to integrate and connect with public clouds. And as an industry, in the SaaS industry, we're going to have to figure out how to move that stuff back and forth, take advantage of all of those, right? And new cloud platforms are going to make that easier, are going to enable that. What we're going to have to figure out, we have to figure out how to give more control to the customer in cloud environments. That's one of the things we see all the time. Okay, how do you give more control, and yet you're still enabling you as the SaaS vendor to do updates every 2 weeks, to make sure that you've got the performance and you can deliver the SLA. Meanwhile, letting the customer do more and more customization, more and more configuration that matches their needs. In order to expand the set of people that move out to the cloud, we're going to have to solve problems like that.
Great. I'm gonna turn and ask you a specific question since you're a resident CFO and financial guy. So the overall economy has been in a period, and this is a bit off of SaaS, but been in a period of recovery and moderate growth, and there's been some uncertainty from Europe and election year and so forth. How are you feeling about the economy overall, and specifically, do you think it's going to be better, worse, or the same, going forward than in the last 12 months, and how does that affect your business?
I think from a macro perspective, I actually have concern about the overall economy. However, from our business, what we are seeing is that a lot of our customers, and they're very, very large companies, because there's macroeconomic concern in the historical business models they've had, they're trying to change, right? They're making strategic changes in the way that they're bringing their products to market and things like that. And that equals opportunity for us because they're making these changes. These changes are often very closely aligned with what Larry's been saying. It's about the service as opposed to the software or the product. And it's about how do I actually align with the customer more. So we're not concerned about the economy just because what we've seen from an opportunity set has actually been growing a lot faster. But I personally think that the European markets are in trouble pretty dramatically, and that the federal markets, spending there, which just to the last question, I actually think another shift that's going to happen in SaaS adoption is if as soon as federal increases their adoption of SaaS, which they've already mandated some stuff out there, that'll make a lot of the shift happen a lot faster because of the privacy controls and everything else. It can impact a lot of those regulations. So anyway, that's my overall.
What do you guys think about the economy and where we're going?
I think it's a very odd economy right now in the sense that there are some sectors that are overheated and then some sectors are really struggling. So I see that all the time. And particularly we see that right now business to business is pretty good. We're pretty happy, but at the same time we see other sectors that are in deep trouble. Europe is a study in contrast. There are some markets there that do very well, and there's some markets there that are in deep trouble. And we see that consistently. If you turn it specifically to Silicon Valley in terms of employment and hiring, very odd economy here, right? We can't hire people fast enough. I have 100 open recs right now, okay? And we've gone outsource offshore, right? We've opened development centers outside the U.S., not because I'm looking for cost savings in that model, but because I can't hire engineers fast enough here. And at the same time, we have high unemployment rates. So there's this disconnect, and it's a skills disconnect. It's a sector disconnect, right? So there's a macro problem in general we have to solve in this country of education. I can't hire people, and yet we have a lot of people unemployed. That's a skills gap. That's an education gap that we have to solve. On the broader sense, how does that balance out?
Tom, anything to
add? If the economy was doing better, we'd grow faster. And the fact is, what we solve for us in particular, very on what I call micro, the very personal side of the economy, is that our customers are driving costs down by distributing these multi-channel communication products so they don't rely solely on telephony. That's a cost reducer, and so that helps us. Our customers are deploying multi-channel communication and internal collaboration. Why? Because they have to. Bad economy or good economy, and so it just reduces some of the pool. So we're still growing
It's
very
really
well.
because you tell them they have.
Well, actually,
I'm telling you.
It's not that they have to now.
well, most of us spend our lives doing things because we were told we had to, and I learned that well, and so I'm trying it now too, and it seems
good.
and it's working.
But learn something here today.
But in any event, the economy is clearly hurting. Okay, notwithstanding some of you, the government is not building all our businesses for us. It is not, in fact, doing what it needs to do. It's a malfunctioning organization. It's a malfunctioning organization, and anybody who does business with it knows that. So we have to basically succeed in spite of it. And I think the fact is we're with some challenging times for a while. You better have a product that customers need and markets are required to deploy that flows against the stream.
Good product and something that customers need sells well whether the economy is bad or not, right? It sells better when everything's happy.
It just sells better when things are going.
That's true. Yeah.
But we're doing fine right now, and we do better if things are up.
So 2 more questions. The first one has a one-word answer, and then the second one's a little longer. Who wins in November? I'm writing it down.
Yes.
Good. Yes.
Yes. Nobody.
Yeah, I agree with that.
What was it?
I said nobody.
Nobody.
Particularly us sitting around here.
There you go. That's interesting.
I haven't found anything that makes me excited.
The fact is, you got to have hope, you got to believe, it's got to go somewhere, and I am betting on change. All out, some jail. So whoever's in there, out, put some in jail, and let's get somebody else in.
Thank you for taking a definite stand on this. So, looking out 5 years, What will your company look like, and what will the biggest surprise about the SaaS industry be in 5 years? And let's start with you, Tom.
We'll be a lot bigger. The CEO's going to look great. He's going to be younger.
You're going to have sold 3 more companies, right?
All these things are going to happen. No, we will be bigger, and I think that the SaaS industry will have more and more acceptance of SaaS. You'll have more and more concentrations of recurring revenue streams as being, core parts of software companies. And I believe that that's kind of the trend for us and the industry in general.
Right, Larry?
Well, in addition to being a lot bigger, will have fundamentally changed, I think, the way people inside companies think about the process and how they interact with customers. For us, that's what it's all about. It's about enabling everyone who's customer-facing inside a business to better engage, better connect, and create a better experience for the people they connect to. And we want to redefine that market anyway. We want to redefine that market in a broad way. And we don't want there to be 20 million users of CRM, there'll be 200 million users, right? And that's our goal in redefining and growing that market. With SaaS, I think the big realization will be the hybrid world. That it doesn't matter whether the software runs on-premise, or runs in the cloud, or runs at Amazon, or runs at IBM, or runs at Rackspace, or runs in your own vendor's data center. That stuff is all going to have to integrate, it's all going to have to connect, and it's going to have to be fluid the way these pieces move around. And that sort of realization, that shift, will be a big part of the change in the SaaS economy in 5 years.
Great. Tyler?
Yeah, I mean, obviously, plan has to be bigger. That's all we're focused on, is right, scale. But in general, the platform in which we continue to evolve on how we service our customers will continue to expand as well. I think the biggest change, where it's already happening, is that, I slightly disagree a little bit with Larry, is that it would have to be a complete anomaly for a company to actually purchase an on-premise solution. That the default for CIOs and CFOs out there would be, there'd have to be a very, very good reason and something out of the ordinary for you to actually put something in your own data center.
Good, bold, great. Thank you very much. I think we've got, if we could first give a round of applause to and up next, I think we've got some CEO showcases. Yes? And we'll turn it over to whoever's up next. Thank you. Got this one, absolutely.
Kelly.
Yes.
Good afternoon. Well, as you heard, we've been in business for 10 years at Always On, being very integral to the Silicon Valley. And now we have created Always On Ventures, which I'm very grateful Johnny has invited me to be a partner of. So raise your hand if you've raised just your first round of financing, whether a big seed or an A. Second round of financing? Third? Are you guys awake? Okay, so if you are raising your B, somebody who's raising A, B, or it's just got the A and is starting to traverse towards the next stage, please let them know about us. We'll be happy to talk to them. Please let them know about me and have that person or you come and catch me during the show. Now the reason I'm up here is to actually introduce CEO showcases. And let me tell you about the first one. So say you are a telco, and I hope that's not a nightmare. But say you're a telco, you're obviously big, you run in a bunch of countries, you have bottom of the pyramid customers, different languages, all sorts of things going on, and you obviously want to provide some kind of service that's attractive to keep your customer, and say that the service is music. Now, we all are familiar with the fact that copyright around music is very problematic, especially when you cross country boundaries. So how does that get done? So I'm very happy to introduce Chris Hansen, CEO of BAM TV, who provides that solution.
Yeah, exactly. So how's it going? My name is Chris Hansen, CEO and co-founder of BAM TV, and I can imagine what you're thinking. Something like, oh my God, not another music startup. And you're right. BAM TV is unlike any music startup that you know about, and I realize that's a tall order to fill, and if you stick with me for the next 10 minutes, I hope to convince you of that. I'm very proud that our company was named among the 50 tech companies to watch by the Always On editorial staff. And I think it's because we have a completely different approach to creating, distributing, and monetizing music. So first, the basics. We produce HD music videos of live performances, of documentaries, and episodic content, like what you might see on TV. We currently have 11 distribution partnerships reaching 150 countries, and we've been producing this content for the last 3 years. We've currently worked with 175 bands, produced over 60 hours of HD quality content. Here's how we're different though. We have no need for major label licensing. It's not that we can't get it, we don't want it, because they impose financial and jurisdictional restrictions and impositions on what you can do with the content. So we also get global distribution rights to the content, and surprisingly enough for any musicians, or if you know any musicians in the room, we have a fair share, 50-50 net profit share with the artists we work with. So any other music streaming service, whether it's Spotify or Pandora or Rdio or there's a lot of great services out there, they all face the same problem. They have to give 50 to 70% of their top line revenues to the labels, as well as upfront payments of about $500,000 to each label, plus guaranteed minimums. But worse than that, there are extreme jurisdictional barriers set up of where you can license your content, where you can grow. And the labels typically will not license to anything in Latin America, in Asia, in parts of Europe. Very difficult to get tier 1 music content. But perhaps the biggest problem of all is this polarization in the music industry. Over 96% of all recorded music revenues come from less than 20% of musicians. Now, it's not that 80% of the bands suck and they're never going to get any airtime. It's that they just don't care. The pipeline is extremely narrow and they're used to controlling it from end to end. So BAM TV is solving 3 big problems in the music industry. It begins with curation. So we've worked with 175 bands. That only works if we pick the ones that are going to go on and be successful. And we've got a great track record with that, which I'll tell you about later. We produce the HD video content and audio ourselves. We host it ourselves, and we can distribute and target any device practically anywhere in the world. We get a global distribution license to the content, which means we can enter into a variety of different types of relationships with distribution partners, whether they be mobile carriers, cable companies, or OEMs. So we have an end-to-end solution for these 3 problems. And I should also mention that we've spent a considerable amount of time and money investing in our own back end so that we can manage this solution throughout the entire process. So we are device agnostic, and we are a global distribution company. So not to harp on it too much, but this is the way that the music labels, the big 4, see the world. They see it as a one-way flow of content from a very small group of content creators. And everybody in the world is supposed to just drink from the fire hose. And depending on what market you're in, that determines how far down the line you are. This is the business model that we propose. And this is a connected network of content hubs throughout the world. It's a global marketplace. It's a global demographic, just even in this room. And music itself, good music transcends cultural boundaries. So the idea in a nutshell is this content creation factory. We've been recording bands for 3 years, and we've developed a very streamlined and efficient process for recording. And what well, I can add that our bands have gone on to be validated by major tastemakers throughout the world. In fact, one of our bands we just found out is going to be opening for Neil Young soon. What we have discovered in the proof of concept phase is that there is a huge demand for music video content in mobile markets throughout the world. And they're facing market saturation, they're facing increased competition, and they're trying to differentiate. So music is one way to do that. And this is why we have several distribution agreements in the pipeline that are going to take us to Latin America, to Asia, and even Northern Africa to develop these content hubs. So the process begins. We don't just, airdrop into a new market and pretend like we know what's going on. We begin with a discovery phase. We do content production, which then these mobile carriers can invite their subscribers to a live event where a video is being recorded and there are bands distributed exclusively in those markets, either as a white label or branded as Band TV. And then we find other revenue opportunities throughout global marketplaces to scale. One example of how we have a fundamentally different approach to music is our forthcoming iPad app. And it's in a private beta right now, but we do have a demo booth out there, and I'd be happy to show you our music videos, but also give you a sneak preview of the app. We created a photorealistic virtual venue where users can explore, and it basically is replicating the dive bars that people go to discover great music. And it really hits on the notion that music is supposed to be fun. You know, when an album became an MP3, you lost all the cover art, you lost the liner notes, you lost the band bios. It became this compressed file, and the user experience is poor. We've brought all those elements that we love about analog formats and put them into the iPad in a truly engaging app. So as I said, we've been privately funded for 3 years. We have a great staff of creatives. Yes, this is my staff, not the artists that we record. And we've really gone through the proof of concept phase. Right now, we are launching a Series A search. We're trying to raise $3 to $5 million so that we can scale our productions into these global markets. We can't develop apps fast enough to fill the orders that we're trying to fill. And so we really are looking for some VC, Super Angel infusion to help us on that path. So again, my name is Chris Hansen, and I see I am 15 seconds early, so I will leave it at that. Please continue.
All right, let's see if you guys pay attention now. So, on the web, we have this thing we call posting stuff. And we basically do something like this. And it's a blog, or it's a video, or it's music, and we have no idea what works and what doesn't. When should I post a blog so I actually get engagement from my customers? Or a video? Should I bother with posting on LinkedIn or not? To answer that, please welcome Chase McMichael, CEO of Infinigraph.
Hi, I'm Chase Michael, CEO of Infinigraph. Thank you for having me. Infinigraph is like Comscore Nielsen for content marketing and competitive intelligence. Think about it. Marketers are sheerly drowning in the amount of information that they're having to process to determine what's relevant to their customers. So Infinigraph not only solved that problem, but we identify trends that are important to their customers. And we're enabling them to create very highly competitive and intelligent content marketing campaigns. So I always like to start off these presentations talking, from the client side. What are our clients doing with our products? We're going to give some use cases around Forever 21 and TCBY. But in this example, James used our product, his team, to define strategy around understanding what is trending in an ecosystem around, think about the competitors around Forever 21. There's actually about 25 of them. TCBY, we're going to show you about 30 of them. If you know what's relevant to your audience, you really can create some very highly engaging content. And content right now is king, and I don't think anyone here would guess on that. Another client is L'Oreal. They came to us and said, help us understand what is resonating across the entire professional network of hair care. You know, not only my competitors, how are they interacting with content, what's working, but also what is my audience resonating around outside of just hair care. Help me understand what's working with my audience, and let's be in tune with them. And then UPMC, another exciting client. Literally, this client came in on our Facebook page, liked our page, we converted him in 5 days. The ROI was obviously big, and Ian got his team to literally put in hospitals and medical foundations into our system. And we're a platform as a service. We came back and showed him, what content was resonating, what content was working for that, ecosystem, i.e. the healthcare medical field. But what was more important was that not only did they do an upgrade, but now they're doing it for how to recruit doctors. So they're looking across other sites, they're creating content from a recruiting perspective. So very powerful from an insight perspective. So content is more interesting than others. There's not a piece of content on the planet right now that doesn't have a social share function. You have probably clicked on a LinkedIn like or a share. Someone here has done like, maybe a retweet, or commented on a piece of content. You can imagine the huge amount of interaction that's happening right now at scale. And this is a big data problem. It's an enormous data problem. So marketers, like I said previously, are drowning in this information. How do you organize it? Not only organize it, but how do you create a functional product that's valuable to them, that guides them through this whole content processing and creation? And that's exactly what we're doing. So we found this big data is a big opportunity. So what does Infinigraph do? We are a content marketing intelligence platform. We're a platform as a service, PaaS. And functionally what we're doing is we're ranking content on a real-time basis and industry organizing. And today we're actually announcing what's called our industry pages. And if you come by my booth, I'll show you what it is. It's very exciting. It's 40-something sites or 40 industries where you're going to see some examples. But we're literally distilling down this large data set and then being able to surface and uncover things that you would never imagine that your consumers are actually interacting with. And those are precious insights that are extremely valuable. And can't you see the advantages of understanding what your audience is into? So I mentioned a little bit about engagement intelligence. Consumers there, we're going from this keyword world to now an interest graph world. And that's a big paradigm change, because now instead of people mentioning a brand, they're acting on content that's relevant to an industry. And if you're able to organize that at scale, it's a fundamental game changer, because now brands can be more relevant to their customers and have a unique knowledge. So I mentioned trends. What are trends? If you think about it, every client out, every brand out there has a competitor that's either doubling down or trying to take market share. And content is the methodology they're using today to take that market share. So if you're able to organize, the structure around content, you're literally able to find out what is, behavioral intelligence at scale. And that's extremely valuable for a content marketer, because when they're developing a content calendar, which I'll show you an example of, is very important. So here on the right-hand side, you can see some of the brands. Look at the scale here. So I'm literally looking over, so it's from the TCBY competitors, I'm literally able to dissect out and say what type of content, how many videos, how many photos, what type of photos and videos are resonating and working on a real-time basis. And this is fundamentally, again, changing those content calendar decision support. What you see here, again, on the left-hand side, is called hypercuration. So this is one of our premier products. It allows for a brand to truly be the smartest person in the room. Not only can they do curation across their competitive set, but they can also bring back content that's complementary, or content that's interesting and important to their customers, that direct curation. And that's very important when you're trying to create brand lift and engagement overall. And you can see this is an inside view. So you can imagine what is happening on these brands on a real-time basis. Very important. I could say we mentioned about Forever 21, another one of our clients. So the green curve is actually an engagement. If you're a brand in the audience, you want to know where you're at. how effective are you? If you know how effective you are, then you can measure yourself and say, well, how effective am I compared to my competitors? What are they doing? And again, it's that surfacing. And there's literally 20-something graphs. And what we do from a platform perspective is we're bubbling up all the industry averages. And then that's how we're able to formulate these content calendars. And do you see how important it is to determine for a brand what's trending? So this is every marketer we show this to, CMO, Vice President of Marketing, they light up because we're answering for 1 month, this is a 4-week period, a content calendar. What am I deficient in? How much content, the physical type of content, do I need to be creating to be relevant to my customers, to be competitive? And that's a huge opportunity because now majority of the industry clients that we work with, there's a lot of guesswork, or they're doing this, post and pray. But now you're literally using science to determine what works. So Rue La La, or one of our clients, are using hypercuration on a daily basis to find out what unique nuggets are trending that are relevant to their customers, and they're literally putting this in their feed. And what's exciting about this is they fundamentally have lifted up their entire engagement on all their content. So when they put out a brand post that's about purchasing an item and stuff like that, they're now getting a fundamentally higher engagement. On average, it's 30+%. And isn't it worth knowing what's relevant to your audience? So we have several different use cases for various different size brands. I'd love to show you some more about what we're doing and why we're creating some success. We are a revenue generating company here in Menlo Park. And I want to leave you with this thought. Everyone here has had a genius moment. We're just not having them every day. But around us, there's continuous genius moments happening all the time. And Fantagraph taps that genius. Thank you.
Thank you, Chase. Say you got your SaaS company, built the product, nailed the pricing model, retention is 90% as specified, and now you try to figure out how to go global. And you have to figure out who's going to resell your product, are you going to charge for it? Well, bank would even be willing to entertain this foreign entity. And you're lost, especially if you look at, going for dozens of countries. Meet Carl Diebold, I just killed his name, a CEO of Evancate, who has figured out how to solve that for other companies.
Thank you very much. Okay, good afternoon. I'm Carl Diebold, CEO of Avangate, and I'm here today to talk about how Avangate helps our customers to sell more software. Now, when I talk about software, I'm talking about both downloadable software as well as software as a service. So if you're a software company out there, or a SaaS company out there, or you have to do a little bit of both, this talk is for you. We can help you grow your revenues worldwide. Okay? A little bit about Avangate. Avangate is a commerce as a service provider trusted by thousands of software and SaaS companies to accelerate the revenue worldwide. Okay, we have a cloud-based solution with 3 major modules. The e-commerce module is a complete end-to-end solution to help you move your business online. Everything that you need is in there, right? From a fully branded shopping cart and purchase experience to international payment processing. So you can sell into over 100 countries worldwide, including local language support, local currency support, and local payment method support. But it also includes full subscription management billing. It has tax support, refund support, we're the merchant of record. So we handle all the transaction processing. We deal with risk and fraud management. So you don't have to deal with all this complexity. We make it very easy so you can focus on your core business. Our second module, Channel Manager, right, is very important because if you look at the world today, 50% of software is sold through the channel. So Channel Manager module lets you manage your resellers, okay? It automates all the transactions between you and your resellers, giving you visibility into the sell-through, visibility to the performance of your resellers, and visibility into channel conflict as well. It also helps you onboard resellers more rapidly, expanding your market reach. And finally, our affiliate module It's really an army of 33,000 affiliates that we bring to the table that are at the ready to start selling your product or service day one. Now, so it's a little bit about AppGate. I'd like to talk a little bit about the market, because the software market is under massive disruption. We've seen how the cloud has disrupted how software is built, but we're now seeing the cloud disrupt how software is distributed and sold. These are figures from IDC. So if you look in 2010, about a third of the world applications were distributed in the cloud. So either as a download, software download, or software as a service. By 2014, at the end of 2014, that's projected to flip on its head. So you're talking about 34% moving to 72%. That is a sea change in our industry, okay? And it's affecting B2C as much as B2B. Businesses are buying more and more, like consumers. So companies who figure this out and embrace this change, they're going to profit from it. And companies who resist it, they're going to struggle to compete, okay? Now, it's not easy to make this transition into doing business online in the cloud. In fact, it's very difficult, okay? So now you're dealing with new channels, right? You may be selling for resellers. Now if you're going direct, how are you going to deal with channel conflict? And when you're selling online, there's many different touch points. Folks buying on mobile devices, coming to your website. You may, be on several marketplaces or want to have in-app purchase. And those touch points need to be consistent, right? Otherwise, the customers get very frustrated. So it's very difficult. Secondly, new markets. Look, the world is definitely flat, but you got to speak the local language. If you want to tap into these markets, you need to have local language support, local currency support, local payment method support. Because let's face it, right? I mean, Visa, despite what they say, is not everywhere you want to be. And so, also new models. Look, part of the trend that we're having is this move from pay up front to pay as you go. Right? So how do you experiment with these new models? How do you take advantage of them and fail fast? And it's not just subscriptions. Subscriptions is one model, but trial, rental, freemium. How do you adopt these new models in an online world and test them and fail fast and see which ones work for you? Well, like any good software company or technology company, you're going to first think, well, I can build it myself. I got smart developers, right? We can hack something out, glue in a few tools. But I can tell you that gluing in tools and building yourself is extremely painful. It may start off fairly simple, right? So I'm going to hack up a shopping cart and a web page, and I'm going to connect it to PayPal, and I'm done, right? Very quickly, you realize, wow, this is not going to scale. This does not allow us to get into overseas markets. This does not do a lot of things. So pretty soon you find yourself gluing in a subscription and billing tool. You realize you have to deal with entitlement, and if you have a downloaded product, fulfillment. If you want to sell outside North America, you're going to have to deal with bringing on board new payment processors and connecting them into your custom solution. And it pretty much goes south from there. I mean, you're dealing with refund management, in-app purchases. You have to deal with risk and fraud. You're hiring a call center to deal with issues in your order, with your orders, and deal with mobile purchases, and on and on. Okay? So if you happen to be one of the largest enterprise on the planet, if you're Apple, for example, you can throw 10, 20, 30, $50 million at this problem, and you can build a very fancy custom solution. Go have at it. But for the rest of us, for the other 99.999% of the market, how do we deal with this complexity? Okay? Well, that's where AppGate comes in. We make it easy, right? We have a complete solution. Everything you saw on the previous slide is already included. It's very agile, easy to use. It's a cloud-based solution, as I mentioned, but it's also very self-service. Okay, so you can make changes yourself. Make changes on the fly. You can do testing and see how the changes produce results. You're in control of your business. You don't have to spend a lot of money in implementation, all this stuff. And finally, it's risk-free. Okay, so our business model is revenue share. We don't make money unless you make money. Right? We don't have very expensive implementation fees. We don't have license fees or heavy subscription fees that you're obligated to pay. It's basically pay as you go. And a lot of our customers start off with one product, or they start with one region, and they expand from there, one step at a time. And we're fine with that. Okay, a little bit of background on AppGate. We've been in business since 2006. Okay, so 6 years in, and we now have 2,300 customers worldwide. We've also been very fortunate to be growing very quickly. So we've been averaging about 80% revenue growth a year. That's a CAGR of 80% over the last 5 years in terms of revenue growth. And I put a number of some of our customers down here who we've helped to sell more software. And of course, we'd love the opportunity to help all of you sell more software as well. So please come by our booth at the event. Talk to me. We have a team as well at the booth. Or visit our website at avigate.com or email us at info@avigate.com. And with that, thank you very much.
And our last company. First about me. So I moved to the States when I was about 21, and like many of you, for college and started my career, and it was a really long time, over a decade, maybe a lot more than that, until I actually reconnected with my childhood friends and cousins and neighbors, and the company I'm introducing got started doing reunions on the web. And they're here to tell us, it's actually formerly reunion.com, and they're here to tell us what they're up to with My Life. Please welcome Jeff Tinsley.
Hello, everyone. Okay, I'm the last one of the bunch. Here we go. Thank you very much for listening to our presentation. My name is Jeff Tinsley. I'm founder and CEO of a company called MyLife.com, a company I'm very excited about. I'm joined today with a number of my key executives from the business, and I'm proud to show you and talk to you about our business. Oh, I don't have the actual, here we go. All right, a little bit about me. I am an entrepreneur. 17 years in the consumer and business internet space. I actually won Entrepreneur of the Year in 2009, which I'm very proud of, and I've built and sold a number of businesses along the way, and I'm very excited about my life. So I wanted to share some information with you about the space that we're in, some information you've probably never seen before. Take a look at this chart. This chart shows that more and more Facebook users are actually accessing multiple social services around the web. This is a trend that continues. So 45% of Facebook users are actually using different services, the ones that you see on this page, and many others that are not on this page here. So that's actually doubled just over the past year. So there are probably many people in this room that are actually on Facebook, on Twitter, on LinkedIn. You're using a number of different services every day in order to stay connected to people. In addition, undoubtedly you're going another place in order to actually access your email. This information is from Comscore, so this is for real. We recently ran a survey with Harris, more than 2,000 people. And we have a report, a very interesting and exciting report that's coming out August 1st. Here's one of the key points that I love. The majority of users out there want a simple way to pull all of these services together in one place. And so that's what we've been building at My Life. And My Life is creating the one place that you'll ever need for all of your connections and your communications. We think your relationships are very important, and you do too, and that's why you're using these different services. Well, there's no longer a need to jump around to multiple services to stay connected. We've pulled it all together for you. We've created a better way for you to stay connected. And in one place, you can now manage all of your communications across these different networks. We pulled together your social networks and your email into one. We actually help you build and monitor one online identity, one My Life identity that contains profiles that you have from around the web. We also help you in one place find new valuable connections, whether they're personal connections, whether they're professional connections, and everything in between, with one simple search, all available through My Life. Believe it or not, this company has invested a tremendous amount of capital to build this platform. We think this is an important space, and we've invested $240 million in this platform, and I think we're well positioned to lead this important space. We've acquired a number of companies. We've built an amazing product platform and technology platform at the core. And we're not afraid to spend money in the marketplace to drive customers into our service. I'm very excited to announce that we actually have My Life version 2.0. This is a very significant release that's coming out August 1st. So we've actually been showing the beta of the product out in the hall. So I encourage you to go take a peek. It's easy to get started using this service. You register for free. We pull together one complete identity for you based on where else you have profiles around the web. We allow you to manage that one searchable identity and monitor it. We let you know when someone searches for you, whether it's a personal connection looking for you or a professional connection. We even let you know if we find information about you on other places on the web and allow you to take action. For instance, you can actually see what other public record sites have listed your information, find them here, and choose to remove them from the web. And then at the core, this is the most exciting part, and there's, again, a significant enhancement to this core service that's going out on August 1st. In one place, you can access your social networks and your email in this very simple dashboard. We're trying to make things simple for you and save you time. On the left side here, you have your multiple email accounts pulled together. You actually have direct messages you receive on Facebook, LinkedIn, @mentions on Twitter, posts to your wall, all in this left side, which is your prioritized message inbox. So these are the messages you definitely don't want to miss. And you're going to be able to go to one place to view them. And then on the right side, you can actually read all of your messages across networks and share with the networks that you choose, all within My Life. And this is where we came from. At the core of our service, we also have an extremely powerful search. So we are able to search information from all around the web. We've pulled together public information, public social profile information, what users have contributed in our service so that you can search for anyone that you want to find, for any reason that you want to find them. Again, we think your relationships are important and they're what make your world go round. And so we are wanting you to make these valuable connections and giving you one place to do it. We have award-winning mobile apps. We just released a new Android application and new iPhone applications are coming out in about a week that are fantastic. You need to try them. You're going to wonder how you live without this. I'm hoping that you wonder how you ever live without this kind of application, right? It's just much more simple. You'll find yourself saving a bunch of time. Service is getting tremendous visitation, close to 30 million unique visitors, more than 60 million registered members for our service, and utilization of these new offerings is actually growing nicely. We have an aggressive distribution strategy. We are spending significant dollars in the marketplace, both online and offline, so across display ads, etc., and even through television. We are aggressively going after mobile distribution, talking to a number of OEMs and other mobile carriers, and we think that these applications also fit well within your television as more and more televisions are connected to the internet. What I wanted to show you today was a new television campaign that's actually going to be launching in the early part of August that we're very excited about. Take a look.
And here are your social networks. And for the first time, My Life can help you manage all of them from your own simple, private dashboard.
Can you back this up real quick?
Read and write messages. Update your status. And here are your social networks. And here are your social networks. And for the first time, My Life can help you manage all of them from your own simple, private dashboard. Read and write messages. Update your status. Share photos. And never miss anything important. At My Life, you can also find new connections and monitor your online identity, all in one place. Join today for free and let My Life help simplify your life.
So we're excited about that ad. We're creating something new and different, and when you do that, you're trying to show people there's a better way. You have to demonstrate what you have, and so that's why we produced the television commercials that we did, and that's why we're going out with a national television campaign, as I said, in the early part of August. Business model-wise, we have a proven freemium model, just like LinkedIn. So we love this model. It's a scalable model. We generate recurring revenue from this business. The core services are actually free. It's free to create an account, manage your identity. It's free to pull all these different services together in one place. And it's free to search across the network and make connections to people you know. We have a handful of premium services that users can choose to upgrade to. And with those premium services, even though we only have about 500,000 active premium subscribers at this point, we still generated more than $77 million in revenue last year, and EBITDA of $7.8 million, and that was with a $35 million marketing spend last year. We're excited about what we've created. My team has been working incredibly hard. The data shows, the information shows that this trend is going to continue, and I hope that my life can actually help you simplify your life, and I encourage you all to take a look at the product. We're very proud of what we've produced. And so look for the new product. We're looking to partner with fantastic companies that have built great mobile applications out there. We're looking to buy companies as well, particularly in the mobile space. We're looking for other distribution partnerships. If you have access to a large audience that could benefit from these kinds of applications, we'd love to talk. And though we're not raising capital, investors, of course, are approaching us, I think, because we're working on something very interesting and solving a real problem, and there's growing demand for what we are offering. So that's it. Thank you very much for listening to me. Thank you for hearing the story about my life.
Thank you, Jeff. Very cool. Well, you've made it. It's time for our break, and please go on network, go meet somebody, go stop by the stations, and enjoy the show.
Okay, all right. Welcome back to the break. Okay, I just want to let you know that we had our 80th country log in to our webcast, so when we face the camera, that one guy in Afghanistan, right on brother, who pushed us up from 79 to 80. It's a good thing. So, our next session, there was a big acquisition today, right? There was the, what's the name of that company, Nicea or something like that, was bought by VMware for over $1 billion. And for all those that don't have revenue, you should be encouraged because they didn't. That's not necessarily true, that's a rumor. And I gotta get on Google to find this out. But the reason I bring that up is because most of you demographically are entrepreneurs running your own companies. And obviously a big part of that is raising money, which is the worst part of that. But it's also being able to have a story that takes you somewhere where you can pay your investors back. And later tonight, you're going to see the 451 Group's new updated analysis of all the top 100 companies and the top 250 we've ever presented for the last 10 years, or at least 9 years, and where they are today. And you'll see that we have a very impressive record of picking companies. But there has been a big dramatic shift in how those companies became liquid. Primarily, there has been a huge spike over the years, really since the bubble in merger and acquisition activity. So we've had, out of the 900 plus unique companies, there's something like 250 have been acquired, which is a good number, shows us that we've been good, but it also, again, emphasizes that M&A has been really one of the primary paths of liquidity. So our next session is always a very important part to our Silicon Valley Innovation Summit. And it has to do with taking your company or gaining liquidity with your company. And for this session, we have a tremendous host, a very good friend of mine and always on, who is Hale Boggs, a partner for the corporate finance and venture capital emerging companies and capital markets at Manhattan. And with that, he has an extremely illustrious panel, which I'll allow him to introduce or have them introduce themselves. So without further ado, now that I have the room's attention, I will turn it over to the illustrious Hale Boggs. You ready, buddy? Tony. Always great to be here at the Innovation Summit. I think we're doing this probably 8 or 9 years now when we got started. And this panel is always a really good one. As always, we have a terrific group of guys. I'll let each of them introduce themselves and then we'll kind of get started with Q&A. We don't have a ton of time today, so I am hoping that there's going to be enough time at the end. We'll try to reserve maybe 5 minutes at the end for some questions. If we run out of time, I apologize in advance. Sometimes these things just kind of go without a time at the end. So, real quick on me, as Tony mentioned, I'm a partner at Manhattan Phillips, based down in Los Angeles, although I spend about half my time in our offices here in Palo Alto and in San Francisco. Our work mostly involves representation of venture capital firms and the companies they invest in. We do quite a bit of M&A work, mostly sell-side deals, selling companies out of VC portfolios. So this is a topic and a panel that's of personal interest. Why don't we start here with Paul and go down the list with a brief introduction to you guys.
I'm Paul Wander on the internet with software IDF at Morgan Stanley. I've focused on that space for the last 16 years now. And anything from financing, advisory, M&A, IPOs, is things that we focus on at our shop.
Hi, my name is David Lowy, and I run corporate development for Google. I guess what's interesting about my background as relates to this conversation is that I've sat on a number of seats at the table. I've been an entrepreneur, starting and sold 4 companies. I've been a venture capitalist, and I've run a big group at Google previous to this role, and running the marketing organization of Google.
Good afternoon, Joe Brantuck with NASDAQ. So I head up the IPO team, recently relocated out to the West Coast. And my primary role, is along with my team's role, is really just to engage with private companies, educate them about market structure, the benefits of access to the capital markets, and most recently, obviously with the Jobs Act being relatively new to the space, it's definitely getting a lot of good attention. We don't necessarily think that it's the whole picture to turn around the IPO market, but look forward to talking about that.
Hi, I'm Jeff Thomas. I'm a Senior Vice President at Second Market, and we're in the business of building a big platform to help companies provide liquidity to their shareholders before they're ready for NASDAQ. So as the timeline to an IPO continues to get longer, we help companies provide liquidity through structured liquidity programs.
So obviously, a lot of interest represented, from investment banking to a big acquirer or a major market player, someone from the industry who actually deals with the mechanics of taking companies public, and sort of an alternative secondary market guys. So I'm interested to hear all the views. So why don't we start? I'll just set out a few statistics, recent data, not as recent as today's deal, but through the end of the second quarter. This comes from Thomson Reuters and the National Venture Capital Association. So through the end of the second quarter, end of June, during the quarter there were 11 VC-backed IPOs, obviously the giant one being Facebook. That was a $16 billion deal. The total deal value of those 11 was $17.1 billion. In terms of overall how that compares to market, actually it's a 42% decline from the first quarter of 2012 and about a 50% decline from the second quarter of 2011. There are, again, according to Thomson Reuters, there were, as of the end of June, 44 companies in the IPO pipeline registration. Although, importantly, and something we can talk about in a bit, that excludes companies that have taken advantage of the new Jobs Act and made confidential filing. So that's kind of a new part of the equation. All of the companies that went public in the second quarter were U.S. companies, and most of them were here in California, and most of them were in the sort of information technology and sort of adjacent spaces. On the M&A side, more robust figures, 102 VC-backed M&A deals recorded in the quarter. Announced deal values of about $5.5 billion, but a lot of deal values in these deals are not announced, so
numbers a good bit higher than that. Just in terms of raw numbers, that was an increase of about 25% from the first quarter of 2012. And the biggest deal in the second quarter was Amazon's purchase of Kiva Systems for $775 million, which is a very large transaction. So I guess, that sort of sets the framework. Kind of a mixed bag, at least in my view. You kind of, there's already been a panel about Facebook. I don't want to have a lot more conversation about Facebook, but taking that out of the equation for IPOs, just not a ton of liquidity dollars being raised in the public markets in the second quarter. I guess what I'd like to start off with the panel is just to hear from each of them about their sense of where things are in terms of liquidity. Maybe focusing on IPOs, but if you want to talk a little bit specifically about acquisitions that Google. It's not a Dave, or Paul, you want to start off?
Sure. I think the IPO market is probably as robust as it's been. If you look at last week, we priced 4 equity deals. We did the IPOs for Kayak and Palo Alto Networks last Friday, which both performed very well. We did secondary offerings for Splunk and Bazaar Voice, which went public in the Q1 timeframe. If you look at the things we track in terms of investor demand, the way the price action is, do the prices go up? We price both Palo Alto and Kayak above the initial filing ranges. We're able to get deals that trade well in the aftermarket. That's been quite robust. And so for us, it's kind of business as usual. We really, no new news. The amount of volume this year is actually on pace with last year. I do think at a macro level, if you look past the last 5 years, there is a secular shift towards M&A from IPOs for exits, but nothing specific, I think, to this year. We launched an IPO today as well in the internet consumer services space, the roadshow will be priced next week. So I think contrary to a lot of the stuff we read about in the press and media, to us the market feels quite robust, and the action we saw last week was supportive of that.
Yeah, the M&A data that was just cited reflects my view in terms of what's going on. It's a pretty robust M&A market, and that's not that surprising, given how long companies are staying private. They're really forming to be great businesses long before they're considered going public. For Google, we are ahead of our average. We've done 130 acquisitions since 2002. 60% of those, about 66% of those, 2/3 have been successful. So we're basically staying on pace in terms of the number of deals we're doing on historical averages. And I think they're, we've learned quite a bit in terms of how to do them, and so I feel like, if anything, we're a lot more thoughtful in terms of exactly which market niche we're addressing and making sure that the timing for the business, us as Google at acquiring these businesses is right, as well as the timing for the companies that are coming in and trying to take their business to the next level.
Yeah, I agree very much with Paul said. We're not seeing levels that 2003, 2004, 2005, but it's definitely an improvement from the 2008, 2009, 2010. Quite honestly, we're right in line where we were in 2010, which was the last year where we saw the most significant IPOs go. So we're feeling pretty comfortable about that. Again, I think the media has run with some stories, but we also have to mention in this context about the macroeconomic environments, and so obviously Greece and Spain starts to creep into the equation. We also watch very closely the VIX, which has come down to very palatable levels at this point. So we're cautiously optimistic. We also take a look at the pipeline. So Hal did mention some statistics for the IPO pipeline for VC-backed deals, but overall, there's 207 companies that are on file. About 150 of them are active S1s, and about 79 of them have come out under the emerging growth companies. And we do see a significant number, and that's sort of the last snapshot of the IPO pipeline now that the majority of companies are filing confidentially. So we do feel that we haven't seen these levels in terms of pipeline in, say, the last 10 years.
Jeff, what do you guys see?
Well, so the secondary markets for private company stock have really evolved over time. And we've changed our approach of the market. When we got started in the business, we were working on behalf of individual shareholders to help them sell their individual stakes. And what we did about a year and a half ago was evolve our business model to working directly with the issuers to help them set up programs. And I'd say the number one thing we've seen this year is with some of the turmoil in the public markets and the issues around Europe, the companies that we've been working with have been saying, okay, we thought we might go public later this year, but we're thinking about delaying a year or maybe two. And so now they're coming to Second Market to help them organize liquidity programs to their shareholders. We've recently completed about half a dozen tender offers through our platform for late-stage venture-backed companies, ranging from $5 to $50 million. A number of sell-side participants have been 50 to 500 participants on the sell side. And what that's really allowing companies to do is provide an incentive to their shareholders, and particularly their employees, to help them stay engaged in growing the business while still remaining a private company and pursuing that growth that's needed into the public markets.
So Dave, maybe coming back to M&A for a second. For a lot of the folks in the room, you mentioned 100+ acquisitions over the past couple of years. And obviously, for many people who start a company, as Tony said, the view is to build it and grow it. And, they're realistic and recognize that IPO may not happen, but that a sale to a Google might. So in terms of advice to folks out there that may be thinking about that strategy, what are some of the things you guys look for? Maybe macro, micro, what deals have been successful, what things do you want to avoid, those kind of things.
Sure. I mean, most of the successes, pretty much all of the successes at Google M&A have been entrepreneurs that have come in and taken their business to the kind of a level that almost no one expected. So, kind of Android would be kind of the quintessential example, a 7-person acquisition, which is now kind of the cornerstone of our mobile strategy. YouTube, kind of seemed like a big deal at the time. It's obviously a much bigger business today. And then, kind of all the ad acquisitions like DoubleClick and Invite Media and all this. These are entrepreneurs that have stuck with the business for years. Like Andy Rubin from Android was, joined in 2005. He's on the management team of Google. The real goal for us is bringing in talented entrepreneurs with a really strong vision that want to use Google's resources to take their business to the next level, and that's what we're constantly scouting.
So Paul, we've done this panel several times. I guess what I took from your comments is it's kind of steady state, not a lot of new news. How do you compare kind of where we are to say a year ago, and then maybe pick up the crystal ball, what do you think a year from now? I mean, we're not, other people, other panels today have commented, it's what's going on in Europe and macro things. It's an election year, tax uncertainty, obviously affects markets. What's your take? Contrast a year ago, this year, and next year.
Yeah, I think, it feels, the macro obviously is a little more uncertain. I think if you look at, valuations, and one of the things we care about is where are we in the cycle. And if I told you that the average S&P 500 stock trades at about 7 times EBITDA next year, so multiple of their EBITDA, and I told you that Apple and Google trade at 6 and 7 times respectively, you think about that, wow, they're growing 3 times, 4 times faster than the S&P, yet they trade at the same level. It tells you where relative valuations are for some of the tech leaders. Even, some of the deals we've done very recently in the internet space trade at 15, 20 times EBITDA multiples. So to us, the valuation environment feels very, very rational, and that's why we feel very sanguine about the outlook. I guess it comes back to the question on the title of the screen, and David got at this as well. To us, when we get asked the question, how do we build the right business for an IPO or an M&A outcome, it really has nothing to do with the financial metrics or the market overview. Again, in the last couple months, people thought the window was closed for IPOs. We didn't. We got some deals done. But to us, it's really about focusing the business on really big secular trends, big secular market opportunities, to trying to build some repeatability, predictability into your business model. If you go down the list of deals that have worked well for us in both IPO and M&A, whether they're in hardware or software or even advertising, some element of predictability, visibility in the business. I'm not saying you get a SaaS company, which is great, but those elements have been very powerful. And then thirdly, it's just this notion around kind of customer lifetime value across all sectors. for this appliance company we took public very recently, they had a great story around customer lifetime value where they sell a box and then over a year or two they sell 8, 10 more boxes. That's the kind of thing where you don't typically think about how do you maximize lifetime value. That's very powerful for the IPO markets and certainly for the other markets. So to us, it's around how do you set the business model to be most disruptive, and then we think the outcome and the outcomes will triangulate on value as opposed to, hey, XYZ company's been public this valuation or the market's looking for this kind of company.
So you guys don't see, I realize the future is impossible, but no sort of rush to exit this year, because of what might happen with the election or nothing like that.
And every year there's always that year. Right. It's been a long time. There's tax changes, there's private equity changes, every year there's this push towards do we go early in September or not. I think my little bit of experience is build your business the best way, build the model the best way you can, and then look at the options and just go when you want to go. I mean, Kayak has been on file for a couple years. We're very patient. They had a great outcome last week. If you try to rush or force it, who knows what would happen. Similarly, if you try and force it too early, your business model is not big, you don't have all these elements around the model, the strategy, some of the upside drivers in your business plan, it gets a little bit trickier when you force the event a little sooner. So obviously every situation is bespoke, but in our view, the timing question is probably one of the easiest to answer, which is you don't have to think about it too much.
So Joe, is that consistent with NASDAQ? Obviously you guys want to get deals out there. When you're meeting with private companies, what kind of advice are you giving them about positioning and timing and that kind of thing?
Yeah, in terms of what we're seeing, the advice that we're given is you can't time this market, and you really need to just get all your ducks in a row, and that process takes 2 years. So there's companies out there that think they're going to just turn the next one around in 6 months, and all of a sudden all their financials are in place, all their standards, the procedures, and so forth, the proper close of the books from an accounting standpoint. That takes time, and it's actually something that what NASDAQ is very much focused on in our earlier conversations. It's not about, we have to say, it's not just about rigging the balance, it's about properly setting up the company for success. And if you take a look at companies that were not successful in getting out, you take a look right now, there's been 36 RWs so far this year, and that's trending pretty much in line with last year. Last year, I think there's a total of 67 companies that RW that didn't get out. Many of them, they weren't mature enough. They didn't have the story and the due diligence and the procedures in place for a successful exit. So it's really about, in this case, you can't time the market.
So Jeff, last year, you weren't on this panel, but I think somebody from Shares Post was, and there was just a ton of, interest around the market. Some of these big companies hadn't gone public yet, Zynga hadn't gone, Facebook hadn't gone. So there was a lot of conversation around trades of those companies and valuation and figuring out what it's worth, and I think maybe a little bit of irrational exuberance perhaps. I guess a year later, and with Facebook behind us, you mentioned earlier that you've changed your model. But do you see sort of a, kind of a more fundamental sort of shift in the whole sort of notion of the secondary market, or do you still see it as a viable kind of third alternative to IPO and M&A?
Well, I think we have a lot of similar conversations with the guys at NASDAQ just much earlier on. And what we talk a lot about is, learn from the companies that have come before you. One thing we saw through the secondary markets as they kind of came onto the scene was that they can create a lot of good, but they can also disrupt a lot of things about a business. And we talk to companies about is have a dedicated secondary strategy for your liquidity needs. And the smart companies that are out there are engaging now and kind of thinking about how they're going to structure time liquidity for their shareholders so that they don't have to deal with it on a one-off basis. And so for earlier stage companies, that oftentimes will mean that they're setting up an annual program where they'll structure a tender offer with a backstop of investors to come in and allow their shareholders to sell a certain percentage of their holdings. And then over time, some companies look to do it on a more regular basis. Probably the most frequent we've talked to companies about is quarterly or monthly. And they kind of think about that as, again, like a spring training for an IPO. They're getting ready, getting their books in order, getting, kind of the ability to provide this disclosure in a measured way. And that's really what we spend a lot of time in terms of developing our platform, is building out a private version of a marketplace so that companies can be selective about when and how they're disclosing information, who they're disclosing it to really solve the big challenge of the secondary markets, which I think from the start has been information asymmetry, and something we've taken a pretty strong stance on to get out in front of and really try to help there be symmetrical information between buyers and sellers.
Have the regulators been basically cooperative with that approach and where it's headed?
So our general counsel, Anne Marie Tierney, is actually former SEC. So we spend a lot of time proactively going down to talk to the regulators. So we're down in DC about once a quarter, talking to CorpFin and the rest of them. And I'd say, we had a big success this year in terms of the Jobs Act. One of the really big challenges private companies face historically was the issue of the 500 shareholder count. And that was something that every single company raised to us when we talked to them about the secondary markets. They said, well, we'd love to provide liquidity, but we have this artificial limit, 500 shareholders. And we don't want to breach that because that's going to force us to do an IPO. And we were actually able to go down to DC, initiate a lobbying effort, and get some legislation included in the Jobs Act that actually raised that limit, importantly up to 2,000, but more importantly, to exempt current employees out from the shareholder count. So what that did was it gave private companies a lot more flexibility around going public when it made sense for them. And so I think what we found is a successful formula is really working with the regulators to find the best way to structure these markets as they evolve. I think we'll see another really critical development in the market this summer when the SEC lifts the ban on general solicitation for Reg D offerings. And so that's something that we're watching very closely and in close touch with the SEC on.
Yeah, I did want to come back. Thanks for mentioning the Jobs Act. I'd actually like to hear each of you guys just, okay, time goes quick, but 5 minutes left. But just give a little bit of your individual take on whether it's, obviously, Jeff, and I agree with you, it's, in your view, kind of a significant piece of legislation or multiple pieces in the crowdfunding and the 500 shareholder limit and some other things. But I don't know, maybe Joe, what are your thoughts on NASDAQ about it?
Yeah, I think it's a great step in the right direction. I mean, the big joke is the Jobs Act doesn't actually create any jobs, but besides that, there's definitely some components of there that companies are going to take advantage of. Mostly that what we're seeing mostly is the confidential filing. So just the SEC came out last month and said they believe there's 30 to 32 companies are on confidentially. It's significantly higher than that. So the ramp up of companies take advantage of that. And really it's about going under the radar screen and sort of airing your dirty laundry and getting all the issues worked out with the SEC and not on a public format. So I think that definitely will help. But the proof is still, it's too early to tell.
James, did Google see an impact now from legislation?
We're very excited about it. I don't know if it necessarily translates, into how we think about our business, but we think it's one of the most important pieces of legislation, kind of in this presidential cycle, in terms of what can impact entrepreneurs. Just 2% or a little over 2% of businesses get funded, and that's a lot of people who aren't funded, 98%, and that's a lot of potential new companies that can spawn innovation, and I'm really confident that we'll see companies from AngelList or Kickstarter going public in the years to come. We're just at the very beginning, and now we just have to push on the government to make sure that they're taking a contemplative approach and work with them to ensure that it gets out with kind of reasonable regulations around it.
And Paul, for a large investment bank, I've heard people say, well, this is going to go back to the 90s and the small banks that took smaller companies out. Morgan Stanley have a view about where this is taking us?
I think more flexibility, more options is always better for the companies and entrepreneurs. The foreign filers have been using confidential filings for a long time. They changed that rule for them, but that's actually a very beneficial part of the process. And the clients that have gone through the process in the last few months have appreciated having a little more confidentiality. Although most of them actually filed publicly, probably within 30, 40 days after. So it's not like you wait until the last 3-week window to launch your deal publicly. But in general, we think having more control of the process for the companies and the boards is
Well, so we have a minute and 28 seconds left. This is a great panel, so if there are folks out there who want to ask a couple of questions, go ahead and ask, I'll repeat it. Go ahead. The question for David about an acquisition last year about email, last week, sorry, about an email-based company and why, the rationale for it.
A lot of times, you find entrepreneurs who have a real knack for how to deliver products, on new platforms, and the Sparrow guys certainly have figured out how to deliver Gmail in a very intuitive way. So that is a great acquisition, actually. And those small acquisitions, which are typical for us, like this is on the smaller side, but of the 130 acquisitions we've done, a lot of them have been on the smaller side, have huge impact in Google.
Others? Yeah.
Yeah.
So the question is, we're at the Innovation Summit, and the question for the panel, whoever wants to take it, is, you're all innovative people, so where would you invest? What types of companies are innovative in your view?
I guess that. But we have a lot of cross trends to take advantage of, mobile and social and cloud computing, and all of these things are happening at the same time, creating a lot of fantastic businesses. I think someone commented that this was one of the best set of companies in years. Like it was, kind of tough to make the decision of which should be kind of the always-on companies. Which isn't surprising to me, given the number of things that I see happening in our business and the number of opportunities that we have in front of us, and just again, the number of startups that are successful in buy. So my takeaway, I've been here, 10 years since 2002 in California, and I've never seen as robust a period for entrepreneurship.
I'm going to put in a pitch for financial technology companies. I think it's an area that's been relatively underinvested in for the past 10 years. I think things like the Jobs Act is a great opportunity for continued investment into innovative financial services.
Great. All right, one more, and then I don't want to get behind. Sure. The question is making a confidential filing under the Jobs Act and how that impacts the market? Oh, well, I think Jeff sort of answered that, but the rationale for making a private filing? Yeah, I think Jeff, you want to?
Well, I think the question is more around how it benefits a company. So I think, if you look at other companies that have gone on file and listed their financials out there publicly, it opens up to a lot of scrutiny and a lot of questioning around their business model, where maybe they prefer to do it on a confidential basis and go and just test the waters with investors privately before they open up to the public. And so I think that's the major benefit.
It provides flexibility, and essentially the company does not have to show sort of their playbook at the first time around to their competitors.
Great. Okay, well, I think we're going to get the hook. So thank you all. Thank you for the questions.
Great job. Okay, real excited to introduce our next speaker. It's amazing to think, and again, this is our 10th anniversary Innovation Summit. It's hard to believe I had no children with my second wife when I first had this, but I now have two, 8 and 6. And so other than that, what's interesting is how, in the old days you had to buy computers to set up your company and all that kind of stuff. And then along came Amazon, and a lot of you guys set up. In fact, let me ask you, how many of you out there that have a web service company are on Amazon, up on the Amazon cloud? Is anybody on the HP cloud? We got one. Okay, so we got a room full of prospects for you, Barry. So obviously a big part of what we do is we bring the best and the brightest from the big companies in front of the entrepreneurial community that we represent. Barry I met back in my Red Herring days in Atlanta when he was back there running a company just like many of, just like you. Now the Senior Vice President, General Manager, and every other title for the HP Cloud Initiative, which is probably their #1 initiative for the whole company. And he's here to share with you his thoughts on the shifts and what's driving the cloud phenomenon. And then we'll stay with us and join a great panel of entrepreneurs like we did with Sanjay Poonen earlier. So without further ado, it is indeed my pleasure to introduce Barry Singh.
Good afternoon. Thanks, Tony, for having us. HP's been involved with Always On for a bit. Knew Tony back in 1996. I think he was like 45 years old back then. We've been, I was involved in a company that was then called Mediametrics, now is Comscore. So thanks for having us. I'm going to spend a little bit of time, we're running a little tight on schedule, so I'm going to try to make this shorter and try to get us back and buy some time. But thank you. I will spend some time telling you a little bit about our perspective on cloud and how it frames some of the topics that you've covered here today. I think there was a pretty good conversation around mobile earlier on, and obviously social and big data and all of that stuff going. So I'm going to try to pull it together. This is not an advertisement for HP Cloud. It's really using it as a context to help explain how we're trying to think about what's next for HP and how it comes together. So I think this has been well documented. We're living it. This group here, the top 250 companies, congratulations to all of you, are living proof of the trend lines, so I don't need to get into it. I'm going to talk a little bit about how we see mobile and social and big data and the cloud coming together and what we think HP can help in that area. So beyond the obvious pieces, the Internet of Things, not just devices, but sensors collectively are driving a massive amount of information. And if you really peel into all of the things driving big data, one of the most astounding numbers, I look at this literally every day, and it's hard to realize the implications of this. Data is going at a level we've never seen, and there's only more coming. And so the way we've thought about data and how it plugs into cloud and mobile and the enterprise market for HP, which is really our sort of knitting in addition to the consumer space we've been involved with, it really revolves with how do you pull all this together. So one of the core theses here is actually the need for business analytics combined with developer platforms and IT operations platforms and business analyst platforms, tying that together at the point of building and producing things and analyzing information is a big part of what we're thinking through. And I highlight that just so because all of these trends and all of this sort of movement, whether it's information, whether it's governed, driven by the government, whether it's sort of the mobile experience, whether it's structured or unstructured, things are moving at a breakneck pace. And in order to keep up, you've really got to think about how these trends are going to affect companies. And the companies here are really driving amazing use cases for that. So what we've done is we've spent some time thinking about cloud over the last 2-3 years, and I'll talk a little bit about HP Cloud in a minute. But we really brought it all together around sort of 5 things, and I'm going to hopefully spend the rest of this time helping you think about whether we're on the right track or not. So the first is we look at sort of the whole mobile, big data, analytics space in a fairly reasonable way given our roots, which is core infrastructure. And I'll get to that. But how we've broken it down is we look at the device, smartphones, tablets, endpoints, HTML5, as the sort of endpoint to interact with all things in the cloud, right? So multiple devices for a single identity, single individual will have many, many devices to it. All of the information and all of the interactions, whether it's this, informed through the social media, social network experience of really the last 5 years, is really driving now the notion of bite-sized apps. We start using the phone and our various devices to get things done, right? So bite-sized applications and experiences, and the notion of the traditional system of record really becomes systems of experience. And so we use all of the devices here essentially to get things done. Yeah. So the cloud then becomes essentially the infrastructure or the back end for it. So whether you look at AWS, whether you look at HP Cloud, whether you look at the iCloud, ultimately the back-end infrastructure allows those services and those lightweight applications to essentially scale and hyperscale and be put together very quickly. The app economy is living proof of that. And then analytics to make sense of it all. So device on the front end, cloud on the back end, lightweight, socially oriented applications and interactions, analytics to make sense of all of that. If you take a smartphone, you look at the GPS, you look at the accelerometer, you look at the NFC, you look at whatever movement, there's a whole bunch of data subsystems being driven back and forth. And you need analytics to make sense of all of that in addition to the actual experiences. And then finally, the point I'll come back to in a little bit is the notion of the importance of the bring your own device phenomena and not just having it run loose in the enterprise or in our work environments, but actually tying it back to IT and security and compliance and governance and all those things that we need to be able to do. So that's how we've encapsulated. So when we thought about HP Cloud, we said, what is the way to deliver an experience? And by the way, I happen to think AWS has done a phenomenal job. They continue to innovate literally every day, every week. We're big fans, we're big partners. And so we've sort of really come at this from a way that says, how do you deliver for HP, which is a global company and understands a little bit about scale, how do you deliver a cloud experience that interacts with private clouds, on-premise clouds, and public cloud services with everything I just talked about in the last few minutes. So, with that, we've been in the cloud business for a few years, actually. We do scale well. Right? We understand what it means to drive supply chains, and if you're going to be in the quote-unquote cloud services business, you have to understand scale. We've actually driven a lot of the Web 2.0 hyperscale scale-out business. We, at a core level, ship server, storage, networking. We know how to do that quite well. We've actually stood up several, today 713 private cloud implementations. We stood up public cloud in less than a year. It's one of the larger scaling services we've got at the company right now. And we manage a whole bunch of virtual private clouds. But we've also had the experience from an infrastructure standpoint of delivering to the top websites. I think 8 out of the 9 most tracked, 8 out of the top 10, 4 out of the 5 largest search engines are essentially using our gear to build scale out. And we've delivered efficiencies better than the Open Compute project. We worked with Facebook on that and have delivered server efficiencies at that scale. And if you look at what we did in converged infrastructure, so this was a movement started about 3-4 years ago where HP essentially coined the categories of data center consolidation, server storage, networking, all in a single design plane coming together. The reason I point that out is we've innovated at different levels, whether it's at the chip semi-level all the way out to a box, the EcoPod that you're seeing over on the right-hand side. We've essentially been driving infrastructure, and we've taken essentially the same approach to say, let's go figure out how to do quote-unquote cloud the right way. Not just the Web 2.0 build-out, but really cloud services. What does that mean? And this is an example. EcoPod it's a 45-rack shipping container with about 35 petabytes capacity in it. It's literally an amazing piece of machinery, and it runs at a PUE. It runs more efficiently than Facebook's Open Compute project. And we'll be actually improving on that a little bit later. So my point for just doing that little sidetrack is we've actually been involved at an infrastructure level with the cloud environments for a while. We're now moving up the stack, and I want to share a few minutes with you on that. So I want to talk a little bit about hybrid delivery. People talk about hybrid cloud, and we don't use that term. We don't like the term hybrid clouds. Hybrid clouds are customers' environments, hybrid environments, right? Our job as an IT vendor is to actually deliver cloud solutions across hybrid environments. So on this diagram, what you're seeing is private cloud, managed cloud, and public cloud as environments on which you've got to be able to deliver a set of solutions, right? And so the distinction between a private and a managed cloud, for example, is a private cloud is literally, cloud in a box. We sell hardware, software integrated. IBM does it, Cisco does it, VMware does it, HP does it, Oracle does it. And there the model is you're buying infrastructure to stand up a cloud on-premise as an enterprise. You want to keep your data secure. The second model of managed cloud is essentially you're outsourcing and having your cloud run by someone else. So HP as a service provider, it's our CapEx. We'll run it as a data center on your behalf, and we'll manage workloads for you. And finally, the public cloud is literally you go out on the internet, swipe your card, and you can stand up instances and start using a whole bunch of services on there. So I distinguish that because our definition of hybrid delivery is how to deliver solutions across a private to public span, which gets into things, for example, like security and compliance, but down at the working level, you have to start dealing with, especially as an enterprise or a service provider, you have to deal with things like orchestration, not just of bare metal environments, but of VMs, managing VMs and application services on top of that. So there's a whole theme of orchestration and security and management across private to public that you have to really think through. And on the panel later today, we're going to have a great conversation with a few folks that are working on, very specific private points of view on private cloud versus public and so on. So I wanted to use that as a way to define it. And the way HP thinks about solutions is we have a fairly simple points of view. Sort of build your cloud environments, consume them out on the public environment, and manage and secure them. And then on the right-hand side, the point I want to just emphasize there is we're doing hybrid delivery across all levels of infrastructure. I talked about core infrastructure as well, but also applications as well as information and management. And our investments in companies like Vertica and Autonomy are really focused on that. So I just wanted to define what we call hybrid delivery and how we think about it in sort of a context. And what we've rolled out is the notion of converged cloud, which is essentially pulling this together on a single common architecture. And what we've done with that architecture is really focused on leveraging things like open source movements like OpenStack, as well as HP's proprietary technologies and on our own IP to really build a large scalable architecture for both private cloud and public cloud and everything quote unquote in between. So I won't get into various details. I just want to emphasize to you that at HP we're laying this out across the board. So what does that mean as it relates to things that might interest you? So my point about the design point of bring your own device and what that's happening is you got to tie the bring your own device phenomena back to the enterprise or back to your workplace, right? So private cloud and public cloud is all interesting, but essentially you've got to be able to take all of these innovative features and tie them in a secure way back to your enterprise. And that's a big part of sort of our design point as well. So let me switch gears and spend a minute in defining the HP public cloud or the HP cloud. You can go out to hpcloud.com and go give it a spin. We've been in public beta for about 74 days and just GA'd a set of services that I'll get to. So the HP Cloud design point is built around standing up infrastructure, which we work with OpenStack and have implemented our distribution of OpenStack. But it's not just about IaaS, compute, storage. It's actually building a complete stack of cloud services on top of it. And those four boxes in the middle, I want to spend a minute on that. So on top of infrastructure, we're actually building out platform services, for example, developer tools or PaaS environments, if you will, to actually do multiple language, multiple framework support. I'll show you a slide of some of the solutions we're offering in just a second. We're also doing core sort of cloud hosting, which is sort of the meat and potatoes of running a cloud. It's very simple for HP from a cloud standpoint, running as many workloads in a secure SLA-backed manner at as high utilization as possible is how we quote unquote make money at the core level. But what we want to do to that basic premise is actually bring developers and IT operations and service providers and ISVs and their developers and SMBs and their developers and startups and their developers to the cloud and allow them to build using the most modern tools for mobile and social and whatever other use cases in a secure SLA-backed quality of service experience. So in order to do that, you've got to offer platform services. So we've stood up things like database as a service, MySQL as a service. We're doing things with Vertica to offer analytics as a service at scale, as well as with partners. We've got a whole bunch of use cases, for example, around storage. I'll show you that in just a second. So we're building out the notion of giving developers and IT operations a set of tools to build and run workloads on, and tie them back to the private cloud investment that they've made. We've also built out a pretty rich partner ecosystem which reinforces the notion of the HP marketplace, which is essentially that think app store for the enterprise. We'll be talking more about that later in the year. And then finally, the final box here to your right is hybrid interoperability. And this is my point about orchestration, tying a public cloud environment back to the private cloud and being able to have seamless orchestration in a secure way is what we're working on. So I will point out, the notion that standing up a public cloud is really just standing up VMs, in our opinion, is very 2009. It's kind of, the telcos have sort of been there, done that. It's really now investing beyond core compute and storage and actually building a meaningful environment, run and innovate, quote unquote, a set of cloud services. So we're tying all this together, back to my point earlier, about how to bring in social, mobile, analytics, and all of those together. And our core focus really is for workloads. So whether you're a startup or an enterprise or a service provider, you have developers, you have builders and makers of things, you have IT ops folks at different ratios based on how much your workloads make you do work. And we want to essentially have an opportunity to essentially be able to lay out the roadmap for that. And I think that's where we are able to differentiate. The whole premise behind HP's cloud services was three things: deliver cool, innovative services, provide an enterprise-grade quality of service, SLA, secure, the HP global brand, and customer service. You go to our website and you pick up the phone, you're going to get an answer within 60 seconds. We have live chat enabled 24/7. Go give it a shot. Right? These are things that I think matter for the next generation of cloud services adoption. 2008, Tony talks about this all the time. Sequoia brought out the meme of rest in peace, good times, and a bunch of startups were instructed to go invest zero CapEx and go build out their applications on a whole bunch of cloud environments. I think in 2012 that's now turned because a lot of those startups have grown up and are saying, look, we need more flexibility, we need more tools, we need governance, but simply we need better SLAs, a more secure environment, and just good old-fashioned kind of global customer service. Right? So we think those are the kinds of things we've been spending our time working on. And so having said that, I will acknowledge HP didn't do itself any favors with our WebOS 2011 year. We're going to have our work cut out for us in terms of getting to developers, but I can tell you we've thought about it pretty well. We're focused on, publishing an entire set of HP public and private cloud APIs for the kind of work we're doing. We're big believers in the notion of being transparent. Your code and your API really speaks to sort of the work you're doing. And at the end of the day, for developers, time to code is the sort of magic here. So we're big, we are, and we support, by the way, the OpenStack API, we support the EC2 API. We will continue to invest in those capabilities. So we've really, I think, pulled together a view that says bindings, APIs, command line is something that, the future very much is calling for. And on that, we've attracted a set of partners. Some of them you should know. Some of them are part of the alumni here. And the current day's audience here. So we launched this in the last 6 months. We've had a tremendous response with a bunch of our partners. And the basic thesis for working with HP is we're not trying to be kingmakers of a particular language. We don't honestly care about Java or Ruby or PHP or Python or you pick it. We want to enable all of those. We want to give developers and IT ops choice. We're not going to build proprietary stuff. We're going to actually partner through our ecosystem. HP is one of those companies that historically has partnered really well. So this is a commitment to an ecosystem. Hopefully it appeals to the audience here, that we're very serious about building out a set of offerings. If you look at the use cases, whether it's storage, whether it's data services, whether it's the PaaS environment I talked about earlier on, or just basic, monitoring technologies, we are firm believers that your platform is only as good as your ecosystem. And we're absolutely committed. This is the first start. We did this in under 3 months, and the response has been fantastic. So we're making good progress, long way to go. Having said that, we've rolled out a set of services, pretty basic. We've been at it for just under a couple of months, 74 days to be exact. We launched public beta on May 10th, and we GA'd just earlier this week or last week our basic object store and our CDN services. And what we're going to do is keep adding a whole set of capabilities, including partnering with solutions here, to just keep adding the piece of it. So while people say, well, quote unquote, certain players are late to the market, I would actually contend the real market in terms of enterprise and service providers, which is really where all the workloads, the production level workloads are still sitting, as opposed to sort of early stage stuff out in different areas. I actually think the next 5 years, that's really where the action's going to be. That's how we sort of try to approach it. We talk about innovation. I'm going to close with sort of the HP's leverage in open source in general. OpenStack's been a big part of our investment for the public cloud environment. We've partnered with a bunch of other companies to drive it. We're a key member of that environment. And we've actually been, fairly significant members in a pretty short period of time. In less than 9 months, we've accomplished a great deal with the community. If you actually go out and look, we are currently the largest set of nodes operating a production-grade version of OpenStack. And we don't think about a distribution as we know distributions. I'll call it a curation of OpenStack. And through the Essex environment, we've done some pretty good work. Our next big milestone will be at the end of the year when Folsom gets released. We're doing some pretty meaningful work there as well. We're actively with the community. But it's more than just OpenStack. This is a list of all the open source projects currently involved in the HP Cloud Services and overall converged cloud strategy. We're actively working with all of these companies and the projects and the community behind them to actually drive a whole set of offerings at the infrastructure level, at the platform level, at the marketplace level, at the SaaS hosting level, and tying all of this back to, quote unquote, the enterprise and the on-premise environment. So we're pretty serious about it. You can look at sort of the set of things we've done. We're a big believer in leveraging things, for example, like Chef and Jenkins, in addition to the assets that HP already has, things like ops orchestration and some of the other previous companies we've sort of built out. So again, our goal is to offer choice. And the design point already has been, how do you enable this mobile, social, lightweight set of apps and interactions? You only do it through time to market and speed, and you have to leverage things like open source projects. So we've been pretty active there as well. In fact, watch for an OpenStack certified EcoPod coming soon. This is something we're very excited about, and I think it's a real showcase of not just core infrastructure, but again, the fact that we're building out a complete stack. So our goal on running the public cloud here, sorry I'm dipping back, is to actually run this on a set of data centers around the world with a very modular design point where you can literally deploy public cloud services as well as private cloud instantiations almost literally overnight. And I'll close with basically a pointer that says, again, it emphasizes the concept of the ecosystem, and it's really driven by this notion that the HP Cloud, the design point for it is to stay open and extensible through a set of technologies with our partners, with open source, and a growing ecosystem that kind of continues to reinforce it. So the converged cloud story and what we're trying to innovate is really a reflection of the kind of core principles for HP, which is offer our customers sort of consistency, right? A similar experience from a private to public cloud set of services, the notion of choice and being open. Hopefully you've seen some indicators on that commitment. We are absolutely committed to that. And then finally, the full breadth and depth of HP's IP around sort of confidence in terms of being able to secure your services and run them with confidence in an enterprise-grade SLA and a secure environment. So that's kind of what I wanted to share with you in the quick few minutes we had. I appreciate your time. If you got questions, we're around. Definitely give us a shout. Thank you.
Go anywhere. Don't go anywhere.
Oh, we're doing the panel right here. Okay.
Can I live in an eco-pod? That sounds so interesting. I'm telling you. It looks, yeah, I'm going to sit here. That's great. And we've got some other folks joining us. That thing is, that looks like a lot of power. What's the first application of that going to be?
So we're deploying it with service providers. We're actually deploying it with large banks that have big workloads that they want to secure. We're able to deploy it with a lot of traditional hosting players. What it gives you is sort of immediate scale.
Come on up, guys. Welcome. So we're transitioning immediately into our next panel here, which is the challenges and opportunities in today's cloud economy. And we have an extraordinary and diverse group. What do we have?
Short here.
We're short one?
Just stand up and share.
Eric, if you'd like to sit on my lap, you can.
I'll pass, thanks.
Okay. All right. Excellent. Well, good. So first we'll start off with introductions. I'm Kelly Porter, and I am an investment banker here in Silicon Valley at a firm called Woodside Capital Partners. I work with companies that are looking to get acquired and help them in the process of getting acquired. And so why don't we go down the line and we've heard from you. I think
You already know me.
you.
So pass it over to Mark.
Yeah.
Thank you. I'm Martin Mikos, CEO of Eucalyptus Systems, which is the world's most widely deployed private cloud software platform.
Cirrus Corporation, and we provide cloud solution for outsourced manufacturing companies.
I'm Eric Rosa, I'm CEO of Datalogix, and we focus on big data in the area of online.
Hi, my name is Andreas Baumhoff. I'm the CTO for ThreatMetrix. I provide online fraud prevention solutions.
So I just want to give a little full disclosure. As a venture capitalist before I became an investment banker, I invested in Cirrus. And of course, I'm currently an investment banker, and I really want to start by asking Viri the question that is on everyone's mind in the room, and that is, you guys have about, say, $250 million lying around that you could acquire Cirrus? Come on, it's a joke. It's all right. I'm kidding. So, the cloud economy means a changing world for IT departments and CIOs in particular, who are obviously key customers for all of you. And when you look across the broad swath of IT departments that you work with, what is generally going right? What generally needs to be improved in order to manage private, public, and managed cloud services in a more effective way? And why don't we start with you, Barry, because you seem to have the broadest, and Martin and Endo, I'd like to hear your perspective on them as well.
Actually, I blanked on when you were asking your question.
I get that, that's right. I have a share purchase agreement here, if they'd like.
I was going to suggest into it if you want to be priced that way. But anyway, ask your question again, please.
So what's going right when you think about CIOs, right? Particularly of large enterprises, but across all industries. What's going right? What's could be done better in order to roll out cloud services? You laid it out well, saying private, public, and managed across the industry.
Yeah, so real quick, I think there's two things happening. One is the CIO of most enterprises is approaching it in one of two ways, we think. One is through the virtualization trend. So most CIOs that have gone through the virtualization journey have built out 70–80% sort of virtualized. They arrive at a certain level of automation and quote-unquote control. What they're basically thinking is, hey, I've got this great way to now manage, and I understand my investment. And I want to keep my production environments and my sort of dev test environments, which also then can be backup environments. And I want to try to now essentially become a services broker by giving a lot of flexibility to how my infrastructure, my applications, and my information is essentially consumed. So one is through the virtualization track, and we think that's a bit self-limiting. The other is just actually adopting all our cloud services back to the bring your own device view, that sort of coming in to the workplace. And managing sort of cloud environments from virtualized environments is slightly different. We're dealing with availability zones and networks, flat networks or virtual networks. On the other side, you're really managing clusters of VMs. Right? So at a very sort of practical implementation level, CIOs, we think, are trying to reconcile that at a pretty basic level. They all get the cloud. Every CIO I've met in the last 5 years, their number 2, number 3 person, she tends to be sort of the modern progressive cloud person that we've arrived at almost entirely across the board. I think that movement's happening. Big data has driven that. But they're just essentially being inundated by, a set of trends that say, I better do something about quote-unquote cloud. And I think right now they're going through a way to try to understand what that means.
Martin, Eucalyptus is in a unique position that you're selling on-premise clouds. Can you talk about this as well from your perspective, because you're approaching it from a unique position?
Right. I think we see the same behavior on public cloud and on-premises cloud. There's a time delay of maybe 2 to 3 years, but other than that, it's similar behavior. And long term, we all know that cloud architectures will give higher utilization, which means better economy. We need to buy less hardware. But the immediate benefit that we see now is agility. So it means that those who are now deploying clouds, whether they go public cloud or on-premise, it's agility they need. They need to spin up machines quickly. They need to go to market quickly. Puma runs all their websites on Eucalyptus, and it's exactly because they're facing millions of consumers and they need to be very quick at responding to it. That's the driving force for them. The next one will then be manageability, because a cloud is essentially, it's easier to manage a cloud. Many of us grew up in data centers and server rooms where we had names for the servers. Completely impossible today. We have so many of them. So you need a cloud orchestration layer to manage it. That, we think, is the second benefit. And then the third benefit, as I said, will be the financial gain in the high utilization. And this goes back to your question about what we can do. We now need to serve those who need agility, who need elasticity, who are expanding, going to market, big data, mobile applications, social applications, and the rest will follow after that.
Yes, I'm Yes.
So, we provide software as a service for outsourced manufacturing. Sorry. So, in the usual, what Martin was talking about, the cost benefit of providing it on the cloud is something that our customers do see as a first benefit. But more than providing just the usual cloud architecture or the cloud benefit, our customers or the CIOs see this as, again, agility, getting this up and running really fast, because especially in the outsourced manufacturing, there's a lot of fragmented data that is all over the place, and they need to figure out what is happening, when, where, how, and provide that big data analytics and insight into that information. So our customers see that as a larger value than just the cloud compute power.
Great. So, thanks. Andreas, you are the CTO of ThreatMetrix, which is focused on security. You started a security company that was, and ran it, that was merged into ThreatMetrix. And one of the things that is a theme that keeps coming up over and over when we talk about the cloud is security, the concern about people who own valuable data having it out there. Can you talk about your perspective on that and how that impacts where we are in terms of the overall trajectory of cloud adoption?
Do we have half an hour to talk about this, or how long am I? I'm trying to keep it short. So obviously we deal in the security industry, and in the security industry we see two things happening actually. Security is very much defined in the old days by control. Whatever you can control, you know how to deal with it. With the cloud, we see that more and more actually the security problems are going to be moved into the cloud, and it's going to be fraud problems. So security and fraud is actually going to be merging together. And this is providing a lot of challenges for enterprises that actually deal with this type of data. We work with a lot of financial institutions where they have security teams and fraud investigation teams, and they don't even talk to each other. while we have this cloud-based system over there who actually could provide a platform for them to collaborate. So it's very much, driven by the adoption internally in terms of, where the data is actually kind of collected and data is actually kept. At the same time, it's very challenging for, more and more data is moving into the cloud. We've got to make sure that obviously data privacy and actually also integrity is provided. We've got to make sure that if I log in today into my internet banking account, that I really log into the internet banking account and I don't actually provide information to fraudsters who could use this to steal money from my bank account, to steal my credit card information. So we see obviously security is one of the biggest hurdles for cloud-based services being adopted in the more high-value transaction space like internet banking, or obviously even merchant space, but obviously kind of in a higher value transactions for merchants. So it's very, very much higher on the list.
And so Barry and Martin, when you guys are out in market and you're talking to accounts, the security question comes up. Do they kind of nod their heads and sort of, when you say, we've got that covered and here's how we have it covered, or are they going into depth? Is there doubt and questioning and so forth that's out there? But what's your sense of how big of an issue this is at this point? Either one.
So, yeah, I mean, the short answer is yes, we have it covered. HP's got a pretty decent security portfolio. And it's one thing about sort of offering on-premise to off-premise, orchestration, having a complete security angle to it, and then obviously running a secure cloud at global scale is a fairly important assumption as well. So we've actually been pretty heads down and kind of not only leveraging all of the assets that HP has as a global brand, but our software IP, which is one of the better software security portfolios in IT today. But we've also worked with a lot of partners, service providers globally, to really lock down data compliance, data governance, cross-border governance issues, and make sure we really, are thoughtful on how to go offer that. So we're trying to be as expansive in getting that. Security is a pretty important fundamental assumption for offering cloud services.
Can I quickly add to this?
Yeah, please do.
The funny thing for us is that even though we provide a security solution, we provide actually our solution as a software as a service out of the cloud. So we actually have to talk to those financial institutions and tell them, hey, please use our cloud-based services, and they come up with all these questions saying, yeah, well, kind of, is it secure? And we see certainly kind of the market opening up in areas where financial institutions, 2, 3, 4 years ago, it would have been impossible for them to entertain anything with a cloud-based service. And today it's possible, but obviously kind of if you can provide them a list of, I do this, these kind of things. It's still challenging, but it's obviously, getting better and better.
Yeah, on the enterprise side, we've seen a trend where, if you had asked about 12, 18 months ago, a lot of our customers, because we serve large customers, they wanted an on-prem cloud. And in the last 18 months, pretty much all customers have been off-premise on the public cloud. And that's not even even though we offer it, that's not really an option. We don't even discuss it. But they do spend a lot of time on security.
You want to add anything?
Well, the way we see it on the contextual level, security is a clearly identified challenge, but it's also one for which there are good solutions. So just like Barry said, we have the solutions. Our solution is as secure as your current system, if not even more secure, because we add layers of isolation. So from a purely engineering standpoint, it is not the most difficult challenge ahead of us, because there's so many solutions available today. So yes, we have to deal with it, but we do deal with it. There are many other cloud concepts that relate to distributed computing and orchestrating machines that are sort of for the geeks, for the programmers and for the designers, much bigger challenges than security. Because we have lots of good security companies today and solutions.
Yes, right. You're going to transition a little bit. Eric, let's talk about Datalogix. This is you have a company that is moving towards the cloud, right? And you started off with this, you started off 6 years ago with a company that was in the mail order business. You moved it online, you transitioned the business. Would you talk about this a little bit and just tell us, this is a little bit different than what we've been talking about here, the but talk about what you've built, 200 people in the company, 400 customers. Just give us a little bit of a primer on where you've been and where you're going.
Yeah, so our focus as a company is kind of merging the worlds of offline data. And specifically, we take very large offline CRM databases, which essentially contain all the intelligence of what most of us buy every day. So about 90% of consumer purchasing happens offline. And then we marry that into the online ecosystem. And I think a bunch of the key challenges around that are very different kind of privacy environments and frameworks, very different approaches in terms of real-time decisioning versus batch decisioning, and then also in terms of how data is managed and stored. And so, you know, Kelly, as you're saying, we're very much in the transitional phase of moving into the cloud. And one of the things I mentioned to Kelly is when we think about making these transitions, we think about the organic pieces and then what can we learn and how do we infuse that DNA into our company. We've done that successfully in the past, moving from offline to online, and now moving from kind of the data center world to the cloud world. There are kind of a couple approaches that we're taking, but one is that we're actually acquiring a business right now that it's an amazing thing. I think it's an encapsulation of what the cloud offers. Is what I consider a big data company, and it's been essentially built on a shoestring, i.e. with a couple $1 million, and they're having a very nice exit in their sale to us. And whereas they probably would have $3 or $4 million of capital already, if this were 10 years ago, they have, you know, probably $10,000 or $15,000 of capital. They got 8 laptops, and everything. You know, every month they got their Amazon credit card getting tapped for $8,000 or $10,000, and they built a system now that is supporting a lot of the biggest retailers in the country with a really impressive suite of services. And so for us, we look at this as we can kind of build. It's easier for us to build new services around them and kind of subsume more and more of what we do in the traditional data center world than it is for us to fully migrate and cut off all the legacy connections that we have with thousands of different companies daily. So I think that's one, maybe we're a kind of a case study on how a company that actually does big data for a living has to think about these things. The other thing that we do is we're launching in the UK currently. As we launch into new markets, we know very well that we're going to do everything outside the US cloud-based. So when you can get this greenfield started, it's a much easier challenge to surmount.
Great. Hey, Andrew, what impact has the emergence of cloud computing had on enterprise line of business applications from Cirrus's perspective?
So on 2 levels. One is the usual deployment efficiency, that is away from the traditional enterprise license model to providing on a cloud and software as a service is, pretty much that is given. Where we see the application is we have to go beyond today. The value is not just in deployment cost reduction, that's one aspect. The second is because we are in a space of outsourced manufacturing, and data accuracy is very, very important for our customers. So the representation of the supply chain has to be very accurate about where is what and when did it happen and what do they need to do. So those exceptions is the representation has to be very accurate. So that means we need to actually, we go get the information which is fragmented in many level of granularity and roll up and roll down and do some reconciliation to make sure that that accuracy is important. So that means it's compute power. So we provide that on the cloud on one level. The second is, the cloud is now given the ability to really provide best practices and benchmarking that is not possible and is not possible on the enterprise level. So now we are able to give them the benchmarking across their network, within their network, and also across the network, because in outsourced manufacturing, there's a one-to-many relationship that is what manufacturer is using for many other customers. So actually, the manufacturing they're for their own competitor, so they need to benchmark as to how they're doing compared to everybody else. So those possibilities arise from the cloud computing for enterprise.
Good. We're going to turn a little bit here and talk about 2 companies that are not on the panel, and hopefully we'll get a good answer out of this. So Oracle and SAP, 2 very large enterprise companies who have been transitioning over the last few years towards the cloud, particularly through their acquisition activity. SAP acquiring SuccessFactors for a huge amount of money and a high multiple, like 11x multiple of revenue. Oracle acquiring Taleo also for a nice premium, and there have been others. Anybody want to comment on, and I may cold call you, anyone want to comment on how they have they've done this and where they're going as companies, what your thoughts are on a large enterprise moving to the cloud? And I especially want to ask you, Gary, because you guys have, you're kind of growing your own. You've done some acquisitions, but you've grown your own. You want to offer any perspective on this?
I can't comment on either.
Okay, fair enough. Sorry, no problem. You're
So, it's a big validation, right?
You got to hold up the microphone.
Okay, can you hear me now?
Yeah, like a rap star.
It's a big validation. If we heard Oracle talk about a few years ago, I think it was 3 years ago, cloud was not something they were promoting. And today they're buying up cloud. So it's a big validation that this is a way that we're moving towards. And I think that's what I read from it.
Martin, do you have any perspective on this?
Well, everybody cites this statement by Larry Ellison, and I'm saying, we're in Silicon Valley. When Larry Ellison poo-poos something, when he said that cloud is vapor, when he poo-poos something, it's a public admission that he is late. That's what it meant back then. And they've been executing and building, and I think they will build and come out with cloud services. They operate, of course, both on the infrastructure side and the application side, whereas SAP operates on the application side mostly, so the SaaS side. But they will, I think, both will already have and will continue to invest huge amounts of money. They will bring their solutions to a SaaS world. They will mobile enable them. And there will be companies who will never see any other cloud than what those vendors are providing to them.
Yeah, there's lots of momentum there, that's for sure, that they can bring to bear. So there are a lot of venture investors and entrepreneurs in the audience today. If you were starting a company or funding an area of the cloud economy today, what might it be? We'll open it up.
So, I see cloud, and my partly right to the last question, is kind of like a business enabling technology. It's kind of obviously doing certain things that you could theoretically do in a different way, in a much more smarter way. But at the end of the day, it matters kind of, what your product that you're building is really about, kind of, the customer, kind of, the functionality, kind of, what business processes you optimize. So this is kind of, at the core. The cloud can obviously enable you to do this much, much quicker. Obviously, if you're using any kind of cloud-based services, I can build something much, much faster than I used to 10 years ago. And I can make sure I can scale from, 10 users to 10 million users in a much, much, nicer way. But at the end of the day, at the core of whatever I'm doing needs to be the product, needs to be a feature, needs to be something that's relevant to someone, because only then someone is willing to pay for this. Not because I'm providing a cloud-based. That's my perspective.
Anybody else? Yeah?
I think the whole industry is being rewritten now, like you showed in your slide. With client server, then you have the internet which disrupted the client, and now we have cloud disrupting the server, and everything is being rewritten. We have new storage, new networking, new compute solutions, and that's just the infrastructure. Then you go higher up, and you have big data, you have NoSQL, you have the mobile applications. There's just endless opportunities. And maybe, as you said, the big thing is that we are collecting data much, much more than ever before. So the collective intelligence we have from getting things we knew before, but we didn't have them in one place, and now we have them in one place. My imagination is not enough to figure out the business models, but I can just see that it will be a huge business opportunity going forward. Enormous.
I think I'm intrigued by 3 areas, and one of them is, if you look at Kickstarter and the notion of how it's sort of really catalyzing sort of citizen funding, you look at microfinance, and you apply that to emerging developing countries, with the advent of mobile, I think those types of models are going to explode in some of the more maturing BRIC countries and or emerging countries, so I think that's going to be a very interesting area. I think the other area, the space we're actually in, I think we're still at the very early innings of really the ultimate quote-unquote cloud computing infrastructure. So whether it's OpenStack or CloudStack or Eucalyptus or AWS Zen or VMware or an HP curation of OpenStack or whatever, I think we're still very early in what's ultimately going to be quote-unquote that server and that compute binding and that orchestration model that Martin referred to. So it's a very core, perhaps boring piece, but I still think we're very, very early in where that market's going to go. So I look at that just because I certainly have an agenda there. We do. I think that's a very interesting area. And then the third thing would be this whole mobile, social, big data piece where the mobile and the application, notion of line of business apps meet. I think business processes, the way we do business and work today are being completely rewritten. I'm not talking about apps on our phones. I'm talking about really hardcore distributed workflows with checks and balances. I think all of that's going to get essentially redone. Not just Workday, as an example, it's going to get simplified and made real time, not just chatter on CRM. There's a whole next generation of much deeper quote-unquote applications. I think there's some amazing vertical solutionings that will come out. So I suspect there'll be some pioneering efforts there as well.
Thank you. Anything else? Great. Cloud produces tons of data. Eric, you work in big data, and you're doing something really interesting in that we talked about commerce and how 90% of it is done offline. Can you talk about specifically what your company does and how you're using data to benefit your clients?
Yeah, sure. Yeah, so specifically what we're doing is we're aggregating data from about 1,500 different sources, about half of the top 20 retailers in the U.S. among them, a bunch of the biggest credit card companies, and then mirroring that I'd say we kind of play the role of, I don't know if you guys are familiar with this term, but trusted third parties. So we're essentially an abstraction layer between the digital media ecosystem, which tends to live in real time, and increasingly I'd say in the cloud, and many of these kind of more traditional CRM databases, which I'd say are still very much nascent in their virtualization. So this gets a lot into what Thierry was saying around workflow. What's interesting is we're a company that's from 20,000 feet, and everything's highly automated, but in practice every day, there are hundreds, if not thousands, of FTP transactions and secure files of 50 million records moving back and forth between us and one of the biggest retailers in the U.S. and one of the biggest portals in the U.S. and so on. So it strikes me that where this all ties into your last question, Kelly, is I think the helping companies transition who live in this legacy world, it's easy to take a purist, I think, role when you're up here on a panel, but in reality, there are just so many business practices that need to get re-architected to make this all work. And even for a relatively small company like mine.
Great. I have one more question. So if you look at 5 years, what is your company, I'm not going to ask the election question, but unless you want to answer. So if you look at 5 years, what does your company look like? What does cloud computing look like? Let's start at the end.
I think with the cloud economy, kind of what we've been talking about, I think this is a road that, we are really in early stages. I think over the next 5 years, we are still making a lot of inroads. We are not, 30% there yet, we're not 50% there. I think we are very much in the beginning. I think for us, specifically at ThreatMetrix, I think the security and any kind of issues relating to security and privacy are always kind of big stumbling blocks for cloud economy to take off. I think so. I really think the next couple of years should be very good for our business altogether. Making sure working with the various enterprises to ensure a safe cloud experience. That's kind of what you want to call it. So I think the next year should be very challenging, but also very interesting. But as I said, we are still in the very early stages of cloud experience. So hopefully we continue our growth. We're growing very rapidly right at the moment, and I expect that we grow for the big part of the next couple of years quite rapidly as well.
Great, Eric?
I think this is fairly uncontroversial. I think the next 5 years we'll continue to see an exponential growth in the production of data, the analysis of data, the use of data, and I think our job, and probably those of others up here, in different ways, is to take the friction out of that process. So I think that's the theme for the next 5 years.
I second that. I see also in the enterprise space ability for companies to do small footprint before, today there is a notion of it's always a big footprint or none. So this gives the ability for companies to start small and take advantage of the whole big analytics and insight.
Great. All right.
So in the space of on-premise IaaS clouds, somebody needs to be the innovator, and we intend to be the company. And we have a dream that we could be the first tech company with a complicated, difficult to spell 4-syllable name to go public.
Complicated 4-syllable name, that's very good. You started it.
No, I didn't start it. Because when I joined, I told them, I said, guys, at some point we must change this name because I can't spell it. And I've fallen in love with it. Yes, and it means elastic utility computing architecture, linking your programs to useful systems.
I was just going to say that.
I thought so.
It was going to be my first guess. That was good. Gary?
I think in cloud computing, a couple observations. I think on the public cloud, I think 5 years from now you'll start seeing the emerging view that there'll probably be only a handful of large global scale clouds worldwide. You'll see a lot of work being done, and Martin's companies and others are pioneering this, on the interoperability of APIs and orchestration and security amongst the clouds, but also on-premise environments where you can now essentially move workloads, move information, move transactions, in somewhat of a secure way. I'm not talking, you'll start seeing the early innings of that. So I think cloud infrastructure that way is only going to get a lot more significant. I think we're completely underestimating here, even though we say 50x, we're completely underestimating the size of machine-to-machine data interactions and what that impact's going to have thanks to mobile. I think we're completely off the charts on the impact mobile is going to have, in the workplace and how it's going to radically just transform what the nature of work means going forward. So I think it's a very exciting time. A lot of hard work to be done, but it's actually, these things come around every 40 years, and we're all sitting here trying to figure it out. And the last point I would say is, I'm very sure that on Always On 250 there'll be some compelling breakouts, including a very nice to spell company, I'm sure.
Do you have any specific thoughts on the mobile piece about, what that open horizon looks like?
Look, just in terms of the number of devices per identity, per sort of online, what the device itself, what it's packing in its capabilities, the underlying substructures, GPS, accelerometer, credit card, geolocation, APIs, all that stuff just opens up an amazing, I think, set of possibilities. You take that and you go abroad, where in developing countries, all of that's being leapfrogged. It's all over the wire. There won't be a machine-to-machine internet. It'll be in the ether for most of the future economies, 50 years from now. And in the BRIC countries, it's already there. It's sort of video on it. So you can't even begin to sort of fathom that. I think we're totally underestimating the implications and the opportunity there.
And let me ask you one other question. That is, given these opportunities that you've laid out and others, do you think that large enterprises have either an advantage or a disadvantage as they go forward to capitalize on the opportunity that is there? Who owns the future?
I think Martin said it best. We're in an industry right now that is completely being reinvented and disrupted. And so every large company, every large enterprise, quote-unquote, or service provider is in the throes of figuring out the implications of that, at an infrastructure level, at an application level, at an information level. And they're trying to basically understand this movement. And it's upon us. It's not like you got to wait for adoption. The notion of production workloads, You know, we're seeing amazing use cases that are just dying to kind of burst out into, you know, public cloud, ready to use environments. There's a certain secure set of apps that will never move. There's certain government sort of compliance that will never move. But this whole, you know, view that enterprises are quote unquote slow to adapt, we're certainly not seeing it. I mean, from our, we deal with a lot of infrastructure and our sweet spot in the enterprise. We cannot fill that sort of, you know, demand curve fast enough. So I think enterprises and sort of most knowledge workers are moving pretty quickly. We're kind of living it day to day, so it's only naturally expected at work.
Great. On that note, thank you very much. If you could thank our panelists.
All right. So down to the final part of our show for today, before we have our cocktail reception, and thank you, Barry and company, is now to the AO250 portion of our program. We are very blessed in that we work with a very distinguished group called the 451 Group, who are experts in analyzing analytic data surrounding M&A transactions in our marketplace, and we humbly invite them back every year to tell you where the companies that we've picked in the last 9 years are today statistically, and ultimately shines a big light on how we are doing as company pickers. And so we are always thrilled with their results because we look good. So not to let the cat out of the bag, let me introduce their top dog, Tim Miller, who's going to give you a nice overview of where the old picks are today, right,
Awesome.
Tim?
Thanks, Tony. Ready to talk some more liquidity? I had a shill out there and we're supposed to be going, yeah! Okay, great. Well, that is what we're going to talk about today. And as some of you probably know, the 451 Research is a unit of the 451 Group, and it's an IT analyst firm that digs deep into enterprise IT with a very deep dive into mergers and acquisitions. So those two fit very closely together. And so what we're going to talk today is about the AO alumni and where they are now in the marketplace. So just very briefly, what we're going to talk about IPOs and M&A. And for the first time this year, we're going to go out on a limb and pick the M&A deal of the year in the past 12 months from among the AO candidates. One of the things that kind of impressed us the most this year about the crop of always-on alumni was the amount of IPO activity. Last year we were kind of rhapsodizing about the fact that there were 10 IPOs in the past, same trailing 11, 12 months that we were tracking. This year the picture is a little bit different. You'll see that overall about 30% of the companies have had some sort of liquidity event, whether it's an M&A transaction or an IPO. That leaves another 736 or so that are still out there independent, and those are the kinds of companies that make our lives pretty interesting because we get to follow them and follow their exits and their liquidity events. But the IPO picture was pretty interesting. So last year we were talking about the 10. Here you'll see on this list 18 companies that from the AO list that have gone public over the past. Now that was current as of last Friday. As of last Friday, that changed just a slight bit, and 2 more got added into the mix. Actually, very successful IPOs. Thank you, Paul Kwan, where you are, for helping out on that. So this combined crop of IPO candidates represents about cool even $90 billion in market cap, which is about 3 times the amount of the total M&A activity that's taken place since the beginning of Always On Time. Of course, some of that market cap, or a good percentage of it, let's say 2/3, is represented by Facebook, which you see here on the list, even though it's down 25% from where it debuted. So that's just a very quick wrap-up of the IPO crop, which was very healthy this year. Now let's take a look at the M&A activity. As Tony pointed out earlier, after the recession, there has been somewhat of a surge in M&A activity. Last year, about $4.5 billion spent on about 47 transactions. So since the recession, about $13 billion and change spent on acquiring AO companies. Let's take a look at some of the sectors, and we're trying to move pretty quickly through this today, that were represented in history. in the past year, that is. We tracked at 451 Group 600, yes, 600 industry segments and subsegments. These are obviously the top line categories. And as you can see, the always-on exits or liquidity events were pretty much spread broadly most of these, but we did see a couple increases this year that were interesting. Certainly in the mobility area, which should probably come as no surprise to any of you if you've been listening to the program today. There was a definite increase. Another one that was a little bit more surprising was in application software area. We were a little bit taken aback by that since, ERP and so on are not very active right now. We looked a little deeper and it was things like web analytics and advertising enablement platforms, and that made a little bit more sense to us. There were some declines in the internet category that we track, and as well as the infrastructure management category, which is the cloud enabling technology world, which is a little bit surprising. We believe there's a lot of juice left in that marketplace, and VMware's 1.3 billion acquisition today of a just out of stealth company probably validates the fact that there is a lot more life left in that marketplace of cloud enabling technology. Let's move on a little bit now to look at who are some of the acquirers. Most of the acquirers, of course, are strategic buyers. About 30% of them are Fortune 500 companies, and a lot of them, about 30 of them, have acquired more than one always-on company in their history. The big 8, people like Google, Cisco, Citrix, Dell, etc., acquired 40 between them, spending about $10 billion in total for companies. Move on a little bit now and look at some of the companies that were acquired, just a few of the logos, and a list of some of the meaningful companies, a selected list of some of the larger acquisitions that took place over the past year. You'll notice the little, is it green or red? I'm colorblind, but whatever, little highlights that highlight estimated deal values. To the comment that Hale Boggs made a little bit earlier, so many transactions nowadays, and in fact, an increasing percentage of transactions do not have announced deal values or let alone trailing revenue numbers, creating a sort of a black hole when you're looking for valuations and comps.